letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyper speeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyper speeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyper speeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyper speeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyper speeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS.
Good morning and welcome to Fintech Week London. A new team and a new concept bringing you a week full of exciting content and networking opportunities, both on-site and online. We're almost ready. Are you? If you're joining us online or on-site, please make sure to use Brella to the fullest for the networking. Networking can be done via the matchmaking that is based on your profile and your interests on Brella. If you're on Brella, make sure to take a look at the event info. There you'll find the show guide and all other information that you need. If you have any further questions, most of our team will be available to you via the Brella chat or via hello@fintechweek.london. If you're joining us tomorrow, online or on-site, you can use Brella, but also if you're on-site, make sure to look at our social distancing guidelines on the frequently asked questions on the website. Speaking about on-site encounters, tomorrow night we'll have our industry networking event at the Q in Shoreditch. To announce the giving me a cue mark. I want to thank the amazing team behind Fintech Week London for helping us out and making sure all of you can join and look at the amazing content that we have for you. And without any further ado, I would like to give the floor to Rajesh Agrawal, Deputy Mayor of London for Business. Rajesh, the floor is yours.
Good morning everyone and welcome to Fintech Week London. I speak to you this morning not only with my Deputy Mayor hat on but also as a fintech entrepreneur. I was born and grew up in India. In 2001, I arrived in London as a young man with little more than ambition. And my ambitions were firmly directed at business, an area where I felt that given a chance, I could succeed. Fortunately for me, London gave me that chance as it has for many others, and I was able to create 2 successful fintech businesses. But London just didn't stop there. I ended up becoming the deputy mayor of the greatest city in the world, not once but twice. The opportunity that London offers across the whole fintech sector continues to this day. Over the last 10 years, our tech ecosystem has grown rapidly, from Shoreditch's Silicon Roundabout to tech clusters all over London, from here east and the King's Cross Knowledge Quarter to White City and the project in Nine Elms. London and the UK tech companies continue to attract investment despite the coronavirus pandemic. So far this year, London's fintech companies have already benefited from $5.3 billion in VC investment, Europe's largest by far. From 2015 to 2021, the number of fintech startup and scale-up companies headquartered in London has increased by 64%. There are now 3,018 fintech headquarters in London, which I am proud to say is the highest amount globally. We are also the second biggest hub for fintech unicorns. We are the home to Wise, Starling Bank, Onfido, Monzo, Checkout.com and Revolut. The UK represents more than 10% of the global market share in fintech. So what makes London so great? London's unique global status as a capital of finance, business, government and technology is our standout asset. Everything entrepreneurs need is in one place here in London. Businesses choose to locate in London because of many inherent and long-standing benefits the city offers: global connections, access to diverse world-class talent, an incredible cultural offering, and a dynamic innovation ecosystem. This is the city where finance meets tech and the academic research finds a business community that is hungry to take radical ideas to market. As a tech ecosystem, there is nowhere to match it for variety or depth, which is why entrepreneurs from across the globe continue to make it their home. Whilst Brexit has created some uncertainty and the pandemic has considerably affected the way we do business, high quality talent is still choosing London. However, this does not mean there is no work to do, which is why I, along with the Mayor, will continue to bang the drum for London on the world stage, make the case for investment in our city and support businesses following the pandemic. We have set out a clear roadmap to recovery and launched a new business hub for struggling small businesses, helping them to survive the dual impact of COVID-19 and Brexit. Over 2,000 businesses have already been supported on a one-to-one basis by our Business Hub advisors. And the Mayor's Pay It Forward London crowdfunding scheme has helped over 600 businesses raise over £2.5 million from thousands of Londoners. And we have created a £1 million back to business fund, helping over 200 businesses to expand their operation online, invest in their future and adapt to safe, socially distant trading. We have launched the London Resilience Fund that brings together innovators, small businesses and civic society organizations to deliver projects that will create the tools to help London's economy emerge from the current crisis. Look, we cannot predict what the new business world will look like as we move through recovery. But what we know is that London has always showed remarkable resilience in the face of external challenges. Technology has played a key part in helping us through this pandemic and towards recovery. And the fintech sector will continue to play a key role in driving the recovery forward. For example, more than 6 million UK adults downloaded a banking app for the first time in March 2020, with nearly half of Londoners using digital-only banking services in 2021. I would like to end by saying that London is a fantastic city to live, work and play. And now that we are reopening the economy in full, its cultural vibrancy can be felt in every aspect of London life, in food, fashion, art, shopping and nightlife, as well as in science and business. With over 230 different languages spoken, London's diversity is one of its greatest strengths, and the city is home to millions of international workers and thousands of international students who have come here and now call London their home. I hope today and this week inspire you to grow your business in London, fills you with confidence that the support is here for the sector, and gives you a sense of pride knowing that you are contributing to what makes this city so great. Thank you for listening today, and as always, London is open for business. I'm delighted to now pass to Chris Skinner, Chairperson of Fintech Week London. Over to you, Chris.
It's my pleasure to announce
London, which has been planned for quite some time, a fantastic group of advisors and a whole range of themes that we will explore for the whole week. I thought I'd just begin by explaining some of those themes because you may wonder why we picked them, or equally you may already be very familiar with the things we're going to discuss. Since March 2020, digital transformation has become the critical factor for every business to enable people to work from home and for customers to be served at home. And I talk a lot about a K-curved economy, where the downside of the K is if you are reliant on physical engagement. The upside is if you are in digital engagement. The downside, hospitality, airlines, events like this. Anything that requires face-to-face physical attendance has really hit a downside. It will come back, as I think we've seen during the Euros. But the digital side has really rocketed in the last year. And some companies were ready for it, and some were not. And equally, some have dealt with it, and some have not. By way of example, I deal with a couple of banks that I haven't been able to talk to for a year because their contact centers were offshore. But equally, I've dealt with some banks and fintech companies where I've had fantastic service because their app has worked non-stop brilliantly well. And for me, the difference in digital transformation is between those who are digital natives versus those who are digital immigrants. And I know we talk about this a lot, but if you look at, for example, in the last year, so many big old banks have signed cloud computing contracts. But they've become cloud-based, but they're not cloud native. They haven't actually changed anything in their business model or structure. They've just actually signed a contract to use cloud with a cloud provider. And for me, that is the fundamental difference between the digital organizations on the upside of the K and the physical organizations on the downside of the K. The physical organizations still rely on an old, broken business model of banking that believes you distribute everything through branches with humans, and now they've automated it using cloud and digital technology services. They haven't changed the model of the business at all. And this is a fundamental reason why we're going to see change. We're not going to see banks being disrupted or destroyed or disintermediated. We're just going to see banks being bought. The banks that were broken will be bought by the banks that are not. I talk a lot about banks that are smart with data. To be smart with data, you have to have rationalized, consolidated, and organized your data to leverage it through artificial intelligence. You can't be artificially intelligent if you're done with data. And there's so many banks that are done with data because it's fragmented, silo-based, product-focused, and not customer organized. So lots of themes in there that we will talk about this week. And in particular, I think, what organizations are digital natives, cloud natives? What organizations are really using and leveraging the network today that's available to them today? And many of those are the fintech firms. The fintech firms that, we could talk about all of them, but it's too much time. I mean, 12,000, 14,000 companies now launched. Last year, $5.2 billion invested in fintech is a figure I heard this morning. I don't know if that's the right figure. Whatever the figure is, gazillions of dollars are going into fintech startups because they are digital natives, cloud native companies. My favorite example, because they're one of the biggest, is Stripe. But the reason why they're my favorite example is not because they're the biggest and highest valued, but because of what the Collinson brothers created, which is a company that's a digital cloud native company using open finance through APIs. And when you look at Stripe, why are they so highly valued? Because what they created is beautiful. 7 lines of code when they launched. And the code is art. And this is the nature and the heart of fintech. Code is art. This is what a lot of banks don't get. Code is art. And what I mean by that is that if you design brilliant code as an API or an app or through analytics, then other engineers, other developers, other organizations look at that and go, that is just amazing. That's beautiful. I'll take that. Code is art. And that's what a lot of big banks don't get. They think that their developers and designers and their engineers are just cogs in the machine, not artists. Code is art. So when I look at open banking, I kind of think you need to understand that open banking is all about code is art for digital native organizations that understand the network. And how do you build that code is art network? And it isn't easy, particularly if you're an immigrant, because you don't understand it. But we're getting there. And open banking is gradually changing a lot of the way in which we work. But let's not talk about open banking, because why are we talking about open banking? We should be talking about open commerce, open worlds, open networks, open systems, open everything. If code is art, we shouldn't be talking about open banking because it limits our thinking to banking. And banking is not really what it's all about. When I wake up in the morning, I don't think I want to do banking. I think I want to do business. So open commerce is what we need to focus upon. Linking organizations that are selling and buying goods across the world to the people they're buying and selling from and to. Open commerce is where it's really at. In fact, what I find very interesting around the whole nature of open banking is how little we talk about what about the links to the other people, the whole value chain, the supply chain, the companies that we're trying to sell and buy from and to, and the people they're selling and buying from and to. Why don't we think about the whole ecosystem? Let me talk about ecosystems and platforms and networks, and they're blasé terms. But the end of day is that any institution, whether it's a traditional bank or a fintech, is just part of a system that's linking open commerce through the platform between those who are buying and selling. Plain simple. Plain and simple. It's actually not that plain and simple because there's a couple of other factors coming into play which change the game. And in particular, the network is transparent. We have a digital network that is completely transparent. And we may not believe that it's completely transparent, but if you try and do bad stuff, you will get caught by the network. I've seen so many companies that have had bad network coverage. And it doesn't mean that people leave the company and close their accounts or shut down the app, but it does leave a smudge or a black mark. And that's going to be the big theme for the next decade. So when I look to the future, where we're going next is a network that will reveal everything about those who are good and bad players. A completely transparent network that's democratized, distributed, decentralized, networked. And that's going to be one of the biggest influences of how business behaves and people behave in the next decade in this open commerce world. So I'm working right now on a new theme for another book, surprise, surprise, about how can we use digital for good. And I was inspired, surprisingly some may say, by a poster that I saw on the wall of Alibaba in Hangzhou, China, that said, what can we do to be good for society and good for the planet? And that's a big driver. How can we use digital for good for society and good for the planet? How can we use digital for good? And there's many, many ways that you can see that clearly. I mean, when you look at, for example, financial inclusion, we can now use digital for good, including everybody in the network, including the 2 billion people who were not served by the financial system before. They can now be served by the financial system because it's digital. And the reason for that is that if you use digital services, it costs nothing to do a 1 cent transaction or a $1 million transaction. So you can include everyone in the network. But it's more than this. It's using digital for good for the climate. And we all know Greta Thunberg, David Attenborough, the climate emergency. Oh. It's not a yawn. It's actually, obviously, one of the most important things for our kids and our grandchildren in the next century. How can we use digital for good for the planet? And I've got lots of examples around this. Arlandsbanken from the Nordic region has a climate index around how every time you buy or sell something, it impacts the planet. Ant Forest with Alipay and Alibaba works out the impact of every time you pay or buy something on the planet. How green is your life? Can be tracked and traced through the financial system. These are things that I guess culminate for me in what ends up being the most important message, which is companies need to have a purpose. If you don't stand for something, you fall down. What's the purpose of your company? What's the purpose of your life? What's the purpose? And this is really important because it actually will dictate how we behave over the next century, which is to stand for something. And it's not just having cultures and values and marketing. It's actually internalizing it to every member of the organization to understand the impact that you have and how it relates to the purpose of your organization, which is doing good for society and good for the planet, I hope. And purpose-driven banking, purpose-driven structures is going to be one of the big backdrops over this week, along with open banking, open commerce, digital transformation, and digital transparency. And I guess my conclusion is I've grown up in a period that was, I guess, motivated mainly by Milton Friedman's economic model of do whatever you have to do within the law to make a profit. Yeah, I'm summarizing that shortly. Yeah, but it is do whatever you have to do within the law to make a profit. Shareholder capitalism. I think shareholder capitalism in the Milton Friedman model is now dead. The next century, and it's starting right now, is stakeholder capitalism. Do whatever you have to do to make a profit whilst doing good for society and good for the planet. That is the fundamental difference. Purpose-driven businesses focused upon stakeholders, not shareholders. So I could talk a lot more, as most people know, but I'll summarize that this is going to be an amazing week. We're going to talk so much about so many different things, from blockchain to quantum computing to open banking, open commerce, through APIs, analytics, and apps. But the backdrop for me is do good for society and good for the planet. I hope you enjoy the week. Welcome to Fintech Week London. Got there.
It's my pleasure to announce to you Charlotte Kennegas-Abapathy from Barclays and Adam Jackson from Innovate Finance in a fireside chat on London emerging fintech trends.
Good morning, everyone. I'm Charlotte Kennegas-Abapathy, the Global FinTech Platform Director at Barclays, and I'm delighted to have Adam Jackson, Director of Policy at Innovate Finance, here with me for a fireside chat to talk climate FinTech policy and key enablers to get to net zero. So as a brief introduction to Adam, with 30 years experience in government finance sustainability, Adam leads Innovate Finance's policy and regulatory engagement, representing the fintech sector in the UK. From 2008 to 2013, he was in charge of the UK government policy and programmes for startups, scale-ups and SME finance. And he has also led Grant Thornton's strategy on profits with purpose, Tesco's climate change programme. He was a member of the UK National Advisory Board on impact investing, and has also recently worked with London insurance brokers on net zero. So Adam, thank you so much for joining us this morning.
Not at all. It's great to see you. I'm impressed we both managed to have real fireplaces for our fireplace chat.
Yeah, we didn't plan that at all, did we, Adam?
I'm slightly embarrassed on a talk about net zero and climate change that you can just about see a wood-burning stove in my fireplace, which possibly, well, it certainly isn't net zero.
Well, we'll look over that, because I can see that you have contributed a huge amount to this sector anyway. So I guess to kick us off, climate fintech is financial technology that catalyzes decarbonisation. And I guess to set the scene, I thought it would be good to share a few quick data points about climate fintech with our audience that folks might not already know. So there was a great report by New Energy Nexus in 2020 that sort of talks about how 75% of climate fintech companies are actually still early stage, so have raised up to about $10 million US dollars so far. And also pleased to say that Europe is ahead of both the US and China in terms of the number of climate fintech companies that we have here. And so I think, there's been a growing advocacy for a greener economy and the financial system over the past sort of year or so, particularly from leaders like Mark Carney. We've had the Khalifa review that touched on it. Obviously, Rishi Sunak is also kind of weighing in there and making some really positive noises at the moment as we move towards COP26. So from a climate change perspective, Adam, what do you think the world of financial services is really going to look like in, say, 5 years' time?
In order to think about 5 years, I'm just going to sort of reflect on where we've been so far, because I think the change that we're just starting to go through is really important. So up to now, I think the focus has been climate risk and consumers. So thinking about extreme weather, crop failures, catastrophic events, and financial services have priced that into asset values, the risk of extreme weather. And I think also financial service providers have responded to the pull from ethical consumers. But I think things are really shifting now. So, Paris Agreement, government signed up to keeping temperature rises at no more than 2 degrees C by 2050, ideally 1.5 degrees C, net zero by 2050 to achieve that. But critically, scientists now saying we've got to halve emissions by 2030. So the next, well, you talk about the climate decade, but we're already 1.5 years into that. So the next 8.5 years, absolutely critical. How do you halve emissions by 2030? It means total transformation of the economy, of business and consumer behaviours. The levers governments have are regulation, investment, tax and advocacy. If all of those are pushed towards low or no carbon businesses, then investors and markets, financial services will follow. They'll disinvest in those whose value is most at risk at future, and then the value of net zero businesses, those that enable transition, will rise. I think also we'll see government incentivizing financial markets and financial services to accelerate that. So we're seeing climate reporting regulation being rolled out in the UK by 2025. All major corporates, financial institutions are going to have to do that. So capital markets are no longer just valuing climate risk, they're valuing the actions needed to achieve net zero. And I think that's the really critical part for financial services. We'll see companies having a legal duty to take action to achieve net zero targets. And that means all lending portfolios, all investment portfolios, all insurance placements, perhaps all payments will need to report on total and individual emissions for scope 1 to 3 and the alignment of those investments, etc., with pathways to achieve net zero. So that means like new measurement systems, new data, kind of new financial values. We'll have a whole system based on emissions as well as pounds, dollars, and critically, I think also alignment with pathways to net zero. Big opportunities there for financial services and data to play in achieving that, but it kind of means redesigning the entire financial system.
So it's an easy task then, no problems. We're halfway there already, maybe not. So I mean, you touched on a lot of different things there, Adam, and actually one of the ones I just wanted to pick up on quickly, what was on the kind of laws and regulations side of the things. So I mean, obviously we live in a democracy, and so Joe blogs and consumers do have a role to play in the making of these laws. And I don't know if you remember, but back in June, there was a kind of interesting example in Switzerland where actually their voters rejected several pretty key, quite obviously sensible, in my opinion, kind of climate measures. And personally, I was surprised because I thought, it's an affluent, well-educated country. Like I would have thought people would feel that they could afford to invest in the future in Switzerland. But so I guess my question is, kind of as an optimist, I do feel like we're at a tipping point, but I'm also a bit wary about whether the general public genuinely has appetite to give this the priority that it needs to have right now, if not kind of yesterday. And as a fintech sector, what should we kind of take away from that?
Yeah, it's interesting. I mean, 15 years ago, I led a kind of big consumer campaign with Tesco around climate change, getting people to start thinking about it then. I'm not sure we've really moved the debate on with consumers that much since then. Every discussion with government and with sustainability managers identifies there's a huge piece around consumer behavioural change. There were surveys recently showing kind of public opinion and actually also complete misunderstanding of where the biggest actions are that can achieve net zero. So I think there's going to be some very difficult conversations with the general public when they realise the impact it will have on them. I think it also means for fintechs that the scale of change required and that governments are driving now, just depending on kind of the ethical consumer, is not enough. It's a nice product to have that responds to that consumer demand, but it's not going to get us to halving emissions by 2030. So I think we all have a part to play in educating public opinion, But I think also, but maybe the most important thing for financial services and then for fintech, maybe focusing on that kind of debate about risk and opportunity. So really highlighting in terms of your pension, your savings, etc. Invest in those with robust, independently verified pathways to net zero by 2030, ideally, or 2050, because those are the assets that are going to retain their value.
Yeah, interesting. And I mean, I guess there doesn't seem to be a lack of appetite from policymakers and regulators to make the kind of changes that are required to help us get there. I mean, there's been a lot of talk about, build back better, particularly through COVID, but I'm sure you must have been kind of part of some interesting conversations there. So is there anything kind of you can tell us about, what's been said that maybe we haven't heard in the news that can help us kind of feel positive about where we're going with this?
I think in terms of, policymakers, probably the most positive thing I take from it is the focus of the financial services regulators. Now, that's not always a positive, and I appreciate some in the audience may find it concerned that the regulator is going to be driving this. But the FCA told me this week, they said, do not underestimate the importance of net zero to us in terms of financial conduct. And they said the centre of gravity will shift in the next 6 months, that we will all be focusing on this. You look at the Mansion House speech by the Chancellor the other week, and the document that came with that, the UK vision of financial services in the city, signed up by Andrew Bailey as Governor of the Bank of England and Nicola Ratti as Chief Executive of the FCA, all focus on green finance. So I think that the driver is there with the regulators. The other bit is every other bit of government is looking at it. So I've actually had kind of a lot more engagement with the Department for International Trade and the UK's trade commissioners in APAC markets in Latin America, where they are really interested in being able to talk about green financial services. And there is real interest in those markets of what the UK can do.
That's fantastic. And so, I mean, you touched a little bit on it, but I wonder if you could talk a little bit more about your thoughts on what types of regulations we're likely to have, and actually to what extent they will have an impact, maybe near term or long term, on fintechs who are trying to kind of scale up quickly, both specific climate fintechs, but also just the fintech sector in general.
Yeah. So I think some of the regulation will be kind of down the verticals that some fintechs will operate in. So thinking about lending, asset management, insurance, and I think we'll see regulation which increasingly requires reporting disclosure around how those portfolios align with net zero targets and how they demonstrate progress that the overall emissions from that institution, that fintech's portfolio is reducing and hitting net zero. I think there's a big opportunity for RegTech and fintech more generally of how you as a business, or how you help your clients in financial institutions demonstrate compliance and track data. Because then each business will need to demonstrate its own scope 1 to 3 emissions. And that also means that for any business, and therefore any fintech, being able to measure your emissions, but critically looking at scope 3. So what are the emissions of your customers? What are the emissions of your supply chain? That may be a lot easier for fintech than a major supermarket, but I think it's still a challenge, and being able to then reduce emissions within your supply chain and your customers becomes quite critical. So if they sort of be prepared around that, so start measuring, because then I think you will increasingly, regulation will start requiring reductions, whether that's in if you like, your financial portfolio, or one that you manage on behalf of your clients, in your supply chain, in your customers.
And actually, I mean, I wonder whether like regulation will even be like the first place where fintechs start to feel this, particularly any companies who are looking to partner with or kind of provide services to larger financial institutions, right? Because I know I can say from Barclays that this is like a massive focus for us in terms of determining our, our carbon footprint and our environmental impact across, our entire supply chain and our clients. So a natural extension of that is, wanting to make sure that the fintechs that we partner with understand their impact and are also kind of prioritizing this. And so I wonder whether actually some of the more sort of proactive big corporates and institutions might even get there before the regulation does.
Yeah, absolutely. And also remember that some of the disclosure rules are coming in now for large financial institutions. The FCA is introducing them before 2025 when it hits sort of listed companies. But precisely that point, that whilst you might think, oh, it's only the large institutions that have got to report on emissions, they've got to report on their supply chain. So if you're a fintech in that supply chain, you're going to become part of that process. And a simple way of looking at it is they need help. So it's also like worth talking to your customers, your clients, financial institutions about what are they struggling with. If you like, the solutions are going to come from diverse sources, and particularly if you're providing regtech or fintech services, payment services, you probably have the capability to help those customers with their disclosure.
Yeah, and so I mean, it's obvious that this is going to impact fintechs in a number of ways, but I mean, from your seat in Innovate Finance and your other kind of engagement across the industry, do you think fintechs are being kind of adequately engaged in this sort of process and consultation to ensure that what's coming down the line, it isn't going to be too onerous and will actually be fit for purpose for a kind of high growth scaling tech sector where everybody's kind of they don't have the resource to be able to hire their own sort of sustainability manager within their company? Like, what are you kind of seeing is happening to engage the fintech sector on this?
I think you're right that a lot of the discussion, kind of understandably because they're trying to hit the numbers, but the regulators and government have focused on the large institutions, and I think there's been a lot less engagement with startups, with scale ups. There were some great initiatives out there, maybe more around preparing for net zero and indeed making commitments around that. So people like Starling on Fido, Wise, Revolut came together with Tech Nation and others to found Tech Zero. It covers tech as a whole, but it's a big fintech piece. Monzo and Oak North have joined as well. So they've all made commitments to measure scope 1 and 3 emissions with a rapid reduction of those to net zero. I think those with more than 250 employees have made the commitment to hit net zero within a year. So some really
punchy.
Exactly, yeah. Tough targets there and kind of support around that. But I think we just need to do a heck of a lot more with the fintech community. And then, as I say, particularly then teasing through, well, where are the opportunities? How does this hit your clients in the broader financial services ecosystem, and how can you help? I think there's the things are starting. So something I'm involved in on the advisory panel is the FCA and City of London Digital Sandbox. The next sandbox kind of tech sprint this autumn is specifically going to be on climate challenges. So looking at ways in which fintech can solve some of the issues. Your RISE report, I think, was really fantastic in probably for the first time pulling together all the strands of how fintech can tackle climate change and what it means. And then at Innovate Finance, we're going to be doing more, I think, particularly looking at how we help our members navigate through this. But I think, as you say, that there is a lot more to do. making people realise the change, the scale of the challenge, but also some of this is quite simple to tackle, and there's huge business opportunities if you start anticipating them now.
Yeah. So actually, yeah, let's switch gear a little bit and talk about some of those opportunities then. So I think one where fintech has probably really been on the front foot is actually around data, and there's a lot of discussion around how data is a enabler for kind of climate fintech that we covered in our report from Rise. And I think that there is more data available now than there ever has been before, albeit still got the difficulties around like consistency and reliability that need to be kind of solved. And we've seen quite a lot of M&A in this space already, right? With Morningstar have bought Sustainalytics. I think Bain have bought another company, MSCI bought Carbon Delta. So lots of kind of development there. But I guess my kind of observation is that perhaps as a sector, we're doing pretty well at like collecting the data and using it from a risk perspective. But perhaps the harder piece is that is still pretty challenging is really measuring the impact that kind of making these sustainable changes or like carbon offsetting is really kind of having, and that's a risk, because if you can't rely on that kind of impact data, then particularly from a product perspective, it's going to impact the kind of trust in the product and the rate of adoption, I think. So I just wondered if you had any thoughts on that. Maybe perhaps we could start with like carbon offsetting. That's often a popular topic.
Yeah, I mean, firstly, this absolutely is going to be driven by data, and as you say, there is loads there. I look back to when I used to do carbon footprinting at Tesco, again, sort of 15 years ago. It would take us ages just to footprint one product. Now, there's people like CO2 Analytics who just apply AI, plug it into your procurement system, and hey presto, you know what the footprint is of your supply chain. So that combination of data and AI is just going to drive this stuff. And actually, your point about complexity really brings down the cost and the difficulty. And I think there's still work to be done on data. Gavin Stark's Icebreaker One is doing some fantastic work around looking at kind of then specifically what data sets do we need in financial services and elsewhere to really have meaningful measures. And I think that's then where you get into, I think, impact. So, looking at impact as well as just raw data becomes really important. And your point about offsets is a good example. A lot of net zero targets at the moment are possibly based around carbon offsets. So, the idea of reducing through, whether it's, I see some great products around growing trees and planting trees. But again, that's not going to get us to halving emissions by 2030. So I think, they are part of the solution. And more, we'll see more technical carbon capture and storage around offsets. It's going to be important, but companies shouldn't rely on that. And therefore, I think, again, data needs to distinguish between offsets and emissions reductions.
And I think that's an interesting point as well, because also I think you see a lot of the kind of green products that are out there, particularly bonds, the kind of corporate lending and things like that, that they're really focused on sort of funding sustainable activities, but potentially there's a bit of a gap for all of those companies that are on their journey to get there and don't already have that project or that capability that is eligible for the quote unquote green product.
Yeah, absolutely. And that's the risk, whether it's through disinvestment or just prioritizing investment in green products. Where does that leave? Where does that leave shipping? Where does that leave aviation? Things like that are major parts of our economy. They're not just going to stop, but there isn't a carbon neutral solution out there at the moment. What there is a pathway between now and 2040, 2050 to get those industries to net zero. And hopefully that will accelerate. But I think therefore we need a more sophisticated way of measuring the commitments from industries to a pathway to net zero, kind of robust independent verification that they're on that pathway and taking it seriously, but recognizing that we can't just disinvest, but we need to incentivize and accelerate the kind of the technology that kind of doesn't exist at the moment, but they're going to need. There's some really good examples in insurance where Willis Towers Watson's developed with Volans, the independent sustainability consultants, kind of a climate transition pathways product where if the client signs up to a clear pathway to net zero, then they can provide insurance, but it's verified independently. So you've got sort of carrot and stick there, but also then an independent verification that industry can show the rest of the world and show investors, look, we're absolutely doing the most that we can, but it's going to take a few years.
Yeah, fascinating. I guess that sounds like still a very ripe opportunity for any fintechs out there looking to sort of make an impact in this space, to really like get thinking caps on and figure out some solutions.
Yeah, absolutely. Ways in which maybe AI and actually also looking at maybe blockchain of that sort of having verifiable, reliable, independent data to check on some of this, I think will become critical.
I guess that brings me on to another kind of quick topic then, because you mentioned technology, and one of the other kind of issues out there at the moment is actually just like the energy intensity of some of these technologies, cloud, AI, different specific, not all types of blockchains, so what would your kind of advice be and your counsel to fintechs around how they should be thinking about their use of these emerging technologies going forward from a sustainability lens?
Yeah, well, it won't take too long if the industries can grasp this, that sort of we're tagged as dirty industries like coal mining, crypto coin mining becomes similar. And it's back to, you can't just rely on using renewable energy and carbon offsets. We've got to look at alternatives that use less power. I think what's really encouraging is say Ethereum, working on a proof of stake system to replace the energy intensive proof of work for crypto coins. And we need sort of similar approaches across the board. I think crypto is maybe the big example, but across the piece, how do we develop solutions that are less energy intensive? And again, thinking about the energy that our customers use as well as just within the business.
Yeah. So to wrap up, because we're nearly out of time, obviously the UN Climate Change Conference is in Glasgow this November, so COP26. Hoping for lots of kind of exciting news and decisions and kind of policy direction to come from that. But I guess in parallel, Innovate Finance are doing quite a bit in this space. So and very busy advocating for and kind of supporting climate fintech. So I guess over to you. What should our audience be looking out for from Innovate Finance, and how can they get involved over the next kind of few months?
Well, so COP26 is obviously about governments coming together and agreeing targets. So in parallel, what industry, what financial services do is really important. People like the UN are leading on some of that. We're keen at Innovate Finance to really take the lead around fintech. So I think a number of areas, it's sort of championing what our members fintechs are already doing and able to do, challenging as we have around our own carbon footprint. I think critically connecting fintechs with the larger financial institutions. As I say, everyone needs help, and we've got to collaborate to come up with some of those solutions. And then I think also we'll be campaigning the Khalifa Review called for globally accepted standards on measurement of carbon emissions and pathways in financial systems. which will then enable fintech to do even more if we've got global alternative data. So I think we'll be really pushing for that policy review recommendation in the run-up to COP26. Equally, we've got a Fintech for Good conference in October where we really hope to exchange ideas and practical sessions around what fintech can do. So yeah, it's a big agenda for us. We're sort of passionate about the ability of fintech to solve these challenges. I'm really keen for as many people to get involved. So if you're not a member of Innovate Finance, this might be another reason to do so. I'm really keen to know what other people are doing and also where you need help.
Fantastic. Well, Adam, thank you so much. I've really enjoyed talking to you this morning. I hope our audience have as well. So yeah, let's leave it there, but thanks very much for your time.
Thank you, Charlotte.
Our next speaker is Michael Minelli. Michael is a scientist financier trying to promote societal advantage through better finance and technology. His keynote asks the question, what will fintech do in the climate wars, Daddy?
Good morning and welcome to Fintech Week London, and I am delighted to be here with you. The title of my presentation is What Did You Do in the Climate Wars, Daddy? And I chose this particular image from 1915, which was a recruitment poster for the Great War. And you can see here a father, as his daughter asks him the question, what will fintech do in the climate wars, Daddy? And his son is playing with soldiers. And you can see that they're clearly trying to play on the father's guilt to get him to enlist. Well, I'm here to help you enlist, but I think there are going to be some subtle points that I'll be making today. Enlistment has gone far beyond awareness. I think many of us are acutely aware of climate change and its importance. Enlistment has gone beyond talking about nice products and environmental and social governance measures. It's really moved towards doing things about it, and fintech has a key role to play. So what I'd like to do this morning is to cover really green so far, what has been going on with particular relationship to finance, point out that there are different views, not necessarily consistent about what needs to be done, what are some of the roadmaps, and two areas where I think fintech can make a big difference that have been partially overlooked. Well, the first thing is the story so far, and I'll take that story really from a City of London perspective. Back in 1953, some almost 70 years ago, the City of London actually passed the very first Clean Air Act. This was followed up by a National Air Act a couple of years later. And the city has been always active in the environment and climate change. So a lot of people who have been talking to me from the environmental community, of which I've been a part for well over 40 years, have often said to me, what is the city doing about climate change? What is the city doing about the environment? And I've spent a large amount of time trying to share with them the immense amount that has been done over what is now amounting to nearly seven decades. In particular, I might point to initiatives such as the London Accord, which has been sharing several hundred reports that are done in financial services about ESG issues, a lot of work that has been done by the City of London in proposals to COP, etc. But I would pick out one thing that many people aren't aware of, and that is that back in 1997, COP3 at Kyoto concluded that what we needed to do was to trade carbon, cap, and then trade it down. And that was the global decision at that time. And the City of London took that very seriously, publishing a paper in very early 1999 called What Emissions Trading Could Mean for the City of London, and initiated the carbon trading shadow market, which later became the EU emissions trading system in April 2005. So the city has played a large part. But what do practitioners think today? Well, sadly, this diagram shows you a whole bunch of things that could be on their mind. but two very clearly stand out. Policy and regulatory frameworks, they're on the bottom left, and up at the top right, climate change PR. So what they're not talking about is rates of return, industry research. What's really dominating them is what are politicians doing about policy and regulatory frameworks, and what does the public think? How intense is our anxiety over climate change? And what this really shows, I think, is, and the reason I think it's sad, is we don't have specialist finance areas such as shoelace finance. We don't have specialist finance areas such as flooring finance, but we do have specialist green finance. And why is that? Well, it's principally because policy risk is the biggest risk in climate change investment. And this, I think, is to our detriment. I would like, ultimately, green finance to not exist, that in fact it was embedded with normal finance, and that will be a theme. On the bottom right, you see the Global Green Financial Centers Index. This has been issued 7 times now and has really been tracking what's on practitioners' minds. And very sadly, this has not improved over this last 7 editions. So I'd like to talk briefly now about 2 areas where people think that they're making headway, and I would question it. I'm not anti it, but I'll question it. And that's regulation and ESG initiatives. And then I want to talk about 2 areas that I think are overlooked. So when we look at regulatory initiatives, this has been agreed in the run-up to COP26 in Glasgow in November as what banks and other large financial institutions ought to be doing. It's very directed towards reporting and risk management and really a very top-down regulatory structure. And a lot of this is based around a theory that if we can raise the cost of capital for bad firms, people will invest that capital in firms that are not bad. This was the theory that underpinned apartheid, in which many of us marched many years ago. It's an interesting theory and it might work, but what it seems to be doing is to be driving a lot of firms into the hands of private equity. What we also see as we come on this regulatory initiative is some very funny questions like, how do banks decarbonize their balance sheet? Well, why should banks decarbonize their balance sheet? Why does their balance sheet make any sense if it's carbon intensive? The second area that people are playing at is environmental, social, and governance. And we have huge hordes of jobs for the boys and girls running around and writing reports that sit at the front end of the financial accounts. Now, ESG has had 25 years to work already, and as you're well aware, climate change emissions continue to rise. Further, it's still an extremely confused area, referred to by many publications, The Economist and the FT, as an alphabet soup of various acronyms. MIT's Aggregate Confusion Project found that companies in the top 5% on one ESG rating algorithm could be in the bottom 20% on another. And major firms like Shell were wandering all around these indices. So ESG and regulation, they certainly have a role and a place, but they're not going to get us there. And this is where I turn to what I would call multiple views. So we have a lot of top-down views, regulate it and force shareholders to increase the cost of capital. But we also have other micro areas. Taxation is always popular. Any time we see something on television that involves economics, taxes are invoked. But most importantly, we want to internalize. That was exactly what COP3 was trying to do in Kyoto. It was trying to put a price on carbon. And you would therefore not purchase a product that was expensive in favor of one that was cheaper, because if the first product was more expensive because it used too much carbon, you would go to the cheaper product, therefore encouraging the producer of the first product to reduce their carbon costs. And this is a normal way to handle an economic problem. So I would encourage us to be looking very much at these bottom-up rules, some taxation, but principally, when we're referring to the climate change wars of this talk, principally to putting a hard price on carbon. Now, the governments of Europe did try to do that, launching in April 2005 and claiming that they would keep the carbon price above 25 euros a ton. That failed because they issued far too many permits and the price crashed in late 2007. But they've gotten themselves under control. They're issuing fewer permits. They're covering about 40% of emissions, and the price is now hovering close, above 40 and close to 50 euros a ton, the cost of which then makes people change their behavior. And this was, in fact, what we wrote in the City of London back in 2007. These are exactly the same policies in 2007 that we would recommend in 2020 or 2021. Focus on the carbon market, avoid carbon dumping wars, use standards to improve people's use of technology, and support more research in some of the other areas. The second thing is I spoke about policy risk being the distinguishing risk in green finance. That's the one thing that makes it different. If I'm building an offshore wind farm or installing a solar plant, frankly, I'm facing normal project decisions. Find a site, figure out my costs, figure out how much I'm going to be able to sell, who I'm going to be able to sell it to, and the price I'm likely to sell it to them on. The one difference, though, is, of course, government policy changing. And government policies have changed enormously. Germany, for example, shutting down nuclear plants, Spain reneging on, and the UK, for that matter, reneging on solar subsidies that had been promised. What I believe that we need to see are what I call policy performance bonds. These are very analogous to an inflation-linked bond. Government has a policy on inflation. It says inflation will be 2%. If inflation is 3%, then the bond pays 1%. If inflation is 5%, the bond pays 3%. If inflation is below 2%, there is no interest paid on the bond. We can do the same thing in the carbon wars, and this, I think, these would become effectively bond cuffs that would force governments really to adhere to their own word. This would allow, therefore, longer-term investment. So if you take 2050 net zero as your target, you can see on this slide, you're looking at a reduction of about 3.45% per annum. So if in a couple of years it hasn't decreased by nearly 7%, then we'd pay interest on the difference. If it had decreased by more than 7%, it wouldn't. And you'll see here, if you were really off target, for example, only decreasing by 2% a year, that's that black line on the top right, you can see the interest rate creeping up very steadily and strongly in the orange bar below. We believe the governments do need these policy bond costs, and it's something that our firm, Zien, and the Long Finance Initiative have been promoting for nearly 17 years. But they have finally taken off in the private sector, largely due to some support from the French government. And we've seen Danone, Louis Dreyfus, Nokia, Enel issuing these bonds. They're called policy performance bonds, performance incentive bonds, sustainability-linked bonds, ESG-linked bonds, or SDG-linked bonds. But it's all the same idea. You're tied to the outcome. You're not looking at the use of the proceeds. You're looking at whether the target is achieved. And these would be a natural hedge to bring in people investing alongside government initiatives rather than spending their time doubting whether government means what it says. And this is important because as finance people, we should be able to multiply two numbers together. And the two numbers I'd ask you to multiply is the average emission per capita across Europe. That's about 7 tons. And in the UK, it's about 8 tons. I mentioned earlier the current price is hovering near 50. So that is 350 or 400 euros per person per year. So you're looking at nearly 2,000 a family. And many people, given that the emissions trading system only covers approximately 40% of emissions, believe that that should be a bit higher, probably double. So we're looking at some significant numbers that politicians really don't want to talk to you about in the neighborhood of approaching 1,000 euros per Briton or European per year. So those multiple views, I think, are important. We need to really internalize those costs, and therefore green finance doesn't need to be green. It's perfectly normal, and people are making normal economic decisions. Well, what's this all got to do with fintech? Well, there are many roadmaps out there, and you could broadly say that we have 5 things to do. Decrease our energy consumption, decrease our transport consumption, handle domestic dwellings, handle commercial dwellings, and deal with agriculture. That's broadly the 5 big areas. We've wrung probably as much as we can out of energy, and most of the improvements to date have been energy related in terms of renewable energy supply. But roadmaps differ, and I would encourage people in fintech to think more broadly than the science and the technology. Take, for example, here, Vox's alternative, where they're looking wider at sustainable development goals, and they believe that the sixth most important thing you can do to help avert climate change is to educate girls. So after awareness, you're aware, what do we do next? Well, if you take my idea that we need to do bottom-up, then we're looking at trillions of bottom-up decisions rather than, or as well as, top-down pressure on capital allocation. And because of this, we turn, therefore, to computers, because trillions of bottom-up decisions require us to compute. And we need that assistance. As people, we need the assistance of devices to help us make those trillions of decisions that are going to be required over the Internet of Things. As subtle as turning on and off all of the electricity in your house, deciding what time of day you wish to travel. These are the basic decisions that need to be made, and there are many, many smaller decisions behind them. And this, of course, is ideal for artificial intelligence, machine learning, dynamic anomaly and pattern response. Call it what you will. What we need to do is to have those decisions embedded in real systems in real time, helping us. And this, I believe, both those embedded decisions and the embedded financial decisions alongside it, is the real opportunity for fintech. And if we could help people make trillions of decisions better, then the world would be a better place. And so I think the first benefit that comes here is better decisions about sustainability. And there are lots that we overlook. Filling that empty seat on a bus, finding the right flight pattern that means that you spend less time in the air. Lots of decisions like that are very related to financial decisions. You wouldn't take a more expensive flight if you could avoid it. And if that flight cost is related to your emissions, then you will make a better decision. One of the things I frequently point out is that in America, back in 2013, Americans drove 4% fewer miles that year. Was that because they were finally listening to the Sierra Club? Certainly not. What they realized was that the price of gas, as they say, petrol, had risen by 32%. This is what will really change people's behaviors. And it's already here, trillions of tiny financial decisions. This is an example of DeepMind's AI reducing Google's data center cooling bill by 40%. Was this done for climate change purposes? Maybe. Was it done to reduce their cooling bill? Definitely. And what's the difference? Cooling bills being reduced is the same as reducing energy consumption, and that's what we need to focus on. Another area you might not think of as fintech is something called the Ocean Protocol. What they're trying to do here is to create markets for artificial intelligence. You'll also see that there's been a tremendous amount of talk about smart ledgers, blockchain, distributed ledger technology. I see these as multi-organizational databases with a super audit trail that can have some embedded code. And I'm not here to sell cryptocurrencies. In fact, if you read what I've written, I'm no fan of cryptocurrencies whatsoever. However, I do believe that these ledgers have an enormous role to play in allowing us to work together by basically providing something that's been missing for ages. When we look at our typical stacks of TCP/IP, the sort of Internet of Communications, we then move up into our logic levels. What we miss is what I term the Internet of Record. How do we know that somebody did something? And these smart ledgers provide us with the ability to track and trace supply chains globally. Here's an example using a system called Chainsy of people on the southwest of England tracking and tracing from really fishing to plate landed fish and trying to do so in a sustainable way. These types of ledger applications are being used in areas like swapping electricity bills, swapping people's usage of renewable forestry, etc. So as I turn to close, what's fintech ever done for the planet? Well, the first thing I would point out is that there's a lot that fintech can do. This slide here contrasts economy, efficiency, effectiveness, and innovation against areas like time, place, function, and consumption. And we've seen that there are many, many opportunities here to pile in and use fintech. In particular, on the right, I believe that there are enormous opportunities to be using dynamic anomaly and pattern response systems of all kinds in the carbon markets, energy storage, logistics, the grids, smart land use management, and smart cities, urban planning and design. There's an enormous world of opportunity out there for people in fintech who want to get into it. And what they need to understand is that what we're really looking at here is markets. And that is what fintech is about. So I believe that we're going to be moving much more from areas like transactions across borders, banking and payment systems, into engaging with the real industry, the real economy on the Internet of Things, and embedding within that the financial decisions that go alongside the operational decisions. So market measures are essential. We need to ensure that there's competition, open data, better regulation, and standards out there. Fintech people should be lobbying to get rid of green as a special category by costing carbon and making governments face up to their own policies. I believe that the biggest area of fintech that fintech can help in is helping those people make better decisions tied to small financial decisions. The second area is, as I said earlier, supply chain tracking, including the capital supply chain, which does touch on ESG, I grant. I'm doubtful, I guess, about the ability of RegTech or ESG or voluntary carbon markets, but I'll let people prove me wrong. But finally, for fintech, the implication is really we need to shift from focusing on putting transaction front ends on saving products and banking products to moving to trading and IoT markets. So from putting lipstick on banks to mini Bloombergs for the masses. So in conclusion, how would we know when our commerce is working? How would we know when fintech has contributed? And I think that's when we can look our daughter in the eyes and tell our children that we were proud we helped win the climate wars. Thank you.
And now it's time for a well-deserved break. Don't forget to check your Brella schedule to see if you have any networking meetings scheduled, and use the intelligent matchmaking to find people to talk with. Because after all, an event like this is all about networking.
Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyper speeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyper speeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS.
Joining us again after her amazing fireside chat is Charlotte Kennegazabapathi, Director of Innovation at Barclays, with a panel on green finance. Charlotte will introduce you to her panelists.
Good morning, everyone. So we have had some fantastic speakers already this morning, and the fun is not over yet. I am absolutely delighted to be hosting the event today here at RISE. And we really believe that the fintech sector has an important part to play and a massive contribution to make in enabling climate action and this transition to net zero. So in fact, in July, we published the latest edition of our Fintech Insights report that was all about this upcoming trend of climate fintech and really about how technology can shape a more sustainable world through financial products and services. So this is really a subject close to my heart, and I'm excited to have a fantastic panel joining us today who are all sort of making waves in this space. So without further ado, let's get into it. So I'm really pleased to introduce Thanos Bispigiannis, Head of Product at Plum, Julianne Sloan, CEO and co-founder of Nossa Data, and also Simon Curitin, CEO of Funding Options. So thank you everyone for joining me today.
Thank you.
So to kick us off, could you please each provide us a quick overview of your company and the problem that you're sort of solving in this green fintech space? And Thanos, perhaps I can start with you.
Yeah, great. So Plum is the ultimate European money management application. And what Plum really does, essentially, it builds the complete picture of your finances, helping you save money, manage your budget, reduce your utility bills, and ultimately invest for your future, even when you're not really thinking about it in a fairly automated fashion, right? And where essentially green finance comes in, there is like really strong demand from users into options to invest their savings in ways that do not affect the environment in a negative way, right? And we'll be talking a bit more about this later on.
Perfect.
Yeah, so what Nossa Data does is we help companies with their environmental, social, and governance, or ESG, reporting, data management, and analytics. ESG has been one of the fastest growing trends in finance over the last few years, especially with the rise of climate fintech overall. And it means companies are under a huge amount of pressure to provide this information to their investors, employees, regulators, and more. And we're really the software for that. So we help them collect the information from across their organization. We help them report that information to the top standards, and we show them where they're strong and where they're weak compared to their peers.
Fantastic. Good morning, everybody. Funding Options is Europe's leading platform for SME finance, and we've just launched the UK's first green finance marketplace. What we do is we help businesses access finance, which is really solving the two biggest challenges as we see it within the marketplace. One of which is fragmentation. So when you are a business, it's very hard to know where you go when you're looking for finance. And so we take that pain away from business owners through our platform. And the second biggest challenge facing the sector is inefficiency. And again, where better to come for your funding options than to our platform.
Brilliant, thank you all. So I think this might be a simple question, but climate fintech is really about catalysing that road to kind of decarbonisation. And I'm curious with each of you, actually, how have you found yourselves in this space? Because I think maybe certain things have happened in the last couple of years, or maybe it goes back a bit further for you in terms of how you've actually ended up doing something in climate fintech. Julianne, I'll come to you first.
Yeah, I can go first. So my whole professional career was in fintech, but I actually studied public health, which is about how can you do preventing systems. So it actually never made sense that I was fully working in fintech. And when I learned about ESG and the rise of climate fintech, it's kind of like the perfect storm of public health and the principles of public health and what's going on in fintech. So when I saw what was going on with ESG, which really takes sort of the climate question from the what's financially material to your business, so it's thinking of the topic specifically, what industries are the biggest emitters, is it steel, is it oil and gas, and kind of focusing on how they can improve their different topics. I was like, this makes sense. It's like you are improving on the core issues that are most relevant to your business and your business model. It makes sense from like a how to run your business perspective. It's a huge problem statement. It started growing in about 2015 and 2019. It was like exploding during the pandemic. It got even bigger. And if something's growing that fast, there's going to be just huge like need for a technology solution. That's really where Nosa data comes in.
And perhaps we can go from large corporates to small business. Simon, how about funding options?
Indeed. So for us, it was, in a way, it was a passion project to some degree. Effectively, we wanted to take all of our expertise that we'd been ploughing into our platform to make SMEs' lives easier when it comes to us accessing finance. And we wanted to do something that would give, or rather pull together the green options that are available to SMEs today, and again, make them available efficiently through our platform.
Thanks, Simon. And Thanos with Plum.
So on the Plum side, it really started from the customers, right? It's interesting because it really started with a mission to solve like a very strong like social problem, or like people having challenges to save money. And right from the very beginning, we saw that our users had like a real interest on, after saving their money, how do they make sure that they don't have like a negative impact on the environment or like in like the social aspect around them, right? So there was a very strong customer need essentially on getting good options to invest their savings in ways that are either neutral or positive to how environment gets affected. And this came mostly because our customer base is mostly young, right? Like more than 75% of our customers are either Generation Z or millennials. And I mean, there is research that really indicates that these specific parts of the population are really interested on doing something and being actively involved into not only not contributing further into the damage that has happened, right, but trying to contribute in a positive way, right? Initially through their consumer actions and activities, all the way now into their investment attitude overall. And a couple of years ago, we introduced like the first fund that has like an ESG strategy, giving them an option, and we saw that there was a very positive uptake, and we continue adding more opportunities for users to invest their money in more sustainable ways, including like a recent pension offering that we launched, which we've seen like great success so far.
Yeah, actually that brings me on to my next point, which was really around what the role of fintech is, in your view, in addressing climate change, because I think we've heard kind of three quite different takes on it already, and obviously Thanos, you were kind of just talking there about, you know, really kind of directing capital to causes that are going to help address climate change. I'm wondering, Julianne and Simon, what your views are on kind of where climate fintech really plays a role here.
Yeah, I think in the case of Nosa Data, the role is allowing companies to actually have time and scope to improve on their core indicators themselves. So we're fundamentally a reporting platform, and it takes right now a ton of time for organizations to report on these different topics, whether it's fuel usage, water usage, carbon emissions. That takes a huge amount of their resources, and when they're spending resources reporting, they're not spending resources actually on improving and how can they do a better job on these topics. So what we really see ourselves is, you need to report so you can measure progress over time, but if we can make it way easier for them to report, it actually opens up scope for organizations to improve on those metrics, which ultimately can have a huge benefit in many, many ways.
Yeah, I'd agree. So I guess as an extension of that, for me, I think it's incumbent on the fintechs, where we have these unique capabilities, it's incumbent on us to lead and to help to try and facilitate something that is obviously more beneficial overall. We're focused within our green finance marketplace, we're focused on funding green and lending green. So we're obviously using data and technology to the greatest extent that we can. And if it's, again, just building on the point that was just made, if we can make that easier for businesses so that they can actually focus on the things that are really important to them, then for me, that's a great thing.
And I wonder, so fintech in general, I think, also has a role in really disrupting the incumbents in the market. And do you see that fintech also has a role from a climate perspective, and perhaps where is that kind of more or less strong? Because obviously large kind of corporates in the financial services space still do hold a significant proportion of the market, and I wonder whether you think that actually climate fintech also has a role in kind of pushing and dragging some of those institutions into providing the sorts of solutions that we need. Thanos, I don't know whether you have a view on that.
I think on that point, right, we always have to start with like the end user, right, and what they want to achieve through that. And I think where fintech comes in is it makes things much easier accessible, especially in like younger generations. And the idea is in complex concepts like the overall ESG concept, making that easy for users accessible. It's a great opportunity for fintechs to kind of help users achieve their goals at the end of the day. And I think this is like the biggest part of the contribution that fintechs can do. And we have seen it in a bigger scale now, like with like the last year and a half with the pandemic, right? Where they have received like a leading role on helping people achieve their goals, have impact, and essentially generate value for themselves, right? By giving access through digital routes, essentially digital channels into services that either they were previously very difficult to get access to, or they didn't even exist, right, a couple of years back.
Yeah. And I think in our report, we also touched on a few key enablers that are helping to make this happen. And those were data, policy, and also kind of technology. And these kind of the three key factors that we see are really helping to enable fintechs and other institutions to really kind of come up with the solutions that are going to help us to achieve our climate change objectives. And I would like to touch on data just for a minute, as this is a very hot topic. And perhaps Julianne, this is a good one for you, just around how companies really actually are measuring their sustainability kind of impacts at the moment, particularly when it comes to the environment and climate, and what hurdles or gaps in the data are you seeing the most?
Yeah, so fundamentally, a lot of this environmental management is a big data problem. There are so many different data points that companies need to manage, both from inside their organization, but also within their wider supply chain. So if you just think about the quantity of data points, it makes sense that humans alone cannot actually be responsible for doing this. The reality of, I would say, 90% of the companies that we speak to is they're doing it with Microsoft Word and Excel, which is obviously very error prone, very time consuming. Like, if you're spending it that way, are you getting accuracy? How are you actually doing your calculation for carbon reporting? So that's a big challenge. A big positive that's happening in the ecosystem was TCFD, so the Task Force for Climate Disclosure. That really started gaining popularity in about 2018. And actually between 2019 and 2020, BlackRock really pushed companies to report on it, and there was about a 300% increase in companies disclosing on TCFD. And thanks to that standard, it's way easier to compare company one in oil and gas to company two in oil and gas. Before there was a standard, company one could report in one way, company two could report in another way, and you have no idea who's good and who's bad. So actually standards are just massively beneficial for this ecosystem.
And that kind of data that you're gathering about the companies is then obviously flowing through into different types of financial products that are being offered to SMEs and kind of end consumers. So Simon, I'm interested what the role of this kind of data is playing in terms of funding options and how you're providing the right green solutions to SMEs.
Yeah, I mean, we're starting out really on our journey. I don't think we've not got very far as yet. So we've launched the marketplace. I think in terms of data, there's an enormous way for us to go in general, but data is absolutely critical. So we consider ourselves to be technology and data driven. So the decisions that some of the lenders will make is actually going to be based on the kinds of data that are being made accessible. And that, again, is just going to increase and augment over time. Greater sophistication, the ability of the lenders to actually consume the data in a standard form, make informed decisions off the back of that. This is only going to snowball, in our opinion, and it will become more and more efficient over time.
And then Thanos, I guess in terms of selecting the ESG investment products that you offer your clients and all sorts of things, it must be a huge piece for Plum on this.
Yeah, I mean, to be frank, it's still a bit of a challenge at the consumer level, right? And by talking with clients, what we've seen is, even though now it's obviously like a very positive improvement, right? On this data now exists and they're getting reported more and more. Where people still find it challenging is, how do they consume this data? How can they use this data to make decisions? And I think from an average consumer perspective, we're not there yet, right? And I think it's like part of our mission to make these things accessible to users and in a way that they can consume to make their investment decisions, right? It's obviously like initiatives like the one that Julian mentioned are really positive. Now, this data didn't exist like a few years back, right? Mm-hmm. Now they're getting to be available. I think for me, like the next step into this is how do you make it in a form or in a way that users can really consume, right, and make decisions on that. Statistically, we have seen based on research that pretty much like 2/3 of the users that they want to invest on ESG, they either don't know how to go about it, how to understand like this data, or they cannot define the data, or they may not even trust the provider that they use the real data and the ESG approach that they get, right? And I think that's in my mind the next step to make sure that these kind of services are available at the consumer level.
Yeah, and how are Plum kind of tackling this with consumers? Because I've seen some kind of providers out there equating kind of metric tons of carbon to flights and things like that. So what are you seeing that sort of is working?
No, at this level, we try to make like all the information that's available across the three funds that we offer to users, and also the strategy that each individual fund manager uses to make their option. So we try to make it extremely transparent, and obviously not something that we can affect as a company ourselves. However, we make sure that the users really understand that this fund manager has made this option, or that's the process that they use to end up having like this fund, right? So we try to make them as aware as possible based on the information available, and also make it in a way that they can really see, right? Not using like very complex language, not using like huge papers of analysis on how they do that, but make it in a palatable way for them to, through the mobile app, see what are the options and decide accordingly.
Yeah. And actually, Juliana, I'd quite like to ask you, so obviously you're doing lots of work with corporates in the financial services sector. What opportunities are you seeing for them to do more to incorporate climate fintech into the offerings that they currently have in the market?
Yeah, I think it really depends on the different corporates. So I would say what I've seen across many industries is you'll have like the leaders in the industry that's really pushing the whole industry forward. So you have sort of the leaders who's the first to make a net zero commitment. You have a leader that actually is like kind of pioneering their reporting. And then what that does is it pushes up and it makes all of the other organizations that are not doing that actually look bad, because you're like, well, okay, Barclays is doing here, what about all the other ones, and kind of like trying to get that balance. And so I would say the organizations at the top of the industry really pushing, and then also looking to like the global sustainability leaders, so seeing what is a Unilever doing, what is a Microsoft doing, and then how can we in our industry push to that next level. And then I think that forces the people who are laggards in that industry to actually step up and improve.
And Simon, I wonder whether you're seeing this at funding options, because I mean lots of small businesses make up the supply chains of these large corporate institutions. Is that one of the drivers that you're seeing for why SMEs are looking for greener options, or is it just because they think it's the right thing to do? What's driving it for SMEs?
It's a mix as we see it. So absolutely there are, and again, it's not just obviously at the large corporate level, but even at the SME level, there are leaders and there are laggards, and ultimately that's a very, very normal thing. If you think about the kinds of businesses that are going to be looking to finance green, for example, their means for being, it could be, Plum is looking for finance or something along those lines. Given the nature of the business, from the way the engagement is going with the lenders is, it really should be there should be an advantage that these businesses can gain through the nature of what they're actually trying to achieve as a business. They're doing good. They have their ESG policy is sort of at the heart of what the business does, and therefore it's the right thing to do ultimately for lenders to facilitate and help these kinds of businesses thrive.
Yeah, and actually Chris in his keynote did kind of speak about the move from shareholder capitalism, to stakeholder capitalism, and how companies will need to have a strong kind of purpose and really kind of live by that in future. Otherwise, they will lose out. So yes, similar kind of themes coming through, and I guess just kind of move on a little bit. So we've talked about data. I wonder if we could just touch on technology for a short while. So Obviously, history shows us that technology has a real huge kind of part to play in driving significant transitions in the market. And you've got to look at the internet, going back further to the Industrial Revolution. And obviously, lots of enterprises really seemed kind of poised to be at the forefront of this shift, whether they are sort of starting to develop new products and services or other kind of solutions. So I wondered what your views are in terms of where the biggest barriers are for companies in financial services to really achieve their sustainability goals. I don't know, Julianne, maybe you can go first on that one.
Yeah, no, really thinking, I would say it's really accessing the data, and I would say most financial institutions still have a long way to go. If you want to sort of get a sense of what could happen in financial services companies, it's actually quite useful to look at what happened in oil and gas and mining companies, or essentially any industry that was hit by exclusion. So the companies that were hit by exclusion got this pressure on sort of climate data and ESG more like 10 years ago instead of right now. And so what you've seen is they've actually invested essentially like millions and millions of pounds into creating solutions to bring all of their data points together, start monitoring them and trying to improve across those topics. And I would say that robust of solutions still hasn't hit the majority of other industries, with financial services included. And so I think financial services really needs to do a lot of improvement over the next few years of how they're collecting the data, what industries they're targeting. I think they could probably collect the data from those exclusion industries, but could they collect it from like the telecoms industry, from apparel industries, if that data is not even there yet? And so there's a lot of just kind of like data prepping that still really will need to be done across like the majority of industries.
And do you think technology is in some way kind of the key to actually having some of that data and it also being reliable and consistent? Because those are also the other kind of challenges, aren't they?
Yeah, you really need technology because there's a lot of just obvious things it can help on, such as like flagging errors. And so often actually metrics that are coming out are just illogical. So you'll get companies reporting metrics that just don't make sense with all of their other figures. And that's the kind of thing technology can flag. And so actually like looking at the accuracy of data is really important. Technology helping on things like audit trails. So now it's becoming more and more important to have your sustainability reports actually audited and assured. And so technology helping go, okay, where was the original source of data? Can you track this? And kind of getting those lines in place too, I would also say is pretty important.
Simon, perhaps I can come to you. What are your views?
Yeah, I mean, from a small business perspective, there's almost, we're waiting for this trickle-down effect. So small businesses, inherently, they don't have, tens of thousands of pounds to invest necessarily in the kinds of infrastructure that you see the large corporates, the large financial services firms have. So I think, there is going to be, I guess, a delay of sorts in the speed at which SMEs are moving. What we really need, and again, it may be one SME that's actually selling a particular service to another SME, but you need the knowledge to proliferate across the industry. You need to have these kinds of services, whether it be a technology service or a data service, that needs to be made available more broadly across the sector. And that will encourage adoption because, again, naturally speaking, small business owners, they're time poor, they need to focus on particular things. And so they will need help in this journey, without question.
Yeah. I think it's an interesting point as well, because a lot of fintechs ultimately fall into this SME bracket. If you're not specifically climate fintech, you're doing other things in fintech, then there's similar kind of challenges, right? You want to be building your business to really be poised for success in the future, and actually, you kind of need to start thinking about sustainability right from the get-go these days. So it's a real challenge.
Yep.
And actually, I guess one of the easiest, almost obvious things that a lot of founders or kind of business owners might look at is probably carbon offsetting, isn't it? But I'm kind of wondering what the views of the panel are on carbon offsetting, because I do wonder whether perhaps it's a bit of a sort of have your cake and eat it moment in terms of ultimately what we're trying to do is reduce carbon emissions, but actually kind of offsetting doesn't quite do that, does it? So I'm interested in views on that, and whether any of you have incorporated carbon offsetting into the solutions that you offer at the moment. Who wants to go first?
I can go. So not incorporated carbon offsetting, so it's something that we definitely monitor. Generally, I would say we're much more, like, offsetting is better than nothing, but we're more pro actually like fundamentally reducing how you're running your business and thinking about how you can do things in a better way. Because if you're offsetting, then you're just essentially still producing the same amount of emissions, you're just passing off the burden to someone else. And so we think that we would really encourage companies to focus more on how can they reduce their operations. And I would say if you look at sustainability leaders, that's definitely, they're focused on the reduction. They're not focused on offsetting. It's more like a temporary band-aid than the full solution. As a small organization, actually, we're trying to think about how we can report on ESG, given that we're not like a massive organization with tens of thousands of pounds to spend on it. And so we've started going on that, but with this kind of ESG, we're really focusing on our financial materiality of things. And as a software business, we don't have a huge carbon footprint, but we really need to focus on things like data privacy, data security. So that's really where we kind of think data privacy is probably the most important topic for us as a businesses, making sure our customers' data is safe. Employee treatment is also really important for us. So we try to focus on like, where are we actually having a huge impact?
I mean, I would concur as well. So at Funding Options, we started to look at our carbon footprint and actually understanding that. And when you go into the throes of sort of digging deeper into what is our carbon footprint, it's an education in itself. You actually sort of, all of these things come out, you initially, naturally, you don't necessarily realize. So, we've looked at it, we'll continue to look at it. I think monitor is probably the best way of describing it. I do get your point though. Is it like a have your cake and eat it scenario? I can do this so long as I do this. I would say that carbon offsetting is better than nothing, but definitely getting to the heart of the problem and actually stopping the activities that are causing the carbon imprint. That's got to be number one. Yeah.
And Thanos, I guess of all of us, you've probably got your finger on the pulse of the end consumer to the greatest degree. So do you think that the average kind of person out there consuming a fintech solution is kind of registering this
I think
at the moment?
From a consumer side, right, like the solution of carbon offsetting is not something that had reached that level yet. Right? I think it's mostly driven by companies or like bigger organizations as a whole. There is definitely a lot of awareness around like the individual like carbon footprint, and it's something that we've seen obviously like from a consumer standpoint on how people buy things, what kind of things they buy, try to be like more local on the products that they consume. And obviously like the last few years we've been seeing a trend into now incorporating these approaches into like their savings, their investments and other activities that they perform, right? Which is interesting to see like that people can really understand that even as an individual you can have impact and you can measure that. Obviously with the new services that come up, this is extremely useful for them, and how they can combine that from understanding how they live and what's their impact and how they can take action on that. And then the next big opportunity is like, how can you enable the user now to take the action that they want to take, right?
Yeah. And so I think we touched on a little bit earlier in terms of who the green consumer is. It'd be great, Francis, if you could just dig into that a little bit more for us so we can kind of understand, because I think there are maybe some kind of conceptions that going green is more expensive, and so maybe younger generations don't have the kind of real opportunity or appetite to do it. But I think perhaps you're seeing something different.
No, I think it's probably like the opposite of what you just mentioned, right? I mean, the opportunities obviously become more and more for everybody to get access to these kind of investment or saving opportunities where you really know, or at least you have a good view of how much this may affect or not, like the environment, like socially or like from an environmental perspective as well. We've seen it a lot in a higher like percentage in younger people. And I think the main reason for that is, Generation Z or like millennials, like almost like 50% of the users roughly, they have some kind of an ESG investment as part of their portfolio, right? And we can see that on research, we can also see that on how our users like use the Plum application. I believe the main reason for that is, these generations kind of grew up in a period where, like the environmental impact of what's been happening like the last like 50, 60, 100 years, it's way more visible now, right? Not only that, now, beyond like the effects being visible, there are also opportunities to take some action against that. Like there was not much visibility previously on the value chains of the products, right? Where how things reach your place, right? What was happening when you were ordering something, when you were consuming something. And I think it's a combination of the need together with the awareness like of and the capability of using like tools to kind of fulfill this need essentially. So we've seen users like being very passionate about being more sustainable in their approach, how they consume, and obviously like as part of fintech, how now they save, they invest. We've seen like a change of like user behaviors moving into sustainable funds or like funds that they have like an ESG strategy attached to how they're getting managed. Especially during the last year, we saw like almost like the allocation of funds doubling into like the ESG options that we offer through the platform. Not only that, users are looking at that both in the short term as well as in the long term. And we saw that by comparing like the short-term investment propositions that we offer. In short term, I mean like 5 to 10 years, essentially. We're not talking about something like more recent than that. But we see the same attitude on like the pension offering, like where users will invest for the next 25, 30, 35 years. And we have seen like more than 60% of the investments on users go into like the ESG option that we provide them in the product, which is obviously like very interesting that people do not look at that like from a consumer standpoint only, but they see like the investment aspect of that and how these may have like a bigger impact because it's much more long term and like bigger in size for the environment and the society overall.
Yeah.
I might add on that actually too, and one of the biggest reasons why a company wants to invest in sort of ESG is actually for employee retention and engagement. So employees absolutely want to work for companies that they believe in, that have a side of things, and it could be actually working for a true impact company, but it could also be working for a company that maybe wasn't impact but is looking to improve. And I would say sort of like the top motivators, obviously cost of capital and being able to attract investment. But this employee retention, especially with the younger generation of employees, is just like a huge motivator and a reason why it really pays for a company to invest in this.
Yeah, and are you seeing that link into kind of employer pension schemes as well? Because there's been a lot kind of in the news. There's some really great fintechs out there like Tomello and Cushion who are doing great things to kind of get more visibility and awareness around the sort of impact that your pension can have. Are employers also starting to kind of act on that? And is it actually counted in part of the footprint of a corporate?
Yeah, so I've seen great campaigns and discussions in the UK. So the really good one is Make My Money Matter, which launched last year, that I would say is just getting tons and tons of attention around having more sort of like ethical and great invested pensions. The reality though is, at least from our experience speaking to corporates, we really are not hearing the pension discussion coming up as one of the key topics. And so I don't think I've ever had a corporate raise that as kind of like one of their core areas. I think they're just still trying to grasp the data, and pension is like, I don't think their employees are pushing them on that as much. I think it's a great way to engage employees, and I think it'll come, but I personally haven't seen that one yet.
Not yet. Interesting. And Simon, what about from an SME perspective?
It's a different challenge, I think, for SMEs, given the they can obviously be from a one-person band all the way up to X number of employees. I completely concur with the other panelists. I think that certainly from our perspective, and I would also see this in other fintechs in general, from an employee retention perspective, I think it's very, very important that you have you have greater awareness of environmental matters, and you do try to incorporate that into your own internal policies. It makes a real difference.
Yeah. And do you think there are any hazards though in relation to consumers and kind of providing sort of greener solutions? We hear a bit about greenwashing, and obviously trust has always been a huge issue in the kind of financial services sector. So I don't know, Plum, what are you doing to make sure that you're not kind of misleading consumers who are perhaps also less informed at this point in time about what these kind of ESG sort of solutions are really about?
Yeah, I think from our perspective, right, again, it's all about like being fully transparent, really explaining in a way that people really understand and consume, how things work, like how like the corresponding like fund manager makes decision on what they invest. Making sure that they really understand, this is a fund, but then there are like companies within these funds of holdings, right? And who are these companies? Essentially, give them all the visibility that they really need to understand, what's going on. And give them essentially the opportunity to make their own decision at that point, right? Now, obviously, the expectation from our side is there's a lot of development on getting more of this data available, but also making them in standards that can be easily understood and consumed. And I think we're getting there in the sense that recently, back in March, there was this European initiative around the Sustainable Finance Disclosure Regulation, which is an obviously very positive step, right? And when you see initiatives like that being pushed by governmental organizations, being pushed by big asset managers like the BlackRocks that was mentioned before, there is clearly a view that people are and companies moving to the right direction, right? So to me, it seems that it's a matter of time to go to a place where that probably the data and the capabilities that now bigger organizations and SMEs have to make the right decisions ultimately will reach the end of the value chain and the consumer and give really what the user wants from a value perspective.
And speaking of value, what about pricing is really the crux of it. So are consumers and SMEs willing to pay more? Do they think they should have to pay more? Are we getting to a point where actually it doesn't cost any more or less for these solutions? Simon, what are your views?
From a finance perspective, we're actually hoping that the SMEs will pay less, because we're hoping that the lenders will, through offering these bespoke products or products that are effectively green lending products, we want to try and achieve a more beneficial outcome for the SMEs. And actually what we're seeing is the lenders are very receptive to that. They're obviously very sensitive to the broader dynamics in the marketplace, how the environmental issue is snowballing in terms of importance. And actually they have distinct policies now to address it, to focus on it, and to try and offer the kinds of products that will give the SMEs an advantage. So fingers crossed that will continue.
Yeah, and I would say the same. I mean, I think one of the reasons why ESG did take off is that it's really about kind of risk management and eventually hopefully having better financial returns. And so it's thinking, okay, is there a giant looming environmental risk with this business that we're investing in? And in the long term, you want to mitigate for those risks and actually improve your long-term returns. And so I would say that's really kind of the mentality. Diagram that I think is great that represents this is the Bridges spectrum of capital, which essentially has investing for pure financial return on this side and pure philanthropy on this side. And ESG is really just one step kind of from financial return, where you're taking, okay, we're going to look at risks that's going on and make that decision here. And then people can choose if they want to just look at it from a risk perspective, or if they want to actually say do impact investing, where in impact investing you're actually I'd rather have a better environmental footprint than the financial return. And I think that people exist along that spectrum and really kind of thinking where they sit.
Yeah, and actually COVID has been quite a good case study on this, right? I remember perhaps in the earlier days of the pandemic, when there was more volatility in the markets, we did see some really quite interesting data about how companies who were perhaps performing better on the ESG spectrum actually performed better overall in terms of how they managed to kind of weather the challenges of the pandemic. And I found you kind of touched on it a little bit in terms of how actually it's perhaps spurred a few more consumers to get interested in and look for solutions in this space. I mean, Simon, has it had a similar impact on SMEs, or is this just kind of a train that's been rolling gradually over time anyway?
I think it has. So I think we've all seen increasing, or rather an acceleration in digitization across the board. The access to information digitally, the access to new technologies. I think that has enabled the word to get out there much faster. So actually what we're seeing is SMEs are now better educated. There's an incredibly long way to go, and actually the education is only partial to a degree, because new things are coming out all the time as it's gaining in sophistication, I guess. But certainly we've seen the shoots, and I definitely think COVID has had if I can say, a positive impact in that regard.
In that regard, yeah, I think that's fair to say. Thanos, was there something you want to add?
So I mean, from our perspective, on the consumer level, right? It was mostly obviously people started looking into services that previously they used to access in a very physical environment, and this drove a lot of users coming into digital services. I mean, we had tripling the number of investors between March 2020 to March 2021. Yeah. As part of this, a lot more users would use platforms like Plum to try to manage their finances overall. But as I said before, we've seen like also an interesting trend into what users invest in, right? Moving in a more sustainable opportunities there. And we've seen like almost like the allocation of investments with like an ESG strategy attached to them to almost double between like the beginning of the pandemic to like the second lockdown, roughly. That was when we see like a lot of people moving more towards like the ESG offerings that we provide.
That's incredible. I mean, we've heard a lot of talk about doubling, haven't we, over the past year? But that's a really positive form of doubling. So, I mean, I think we're kind of bringing this panel to a close now. Sadly, this has been a really fun conversation. But I guess final statements from you guys. I would really love to hear what your views are on what we should be looking out over the next 6 to 18 months in the climate fintech space. You know, what are you kind of most excited about? And if you did want to shout out another awesome fintech in this space, like please do go ahead. Simon, perhaps you can go first.
There's too many awesome fintechs to shout out to, but I'll shout out to these two awesome fintechs here. Watch this space. But no, from our perspective, as I said, we are really starting out on the journey, so we're massively excited about the green finance marketplace. And if that is the success that we envisage it will be, for us that is just going to be hugely positive because it will be benefiting SMEs, and SMEs are absolutely the lifeblood of any economy. And anything we can do to make their lives easier, we will absolutely endeavour to do so.
Yeah, I'm also excited that this industry is really exploding and tons of organizations are doing things. I would say one thing, if your organization's not doing for this to work, you really need kind of influence from top down and bottom up. So if you're very senior in an organization, I think communicating down throughout your organization that this is a priority and you should pay attention. If you're junior, pressuring a company on, actually, is your pension sustainable? How are you managing these things? And communicate that up the ladder. I would say both of those things can help get us even further.
Thanks, Juliana. Thanos.
Yeah, from a consumer perspective, it's like the plan view of things, right? I think what really makes me exciting is, you know, all these new services of delivering like this sustainability related data, right? And I mean, I think like open banking was a very good first test of like opening up data, making them available, and then having like really innovative companies taking advantage of this data and offering them to the users to deliver them value, right? And I think we're now at the point where we get like more, especially like on the startup world, more initiative along these lines will give the opportunity like to Plum and like similar companies to kind of package them in a way that really deliver value to the user, right? I think it's probably like across like the corporate SME consumer, that's like probably like the most difficult point to touch essentially in concepts that are like so complex.
Yeah.
But I'm really looking forward to see like these kind of initiatives around data, like open APIs that touch this part of the spectrum.
Yeah, me too. Right, well, to wrap up, I think we've heard that climate fintech is a really exciting sector and has a huge part to play in helping us get to our kind of net zero ambitions by 2050, or hopefully a little way before. I'm really, really thankful to you guys for joining me today, and I really look forward to seeing what you get up to over the coming years in this space. So lastly, I think I'd just like to say thank you very much to Fintech Week London for having us, and we'll leave it there.
Diving deeper into the theme of green finance is a fireside chat with Lloyd Wahed of Mana Search. Lloyd is a London-born tech entrepreneur who has founded 3 global executive search firms, and he is joined by Joe Parkin from BlackRock and Romina Savova from PensionBee.
So to give fuller introductions to who's joining me on the far side for green finance, we have Joe Parkin, head of banks and digital channels.
Yeah, it went off, didn't it? Yeah, I noticed that.
Romina Savova, who is the founder and CEO.
Did very well, guys. That was good. Really good.
Firstly, congratulations, Romina, on your recent IPO.
Thank you.
And all the branding around absolutely everywhere in the UK.
We're trying.
Exciting times. I'm the host of Searching for Mana, a podcast where we talking to leaders and entrepreneurs in the fintech space. And both Joe and Romina have been on the show. So if you want to listen to a fuller bio and discussion through the purpose of both their careers, please do listen to the show. Of all the guests we've had, it's great to have you two on this discussion. You both came across, when we did the podcast, full of purpose for green finance, so good to have a debate. To open up, it'd be interesting, Joe, if you could talk through what you're seeing at BlackRock from a demand perspective from your clients.
Yeah, sure. So I think at this point in time, and for a while now, and I think for a while going forward, the number one kind of topic of conversation, issues our clients are facing, is effectively how do they move their businesses, their portfolios, and how they talk to their clients into a more sustainable space. I think from a BlackRock perspective, and kind of 18 months ago or so, what we came out and said was that climate risk was investment risk, and therefore, we should start to think about it like we do with other risks within a portfolio, such as balance sheet risk or regulatory risk. And so what we're going to see over time, I think, is capital move into that space. And because capital is moving into that space, firms are going to have to act quicker and quicker in order to meet the demands that our clients are putting on us, and then we're putting on the companies that we're deploying money into.
Thanks, Joe. And so that's a vantage from one of the biggest investment managers in the world. And Romina, of course, recently a startup fintech and now a listed business. Be interested to get your vantage on how you see collaboration between incumbents, government, and of course the fintech space benefiting green finance.
Well, I think there's an imperative on all businesses to put their front foot forward when it comes to environmental, but also socially responsible investing. So we at PensionBee, we think that investing is simply sustainable investing, because over time it has been shown that sustainable investing strategies tend to generate longer and better returns for customers. And of course, we're in the pensions business, so that is incredibly important to us. And while doing that, what you really learn from your customers should be at the heart of driving what you do as a business going forward. So in our particular instance, we were hearing a lot from our customers that they wanted to completely exclude fossil fuel producers from their pensions. And that led us to launch the first mainstream fossil fuel free fund, which has been a huge success for us and has really met that demand from our customers. And of course, in taking that step and putting our foot forward, we have had a lot of inbound from government, from various departments, trying to understand how it is that we can create this ecosystem around what consumers really, really want from their pensions and from their finances. So I think there's a natural evolution that's going to be taking place. It's certainly backed by the numbers. I think around $123 billion year to date to April flowed into ESG strategies. So clearly the change is happening, and the onus really is on everyone to push it forward.
Thank you. Yeah, if you look at the difference between reports from 2019 to 2020, it is disparate in terms of how much effort is going towards ESG investment strategies. Open question to either of you. What do you see the biggest challenge for us to keep on making good progress to be?
I think from our perspective, it's about understanding the different shapes and forms that these types of investments come in. And so there are a whole range and myriad of strategies that you could employ. I've described one approach, which is to exclude fossil fuel producers. There is another approach around engaging with fossil fuel producers and encouraging them to change. And I would say that that is probably the more popular way to go about doing things today. Doesn't resonate with everyone. Not everyone wants that, but it's certainly quite popular. Another emerging stream is around impact investing and actually putting your money into companies that are actively doing things to, make the world better rather than just excluding companies who are doing things that you don't like. So there's a whole range of these types of strategies, and we are still learning about what it is that consumers prefer and how to communicate that, because you want to be managing people's expectations. There's no silver bullet magical way for us to solve this problem with a single product. There's a whole range of options available that people need to be exploring.
Thank you. I think the purpose seems to be out there and being received incredibly well. But then you've got a technical situation, which is where fintech comes in, and of course, Joe, with digital channels focus at BlackRock, you're abreast of, which is how do you get access and inclusion to all of the retail consumers?
Yeah, so just to carry on, and I will answer yours because I think it links in. So to me, the number one problem is data, which I think will please kind of a lot of the fintechs out there. But the companies that we deal with, which are managing money, similar to Romi's, are managing money for people's company, in a sustainable way. They simply just don't have the data to understand where they are today, and then to plot how they're going to get to where they need to get to. So I think the whole industry has a huge kind of way to come in terms of data. The other big challenge, which is a massive challenge and an opportunity, is how we take the stuff that goes on within investment committees and within rating agencies and all the data, and we connect it to the end consumer. Because if we can do that, then I think we can take that kind of that grassroots, bottom-up demand that exists, where people are not, taking Tupperware to supermarkets. They're really thinking about their own carbon footprint. And actually, the best way for them to affect change is by making sure their pension or their investments, so the capital that they kind of have for the long term, is being deployed to companies that care. Or are doing something better, for the world. So if we can connect that, it's an enormous challenge because we have to stay away from kind of ESG ratings and some of the words we use and condense it down into a message that's very good for the consumer that understands. But if we can get people saying, I want my pension, or I have a necessity for my pension to be being delivered into something that is sustainable, then we're going a huge way there.
And this is FinTech Week London. So how do we consider the UK to be competing on a global stage at putting the front foot first for green finance?
I would say that we're doing all right. I'd say there's still quite a ways to go, but I think the level of demand certainly that we're experiencing is hugely promising. I think the government has made some decent commitments in this space. We're certainly starting to see more around the commitment to funding, to getting us to where we need to be from a green perspective. However, I think we at PensionBee particularly want to see a lot more action on the social front. We think that green finance and actually the social issues that matter to people, whether that's diversity or whether that's living wage, need to be incorporated way more into our investment ecosphere. And so from that perspective, we would want to see more action being taken and more communication around the priorities that matter to government when it comes to those particular issues, helping us put our second foot forward as well.
Romina, when you think of the other side of the coin, which is your company and the individuals within it, do you take an active approach to hiring talent that's outside of conventional finance to bring in different way of thinking and innovation?
We do. We've taken a very active approach to developing our talent internally. Almost all of our internal promotions will be from our internal pool of talent, and we commit to growing that talent through the company. And at the most junior levels, we hire people who have some pension experience or people who don't have pension experience, which we then train in-house. But it enables us to open up the pool of potential eligible people who want to work at our company substantially more. And then we've, of course, compounded that by enabling everybody to work remotely. So I would say that our access to talent and the way that we've approached our strategy to bringing people into the company has really enabled us to be one of the most, if not the most diverse fintech within the ecosphere.
And you're obviously of a scale where you can be agile with those decisions. At BlackRock, Joe, on that particular point, what are you saying?
I mean, I'm just, I'm seeing something where, you talk about, are we doing enough in the UK? Are we doing enough? Like we're doing a huge amount, but there's always more that can be done, especially around this issue. And I think that while we're kind of a little bit of a way along the journey, there's a huge amount to go. So, if you even think about the last 18 months and how we've changed our views around the social piece, last year, some of the events in America, have led for dramatic changes in the industry around D&I. But I still think there's a huge amount to go, right? And, so we need to keep on pushing. And I also think that this issue is probably one of the largest issues we'll grapple with, kind of within our professional lives. And as well, and it's very rare that you can say this within finance, it's also kind of making the world a better place.
Yeah, it is really genuinely exciting. If you look back to, both you guys started at Goldman Sachs, same year apart.
I'm not sure.
Yeah.
We don't want to reveal our ages just right now.
Yeah, not calling out your ages, but some time ago, circa a decade. Anyway, I assume that not much was talked of toward green finance. It's been a snowball effect of people realising, okay, this is great. And then when I certainly look at the talent who's coming into fintech over the last 5 years, it was like, okay, let's make things more efficient. This is really cool. And I think the last couple of years, accelerated by COVID, people have been coming in for purpose, like you're saying, okay, we can actually do something that's really brilliant. So now let's look forward. One issue is, how do we turn fintechs into really profitable businesses, which is important. So if you look at, for instance, an acquisition by JP Morgan of Nutmeg recently, the fundamentals weren't as good as they could have been from a revenue profitable perspective, but there was a really purposeful business that gave a retail consumer a user case that hadn't previously been affordable. On that point, Joe, what do you think we can do, and what do we want to see in the fintech space so that business can bring purpose but also be very profitable?
I mean, so for me, I think there's two areas which I love to focus on. One is data, which I've spoken about, right? And I think that fintech can bring a huge amount in the data space around kind of sustainable investing, ESG stuff. The other one is actually, we've kind of touched on it already, but actually, can we make this a personal journey? So I think we're very good at the moment of kind of talking about sustainability on a corporate level or with the investment space. I'm not sure, and we're getting better at talking about it, okay, what's my own personal carbon footprint? But if we can link those two together, which is what I think the fintechs can do, so imagine your bank account being connected to your pension, being connected to actually where you're traveling around London, so your phone, and you start to get a kind of complete picture of your carbon footprint on a day-to-day basis and how you can affect it, then I think that's a really interesting area that we can go into. And I think we're not that far away from actually connecting all those pieces together.
Thank you. And Romina, if you think of your customers and what they're calling out for from a demand perspective, of course, you've addressed it with a recent product, carbon footprint. Is there something that you're kind of dreaming of in a few years that you can get to as well, that you can see that they would like you guys to provide?
We tend to be very driven by what our customers want now. So we focus a lot on the current feedback that we're getting. The way we manage feedback is that every time a piece of feedback is delivered to us, it is streamed through the whole company. And so we tend to keep our product development roadmap quite short. And that enables us to pick up what's relevant at the time. I think one of the things you see very large companies doing is they pick up pieces of feedback in 1 year and prioritize them, and then it hits a development roadmap sort of 2 to 3 years later. And of course, by that point, the feature that you're building is probably irrelevant or has been overtaken by somebody else. So we try to focus on much more incremental innovation and always furthering the features that we currently have to make them more, appealing to a wider and wider audience. So when we look 2 to 3 years ahead, we're thinking less about the individual features that we're going to have on the product and more around what the business as a whole will look like. So partially coming back to your question on profitability, we've communicated a very explicit target for ourselves publicly that, we will be profitable at the end of 2023. And so from our standpoint, we're driving a lot towards that, and our features are there to enable us to keep growing and to keep our customers satisfied so we can keep them with us for years and years and years as we have so far.
what do you have to change to get to profitability?
There isn't much to change, to be honest. It's about doing the same thing over and over again for us and enhancing the way that we do it. So it is actually about delivering more efficiency. It is about sustaining the rate of growth that we've sustained so far. And it is very much around ensuring that our customers are happy with us so we can maintain our industry-leading retention rate. And really the driving a whole organization forward towards optimizing and continuously improving on, what is a huge market opportunity. Pensions is £1 trillion just in defined contribution, is the challenge for us.
I think you start to get the consumer, if you visualize what Joe was talking about, where you can actually see the ecosystem of your carbon footprint and how different things affect it, potentially thinking, I'll pay for this. What I like the thought of is at the end having been prudent with my pension, and I of course want it to be reasonable or considerate, but actually it's not so much who's got the best investment strategy, it's more that I feel good about where it's come from. And so could you even charge the customer a premium for that?
I think consumers expect their pensions to be doing at least the very basic things. So our policy is that unless there is a very explicit financial objective that prevents us from applying baseline screens to our products, we will apply baseline screens, because a lot of people haven't actually gone and opened a spreadsheet to check what the 7,000 different investments within their portfolio is. They are expecting certain things of their companies. So oftentimes they'll be, expecting you not to invest in controversial weapons, for example. And so I think you need to meet those expectations through, just doing business in a routine way. There are, of course, going to be customized products that are not necessarily serving the needs of everybody, where it does require more specialized development. It potentially requires a more expensive investment management style on the asset manager side. And I do think that those products will come at a premium. I think within our shopping lives in general, we're used to seeing these kinds of decisions being made when we go grocery shopping or when we go shopping for other products. So I think that is normal, but certainly within your business as usual activities, I think companies are expected to have appropriate approaches for what their customers expect.
Thank you. And we don't have too long left, but Joe, final question to you. What would you recommend to somebody who might be looking at investing sensibly but with a green finance perspective?
Well, I'm not going to recommend anything, but listen, I think it's about making sure that kind of like what you're putting into your sort of your pension or your investment portfolio actually matches your beliefs in life and how you carry about your day-to-day life. And I think a lot of people out there are caring about this stuff. And therefore, either push the pension provider you're with, or make sure that you are, going online and looking for sustainable, diversified, low-cost multi-asset funds, that you can invest in over the next 20 years that are pushing capital towards companies that are doing the right things and moving the conversation forward, and not allocating to certain companies. But I think, that's the minimum requirement you should go out there and think about.
Thank you. Yeah. So what I think we take from this is data is crucial. So we want to see as many fintech businesses working on that solution. That data is going to allow us to be aware more often than not, whether we're the company or whether we're the person, of how we can affect green finance and its outcome. The government, universities, fintechs, incumbents collaborating with each other, and just an awareness of it and keep on working on it. There's no silver bullet, but over a course of time, just keep on making all the improvements. So there's not long left, but Romina, if you've got a final comment on this as well.
I would say definitely pay attention to your pension. It's hugely impactful, and you can make a very, very big difference by choosing wisely.
Thank you. So thank you, Joe. Thank you, Romina. Excellent conversation. And as mentioned, if you want to hear more from both these guys, then listen to the Searching for Mana podcast in collaboration with the FinTech Times. Cheers, guys.
Thank you.
Next up are Jean Garian and Susanna Taylor from Early Metrics with a dual keynote on FinTech ecosystem insights in 2021.
Can I talk? Fantastic. Brilliant. Welcome, everyone. After yesterday, I believe some of us might be a bit slower today. And congratulations to the Italians here and online, and congratulations also to the English team. It's done well. If you want to take revenge, I've heard that you should order pizza with pineapple on it. The Italians don't really like that. So that might be one way. Let me see if that works. Fantastic. So I want you to relax and sit back because it's Monday morning, and I want to take you on a journey. I want to take you on a journey to space. So imagine you are Richard Branson. He literally went to space yesterday. Imagine you're on his spaceship, right? And imagine you're sitting there and you're flying to space, and what you see there is the Milky Way. What do you see there? Thousands of stars, thousands of bright stars that are rising. Some of them are super shiny, and some of them eventually will die. They will vanish, right? And this is a perfect reflection of the startup ecosystem. How so? Because every day, thousands of startups, the stars, are being created. Some of them will turn into unicorns. They will be super bright and will continue to rise and shine. Some of them, or even most of them, will die, right? They will not make it. And that's why our founders, Antoine Basquiat and Sébastien Payet, back in the days, 7 years ago, decided to come up with a unique rating methodology to cut through the noise, make this ecosystem, which is super crowded and vast, more transparent, and bring more trust to this ecosystem. Because at the end of the day, trust is the ultimate currency, right? And you can think of Early Metrics as a bank that is sort of a bit middle person that saves our clients money, time, and as I said, brings more transparency and trust to this ecosystem. Because at the end of the day, trust is the ultimate currency, and without trust, there's no transaction. So how do we bring more transparency and more trust to this ecosystem? With our unique rating methodology, which we've developed 7 years ago. It's an algorithm that essentially looks at 150 data points, which is broken down into 30 criteria. And those 30 criteria are then again broken down into 3 key pillars: the team, the project, and the market. So what do we exactly look at? We look at the complementarity of the founders. We look at their capabilities, their skills, their experience. What kind of soft skills do they bring to the table? Then, of course, we look at the project. We look at the product development. We look at where does the innovation come from, right? If you look at the challenger banks, the innovation comes not from the offering in itself. It's mostly the way the customer experience has been reinvented almost, right? And then we look at the project skills. And to finish it off or round it off, we look at the market, the addressable market size, the competitive landscape, and also the time to market. And overall, we've looked at 30,000 startups so far, and our algorithm has analyzed all those startups to sort of gather insights into the growth potential of those startups, the key success factors, et cetera, et cetera. And my colleague, my fantastic colleague, who I haven't introduced yet, Susanna, will share some of those insights specifically to our today's session, which is green finance, fintechs. And yeah, without further ado, I'm going to hand over to Susanna. And again, also on behalf of Early Metrics, I would like to thank Barclays Rise for being here. And it's a fantastic opportunity. Thank you.
Thanks, Dean.
So I think sustainability is often listed as kind of a fintech trend in itself, and we don't tend to go into too much detail about what that really entails. So what we've done today is had a look, as Jean mentioned, through our database of almost 4,000 rated startups to establish the biggest kind of trends and emerging technologies within that database. So obviously it's very clear that corporations, funds, small businesses are all becoming more aware of the need for those solid ESG credentials. And emerging fintechs are springing up to meet these challenges. So for today's purposes, we've identified 3 key areas: impact investing, green banking and payments, and ESG tracking and reporting. And you can see on the side here some examples of what each of those services consist of. And I think it's interesting to note that the technology we're talking about here, particularly in terms of the more consumer-facing products, is not necessarily, groundbreaking. We're talking about relatively well-established functions like APIs and open banking, using data to personalize services, excellent UX and UI, and in some cases, just good old-fashioned planting trees. So in my opinion, the real appeal and innovation of these services is what they're offering the user, and these are the 4 elements we've identified at the bottom of the slide. I know they sound a bit buzzwordy, so here's what we actually mean by them. Visibility, so a promise on the part of the service provider to disclose exactly how and where deposits are being used. Transparency, they're in the wrong order. Anyway, so agency, giving choice back to the consumer. So maybe they have specific requirements. For example, they only want to invest in halal companies, or they prefer not to fund natural gas projects. They're able to customize and tailor the services they use to align with their values. Visibility, so clear metrics in order to track both financial performance and environmental impact. So for example, I might be able to receive cashback in return for making a low carbon purchasing decision, or an app might be able to alert me if my spending this week is about to reach a certain threshold of carbon emissions. And none of these things really matter if the app or the platform or whatever it might be doesn't work well. And I think, as we know, this is one of the advantages that fintechs traditionally have over incumbent service providers. It's that they tend to be digitally native, simpler, more intuitive, and more engaging. So on the next slide, we're going to take a look at some of the context that is allowing these emerging startups to flourish. And we focused here on the UK, but of course some of these points are applicable globally. Firstly, in terms of policy, so after Brexit, the UK and in particular London is really jostling to retain its position as a leading centre of financial activity on the world stage. And with international banks starting to move their headquarters abroad, it's increasingly looking like London might be at risk of losing out in this process. So Bloomberg has found that sustainable investment products are set to be worth over 53 trillion by 2025, which is more than the global market for corporate bonds. Which means that in Europe, with the leader of kind of the green finance environment not really established, London is very aware that it has an opportunity here that it really needs to seize. And that's reflected in policy. So for example, in last year's 10-point green plan, the final point was a pledge to make London the green finance capital of the world. Then there's the changing consumer landscape, in particular when it comes to investing. Whether it's because of the availability of information or the immediacy of the threat, the generation of investors that are now coming of age really care how their money is used, and specifically that it's not contributing to the demise of the planet. So the rise of ESG products is coinciding with this coming of age of millennial capital. These are people with financial resources, a point of view on how their money should be used, and nimble enough portfolios that they can make the transition to sustainable investing without it being overly difficult or costly. This is more speculation than anything else, but I also have the impression that events like GameStop and things like that are starting to turn on a much younger generation to the idea that they can get involved in financial markets without necessarily having huge access to capital. So increasingly, this kind of investment market is going to become more and more democratized, which will result in a wider base of generally younger and generally more sustainably minded investors. So even if you don't necessarily have the resources to, say, make strategic investments with your savings, which a lot of young people don't, you can control how your pension is managed. So Cushion, which is a net zero pension provider, has found that switching your pension and investments to a sustainable fund can be 27 times more effective in the fight against climate change than veganism and not flying combined. And many consumers are making the choice to make this switch. I think when PensionBee, who we just heard from, launched their sustainable fund, £100 million worth of funds were switched over to it within 34 days. I think this generation, as well as others, are becoming increasingly wary of those traditional incumbent service providers. The lack of visibility and control is leading to something of a trust gap, as well as accusations of greenwashing against companies who are traditionally perceived as not necessarily concerned with consequences. That said, most of the big banks have pledged net zero by 2050, but that is a long way off, and in the meantime, agile fintechs are springing up to fill the gap. And of course, this is all reflected in VC activity. So investment into green finance started to accelerate around 2019, grew 50% in 2020, and is set to outpace last year again this year in terms of deal count and value. It's also worth noting that there's been over 2,000 studies conducted into this since the 70s, and all of them point to a positive correlation between ESG and financial performance. So all parties really do stand to benefit. So now we're going to take a quick look at the technology that's actually powering these solutions. The big one is obviously data. It's kind of, in a way, what enables all of these services, and they wouldn't work without access to these vast swathes of user data. It's what enables, for example, an alternative investment fund to build a plan personalized to your values, and then an AI robot that can advise you along your investment journey. It's what allows green banking apps to track the carbon impact of your spending and reward or penalize you in return. And it's what is going to enable us to massively scale up ESG reporting without relying on increased time or manpower. So open banking really is linked to data, but it means that these integrations mean that they can now sit on top of your bank account and understand your spending in order to give recommendations, make assessments, calculations, and so on. Artificial intelligence, similar to data, is heavily implicated in a lot of these different services, particularly when it comes to automated or predictive features. But it's of particular interest when it comes to ESG reporting. We're starting to see that algorithms can be trained to detect market events that will possibly impact sustainability, use natural language processing and machine learning to extract vast amounts of information from unstructured data, and even in some cases analyze sentiment to establish the credibility of ESG claims. And lastly, distributed ledger technologies and blockchain. Obviously, their key selling point is the immutability and therefore total trustworthiness. So if you imagine a company is able to store their ESG credentials in the blockchain, it would be very, very difficult to doubt or query. Just move to the next one. Yes. Thank you. So as G mentioned earlier, we've got a database of almost 4,000 rated companies, and we also have a continuous process called backtesting, where we check the accuracy of our model and also ascertain the growth and survival rate of companies rated in years prior. And this means that when we look into our database, we can extract certain trends and patterns. So for today, we have looked at our database as a whole compared to fintech companies within the database, and then specifically sustainable fintech companies. And that's enabled us, using the backtesting data, to actually understand the top criteria for startups of this kind to be successful. Number one, perhaps unsurprisingly, is the ability to finance the development of the company. So that means essentially having the cash runway available to execute the technical and commercial development plan. And this is very, very closely linked to point two, which is ability to convince. And what we mean by this is the ability of the founding or management team to onboard relevant people to the project, which is obviously crucial when it comes to raising funds. Number three is availability for the project. Often we see, particularly with early stage startups, that the founders might be dedicating maybe 20, 30% of their time to the new endeavor, and the rest is dedicated to elsewhere. And obviously that has a negative impact on the development of the company. Last year, we actually worked with the Barclays Rise and Techstars Accelerator program, and we saw several instances of founders who, in the process of the program, realized they needed to be dedicating 100% of their time to the business, made the decision to do so, and had a really profound impact on the way that their company developed. Number four is commercial traction. If a company has been operational for a while and is showing no clear signs of commercial progress, then that instantly throws up a red flag. The earlier a company starts to establish its consumer base, the more assured its future is. It means that the product market fit has been validated, and they're starting to capture market share over their competitors. The last point is access to networks. And again, we saw with the Barclays Accelerator program, you really cannot underestimate the impact of good mentorship and access to relevant networks. And it's not just about raising funds, it's about leveraging outside expertise in order to make sure your product is developing in the right direction, or to create commercial opportunities. So then we've looked at how sustainable fintech companies compare to our database as a whole. It's interesting, fintech companies generally versus our database averages, there's very little difference. But there is a fairly significant underperformance on the part of sustainable fintechs. Particularly in the qualitative elements, which are the things that Jean mentioned right at the beginning of the presentation. Sustainable fintech startups score lower than our average, and the project and market score are most effective. If we move to the next slide, we can understand a bit more about that. So the project score is adversely affected by what we call a lack of innovation. And you can see here that 80% of these companies are web platforms or mobile apps, which means they're not really developing strong barriers to entry against competitors in an area where the competition is particularly dense. The difference in funds raised can also be understood a bit better when we see that 70% of these companies are early stage pre-revenue startups. So they're at the very beginning of their journey, essentially. What we can really see from this is that this is clearly a burgeoning market which is developing very, very fast and has enormous potential. We've seen a massive proliferation of solutions recently, and ultimately it remains to be seen which ones will win out to dominate the market. Thank you very much.
Great.
Are you hungry for more content? Or hungry to meet other people on the Brella Intelligent Matchmaking platform? Or just simply hungry? Use your lunch break as you desire.
letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS.
The future of finance is sustainable. Joining us for a panel discussion on the purpose economy is Peter Kinane, Director of International and National Initiatives at Innovate Finance, introducing his panel members to you.
Well, good afternoon, everyone, and welcome back to Fintech Week London this afternoon. We are indeed here to discuss the future of finance and its sustainability. My name is Peter Kinane, and with me on the panel today, I have a collection of guests that are going to bring to you a really great discussion around the purpose economy and what we can do to make it more sustainable. For us collectively, the breadth of this subject around the sustainability of business practices, the health of our planet, the growing importance of the greening of finance and fintech, and the impact through the value of driven consumption is very key to all of us. And we're very conscious, of course, of the increasing awareness of consumerism in these issues and its importance to the future of our financial services, whether that's through our personal finance, our financial wellness, financial inclusion, and the really important role that financial services and fintech increasingly plays in this space. I am the Director of International Initiatives at Innovate Finance. Innovate Finance, of course, the UK's preeminent trade organisation for the global fintech sector. And for us, the role of SMEs in this space, supporting consumers and businesses, is key. We are working towards developing a policy across the entire ecosystem to create opportunities for partnerships to stimulate new solutions and to link with those people making these decisions, which obviously have an impact on our lives. And it's therefore a very important discussion for us, but less about me, more about the great guests that I have with me today. I'm introduced on the panel by Tiama Hansen-Drury, who is the Chief Product Officer at Mina. Tiama joined Mina earlier this year and is helping to drive the firm's mission to become the leading subscription management platform. The firm, as it expands through Europe and continues its growth into new and exciting markets, including the United States and Australia. She brings over 15 years of experience in driving product-led growth, most recently as EVP of Product at consumer data platform company Dynata. And before that, EVP of Product at enterprise research platform firm Zappi. Previously, she held senior leadership positions at Kantar and WPP. So we're really pleased to have Tiama with us. Mina, of course, is a subscription management services firm via main banking apps. Also on the panel today, I have Matt Hyam, Chief Digital Officer and Sustainability Lead for Enterprise at Microsoft UK. Matt's roles centre around creating market disruption through deep partnership with our customers, with their customers. He is a passionate leader in the use of technology for social good and for working in harmony with the planet, its resources, while securing a more equitable future for all. Matt leads co-innovation to create market-leading solutions, working alongside product engineering and research teams to bring science-based impact and transformation. Matt also sits on Tech UK's Climate Strategy and Resilience Council, which provides the strategic direction for all industry activities related to climate risk, resilience, energy transition, and net zero carbon. So really pleased to have Matt here. And of course, Microsoft's sustainability efforts include their recent partnership with NatWest to help UK businesses better understand their carbon footprint and create tailored action plans to reduce their carbon emissions. So welcome, Matt. And we also have delighted to have Adi Engel, who is the Chief Marketing Officer of Visita. Adi is responsible for leading Visita's strategic thinking, global marketing objectives, and supporting micro and small businesses on their journey towards success. Digital transformations, coupled with her own business acumen. Adi has a host of experience and consumer-centric product knowledge, and she constantly brings into new, innovative and company-wide initiatives that are guided by her passion for enabling the inclusion of the underserved. And Adi and Visita manage clients, appointments and payments from one single app. So panelists, welcome, and thank you for being here this afternoon. Matt, let's start with you and let's get this discussion going around the issue of sustainability. As I've cited there, Microsoft have taken significant steps to not only, lean towards carbon neutrality, but by being carbon negative, have partnered with NatWest, as I just mentioned, to help businesses better understand their carbon footprint. What role do you believe the tech, financial services and fintech sectors should be playing in driving this important agenda forward? And what more do you think businesses can do to address this global issue?
Thanks. Yeah, I think the best thing we can do is support each other in democratizing technology into the market at speed and at pace, leveraging our size and scale, certainly on a Microsoft perspective, so that we can help startups and fintechs to be able to really scale beyond just that immediate innovation piece. But the key part is, whilst we're doing that, we're changing the voice in the boardroom. We spend a lot of time in boardrooms, and there are kind of three camps that are emerging. The ones that think they can creatively account their way out of this, the ones that are diligently waiting for regulation to comply, and then the ones that want to be leaders. And we want to be seen as those leaders where we're inverting our superpowers back to the market to be able to change the game. And I think the more we can do that, the more we will convert the boardrooms to be more accountable and responsible.
And with Microsoft and the role businesses like Microsoft playing such an important role in improving transparency and accountability across financial services, what further do you think your firm could do in that space as well to improve that accountability?
We're hugely invested in partnerships with organisations like the CDP, the WBCSD, the World Bank and the Bank of England to try and open up transparency around disclosure, setting the standards. We don't want to create a new standard, we want to bring to bear the power of technology so that we can democratise the transparency of that, so open up the transparency of the data. We're no longer blocked by technology, we can do this at scale, have multi-party data ecosystems in an open data mechanism across varying different industries. The data is there, we're just not surfacing it in the right way. It's still in lots of silos being held behind doors of intellectual property and monetisation. So we really need to change the culture. So a lot of this is what we're trying to bring to bear into market.
Tiana, I see you shaking your head vigorously there. You got anything that you want to sort of lean into that as well in terms of the importance that the role of data has to play?
I mean, I just couldn't agree more. I come from, previous to this, it was all around connected data and building different products off of that. And it's just always so frustrating to see an organization that has so much data at its fingertips but doesn't understand how to connect that in a way that is tangible to business outcomes. And in this case, green is business outcomes. So I just say more power to them and helping them understand how to do that, right? And allow that transparency, because most of the time these organizations, they just need help. They just need a bridge to be able to know how to do that.
For sure. Thank you. Adi, Visita uses technology. I mean, going from the size of Microsoft to a firm such as yours, you use technology to help SMEs to better serve their clients, and you've spoken previously about the importance of ensuring digital and digitalisation is not exclusive. In your view, what can we all do to drive greater digital inclusion? What are the benefits for all of us in doing that?
I think when it comes to digitalization, obviously there's the power to democratize. Obviously there's the power to allow the consumer or the small business owner to actually own their own data and use it as they see fit, which is extremely important. But there's also the likelihood that we actually block out the people who are not as comfortable with digital environments as we might be, who do not have the guidance or the tools to use that technology. So I think the greatest example is we've seen a lot of digitalization of financial institutions, and that works for scale, and that works for them to ingest data that is supposedly creating equal opportunities, because data is in itself non-biased. But at the same time, if I was a small business 20 years ago and I wanted to get access to finance, I would have to write down a business plan. I would have to print out all of my invoices, proof of the fact that that I'm a viable business, and then I would have to put on my best suit and go to the branch and see the branch manager that I probably know since I was a teenager, because I've been, and they would basically vouch for me, right? That would have been the underwriting process 20 years ago. And nowadays, as those branches are closed, and we've seen that during COVID as well, where people couldn't actually get physical access to bank branches, we are asking those businesses to figure out basically how to communicate with the ecosystem on the same level and with the same language of the ecosystem. So how do we do that, and how do we not only make sure that the ecosystem itself, the financial institutions, with the support of businesses such as Microsoft, do the transition, but we also go to the small business owners and allow them to go through the transition as well in their own terms, in their level of comfort with what it is that they're doing. So yeah, I mean, we have to look at both sides of the equation. We have to make sure that the small businesses are being supported in doing this process as well.
I mean, you talked there about the importance, or the historic importance, increasingly historic importance of the bank branch, the bricks and mortar. It makes us think, obviously, the financial institutions across financial services in the city that obviously still have a key role to play. And Tiama, I know your firm, the technology you've got equips those same institutions, to give consumers a greater control over their financial wellness. I mean, do you see the links between digital inclusion, financial literacy, education, and how do you see that all coming together, and how might this help in the ultimate goal of improving financial wellness?
Yeah, I mean, I think about the journey towards financial wellness as being kind of an evolutionary process, right? So it starts with really understanding the basic concepts, and then understanding those concepts and the greater context around them. So how do they apply to you? Then putting them into place, applying them actually. And then capability, building confidence. So it's really difficult to try to achieve financial wellness if you don't understand your own financial situation related to basic financial concepts. And if you don't have the opportunity to put that knowledge and that understanding into practice, you're not going to build up the confidence to really feel like you can reach financial wellness. So when I think about it, it's about how do we build literacy with people so that they can then go on and build confidence to take a wellness approach. And so, Mina, I mean, one of the things that really appealed to me about it is being a consumer who is part of the rising, subscription economy, right? We all have so many subscriptions, and yet people don't realize how many they have, right? So when I think back to that process, one of the things we do is we help you understand that actually you have this many subscriptions, right? That's one thing. And then two, how can you manage those? Okay, how do we, again, going back to that evolutionary process, so now you understand the concepts and you understand that you've got these, how do you actually take control of those and then make that easy, right? And so that's what our tech does. It basically allows you to identify that you've got those subscriptions, which most people don't realize how many they have, and then take control of them. And so, by making that available within the financial incumbent banking world, like within the mobile app, we really democratize access to a group of people that aren't necessarily the folks using Starling or Revolut or Monzo, right? But they tend to be the people who have the more, the relationship with more of the incumbents, right? And so that was really the thing that appealed to me, is opening up financial literacy and the ability to build, confidence towards wellness to a portion of the population that maybe is not digitally native, right? Does that make sense?
Of course. I was just thinking as you were talking there, I mean, we've been through a very traumatic period for society, a large economy over the last 17, 18, however long it is now. I feel like I've lost a year somewhere in the middle there.
I think we all have.
What time is it? The importance over that time of increased awareness of financial education, financial inclusion, knowing where our apps sit, actually reaching out to those areas perhaps as a society that were not previously as well connected to financial services. I mean, question for all of you really, how do you feel that is progressing? Is it something that if we were to take one positive away from this awful year, I mean, is that one positive we can take away?
Who wants to go first?
I could. I think there were amazing commitments that were made across the ecosystem to support, in our case, it's small businesses. In many places, it was consumers. I think the commitments have been made about 12 to 14 months ago, when people realized how this is going to be a long game. And what we see right now is that people are actually looking for ways to step up and actually make the commitments that they've made last year. So we've been in this business for 10 years now. We have seen unparalleled commitment, and we've been to some amazing discussions that we haven't been in the previous 8 to 9 years. What I do feel, however, is that people might still be scrambling, trying to figure out how does that work? What are the new rules? How do we work together to facilitate all of those commitments that were made? But definitely you have to start somewhere, right? And the first step is by making a public commitment to what you're about to do.
Do you have anything to add to that?
I think there's a lot of positive trends in terms of adopting digital banking and digital finance apps, right? We all know the stats, so I won't bore us with them. And that's been great progress to see during COVID. But at the same time, we've also signed up to more trials for new products. We've also signed up for more services. And my biggest fear with those things is that you have a tendency to spend much more than you realize. And if you don't get out proactively ahead of that and help a consumer be aware of that and take control of it, you can have, subscriptions, I speak from that perspective, are a great thing, right? They help businesses to tap into segments of the market who can't afford their services up front. They're great for consumers because you can pay over time, right? But those things are nothing if what they do is they just eat up more of your spend in a way that you're not conscious of and that you're not doing as part of strategic wellness, financial wellness. So, I think great to see so many trends that are positive this year, but I think companies like yours and, the work that Microsoft is doing to make sure that there's enrichment of data and awareness around that is critical. I'm sure Matt could build on that.
Please, Matt.
Yeah, I think the last 18 months has held up several lenses of our fractured relationship with planet, society, and a number of different things. And it's been quite shocking, the realization when you really look at the data that sits behind that. Even children's access to devices within the UK alone, trying to get access to education that they are supposed to be able to get access to. So how do we combat that? And I think it goes back to partly to do with financial literacy, but also sustainable and social literacy. Is the impacts that we can interconnect those three elements. Then we can start to really empower it through technology. And I think that's the key word, is it's all about empowerment. How can you empower someone to live a more sustainable lifestyle? Or how can a company become more sustainable? How do they understand the difference between financial well-being and the value exchange into sustainable well-being? You've got this superpower of data now, the amount of data that we're consuming about people. We should be able to start instigating behavior change towards a more sustainable lifestyle. And that's the key part for me.
And in terms of the last year and perhaps looking forward to the next year, how well would you score us, Matt, in terms of reaching for that goal? Poor at the moment.
Because it's been the year of commitment. I mean, which is great. It's the first step. It's a perfect step. Let's get scaled execution. Through partnerships as well. Stop trying to do it in a silo. There's probably so many organisations that are still trying to set the greatest standard for sustainability metrics or financial well-being metrics, rather than clubbing together, agreeing on one standard and just moving forward. It took us 18 years to confound around one standard for financial reporting. We haven't got 18 years for sustainability or socio-economic gaps. So how can we start working in a much more open and collegiate ecosystem rather than trying to just look at the competitive advantage?
And what steps do you think we could be taking to close that socio-economic gap? I mean, what are the immediate things that we could be doing, and perhaps what are the things that we should be thinking about over the next couple of years?
For me, it centres around 4 T's. So really, I guess it's transparency for obvious reasons. It's setting a target, then setting a plan for transition, that absolute execution plan, and building trust through partnerships. If we can all follow those 4 kind of mantras, then I'm sure we'll move forward a lot quicker.
Thank you. Actually, I'll throw this one to Addy, if I may. Around the experience that we have of more effectively engaging with our consumers, and it sounds like we all need to collectively make that happen to meet some of Matt's goals in terms of the next couple of years. I know you have experience of talking to both the public and the private sector, and we've seen so much of that sense of collaboration over the last 12 months, 15 months. How can we build from that to be truly effectively engaging with our consumers, in your view?
Well, I think possibly the biggest gap here is, again, finding the consumers where they are, as opposed to remaining where you are. It's almost like, in the same way that Matt is seeing siloing of data, and we're seeing that as well, there's also siloing of content. You can see that during COVID, almost all big institutions, whether governmental or financial institutions or associations, anyone supporting consumers through this process, they all launched a support hub or a learning center, or they've created their own content, of course, and they've put it on a very fancy link on their site. And how would consumers even know that it's there? I mean, consumers aren't looking, first of all, specifically on our sites for this content, and also they are bombarded with different versions of the same content. So if we were to be helpful to them in any way, we need to first of all curate ourselves, and by the way, partner around those areas as well, and then find them where they are. On social media, for example. Is it beyond us to actually go on TikTok to make those things available? I wouldn't even know how to access it, but I'm sure, them being the main sponsor of the match last night, people know how to find them, and this is where they are. And I think if there's one thing that kind of I find incredible throughout this is, we talk to people. They show us the infrastructure that they created. We ask them, how many people do you have on this? How do you get people to engage with this? And to be honest, most of them, some of them did, and they're great in leading this trend, but most of them didn't think of this through. So I think, as much as working on top of those platforms might have some commercial complications, might require some extra work from our end, we need to make sure that we make ourselves available to whoever we're trying to support, and not the other way around, because content out of context or in silo means nothing. So that's where I would start.
And here was I hoping to get through this without mention of last night as well. Matt, if I can just come back to you on the point around inclusivity. We've talked a lot about the connection with consumers. What about the smaller businesses? Because I appreciate their needs will be different, and Microsoft has transformed all our lives as well in many ways, particularly over the last 12 months. What's the important connectivity there with this agenda for the smaller businesses?
Yeah, the SMB market is pivotal to sustainable and financial well-being of the country. I mean, it's absolutely pivotal, but they don't have either the financial capital fluidity to be able to make huge investments in digital or anything else, or fundamental changes in their operating structure. So how can we work in partnership as a big organisation to help that happen? But the other part is give them the tools so they can understand their Scope 3 emissions as well as their inclusion in others' Scope 3 supply chains. So at scale, simply and easily, without having to incur vast amounts of cost. And then it's working with them to understand how we can really change the game with regards to financial markets. I mean, we're doing a lot in things like residential homes in the UK, which carries a huge amount of embedded carbon, poor energy efficiency, but it's going to cost 51 billion over the next 10 years to transition residential homes in the UK alone. That's a great market for the SMB market to be involved in, but they can't all do it at scale. So how can we really lean in to help them support that?
And Tiama, are you finding that some of the companies, some of the larger firms you're working with, are they going through a similar sort of thought process to what Matt's outlined there?
Yes, but I mean, I think there's something in both what Matt and Adi were saying that it's interesting and we should really hit on, which is like, you don't have to do this all alone, right? This concept, for the last 4 or 5 years, people have been talking about embedded finance, but really let's talk about embedded fintech and the partnership element and the ability to either go, as you say, where they are, where the consumer is, or bring it in where you are. And I think one of the things, a great example of that is, there's lots of fintech companies in the space that enrich data within a consumer's trusted environment, right? And so the companies that we're working with, they're dealing with that, and they can bring in green context, right? They can bring in green context to the spending data within a retail banking environment, help a consumer understand the green footprint of their spend, right? Understand the ESG profile of their spend. I think it's something that's really important. You know, the big established institutions in general, whether you're a finance institution or you're a publishing institution, it doesn't matter. The thing you have in common is it can feel prohibitive to move quickly. And I think the most important thing that I would want people to take away from this is that embedded fintech gives you a wealth of tools that allows you to connect to the consumer in a way that gives them the information that's necessary to help them feel more in control of any of the ESG stuff, whether it's green sustainability, financial wellness sustainability, right? Any of those things. So I think that's something that's important that we hit on, because we're all three saying it in a certain way, and yet you were talking a little bit about the boardroom flavors that you get, right? And we probably all know those with the big financial institutions too. There's the people who kind of see the hopefulness of bringing in partnerships versus there's the people who think they need to build it all themselves. And we don't have 18 years, right? We need to move faster. And I think partnerships is one of the best ways to offer that context and those better services to consumers. So not to go off track there, but it's an important point that's linking across all three of us.
No, absolutely, and that linkage between the angle from which we're all coming at this is very clear, and I think you're absolutely right. It is time critical.
Yeah.
We've lost 12 months. We've got to make so much time back now, and look forward to the next 12, 18 months and see what we can do collaboratively, collectively to get through this. We've talked about a lack of transparency even. And available data, and it seems it could be really challenging to be a fully conscious or conscientious consumer in today's market. Tiama, coming back to you, if I may, how are again the financial services, the fintech businesses supporting and facilitating people's needs to make more conscious buying decisions, and what can we do more in the way of data standards and policy to support them?
I won't get into data standards as much because I think Matt can probably add a lot to that. But what I will say is that you have an entire segment of the population now who is consciously making a decision to avoid call centers, right? They're consciously avoiding anything that makes them do anything that's not a digital experience, right? And so if you're not looking at what is the customer life cycle, what is the journey of them within your application or within your environment, and saying, how am I going to enrich that at each point with a digital experience, you're not going to be serving a conscientious experience to your population set, right? Because increasingly the percentage of people who are refusing to call in and ask a question, that number is skyrocketing, right? So thinking about, how do you empower these people, which is, at MENA, that's our tagline, empowering the modern consumer. Well, I don't know, don't make it more complicated. Think about the customer journey, think about what are the steps that they need, the pain points that they have, and how can you make that effortless, right? How can you make that, painless? And, it's just a really practical example. The biggest pain point, consumers have with subscriptions, aside from knowing that they have them, which I've already spoken about, is canceling them. Right? They don't want them, but they don't want to spend, who here has had to try and cancel a subscription where you end up getting stuck on the phone with God knows who and God knows where for however long, right? And so bring that to the front of the app, make it easy, right? And you can just take that type of idea about the pain points across the journey and try to bring conscious control to those consumers. And it doesn't have to be as complicated as we make it. We don't need to get lost in all the technology. That's my biggest advice is strip it down to the bare essentials. Try to explain it to your grandmother, right? The pain points that someone is going through, and then look to add value to that. Digital makes it easier than ever before to do that.
Sure, I hear you on that. Ali, to add to that in terms of your own experience, a viewpoint on that same question around, the easing, facilitating, people to make those sorts of decisions.
Well, we've been taking the same kind of big business technologies to the small business sector, and we're allowing small businesses to engage with their customers on very much the same level. Can I book my next session online? Can I make the payment online? Can I get a quote and approve it online? And this, I actually did have a presentation that said something like bringing big business tools to small businesses at some point, many years ago. But, and I think what we're seeing is the same kind of transition for that sector, which eventually is the majority of businesses in any economy. We're talking about 90% of businesses that are out there. So a lot of the day-to-day interactions of the consumer are with these types of businesses. And I remember I once had a conversation with a person who was consulting small businesses about their process. And many of them start off by saying, this is not interesting to my customers who are local and possibly not technically savvy, and they wouldn't know how to book with me online. And then he would ask them, do you shop on Amazon? Are you looking for reviews? Are you booking your own, whatever services that you're getting online? Are you paying digitally online? And of course, every single person in the room would say, yes, I am. And when you're asking, like, so who do you think your consumers are that are suddenly completely unable to do the same comparison process, the same payment process, the same booking process, if you are just a local small business? Of course, everyone is happy and willing and very much keen to have these kind of experiences, regardless of who they're interacting with. So definitely I can see this going throughout, from the biggest possible subscription service that I can have to the smallest, to my booking at the hair appointment tomorrow. I would want to have access and, the ability to make those changes online. So yeah, I can absolutely see that.
And Matt, we might not all have access to TikTok, but I'm sure we all have access to Microsoft somewhere in our lives. I mean, does that ring true of your thoughts around the lack of transparency and the data point? I mean, what do you think we can be doing to sort of ease some of the challenges that we've heard there?
I think we touched on it earlier, but a lot of data was seen as the new oil for so many years. We've been talking about that for the last 20 years, hence why it's been ring-fenced. It's got value exchange based upon intellectual property or monetization or some other kind of hyper-growth within market. We've got to start tagging data with different value metrics. And we've got to be holding those value metrics up as important as the economic growth. So the socio-economic impact, the planetary impact of that data, especially if we can collaborate across either geo-borders or industries or organizations. And until we do that, we're not going to see that proliferation. There is the other arm, though. We've now got the move of the new style of internet people. I think 768 million people have come online in the last 2 years. Using that level of data, the data you get from that consumer, we're triggering everything around cost and usage and all that kind of great stuff. Well, how can we also use that data to trigger behavior change around sustainable, or even triggering people more into the circular economy, reuse, sharing, all of those kind of elements, and the regenerative capitalism that's available in all of the assets that we continue to buy. But we've got to be able to demonstrate that end to end across the pipeline. So we really need open, transparent ecosystems to be able to do that.
Thanks, Matt. And as we round out our discussion, I'm going to ask each of you if you would have a call to action to present to our audience over there, in terms of what you think we should all be doing to build on the purpose of economy and the sustainability of our financial system. Matt, I can probably take a punt, but please tell us what you would do, what our audience should be doing.
Be as creative and as bold as you possibly can. Don't just reach for compliance, reach for new opportunities.
Short and succinct and very important, of course. Tiama.
Humanize it and work on it now. Like, do not let complacency or waiting around for someone else to tell you how to do this. Just humanize it. Think about your own experience. I think Addie did a great thing of trying to humanize her conversation with her customers about, do you purchase on Amazon, right? Like, don't overcomplicate it. Humanize it and try to act quickly, because time is ticking, and every minute that you let go by, you're responsible for the impact that that has.
I would pick up on that and say, yes, basically say what you mean. We've seen over the last couple of years a huge kind of call to action to say, go online. All businesses go online. This is your way forward. But how does that translate? So if I'm a fitness instructor, am I to be Joe Wicks now? Or if I'm, if I'm a corner shop, do I now become, an Amazon seller for my, dairy products and my, the bread? And I think in that respect, we have to stop using, slogans and just be very specific and also personalize and humanize what it is that we're suggesting that people do. And I think in that respect, we have to, yes, shed a lot of layers of marketing talk and, shed potentially a lot of layers of, loyalty to our own brand and just start telling people, this is the way forward, this is what you need to do, here are the tools as well as the content, hopefully on top of a single platform, and don't go shopping for it. And yeah, I absolutely agree with everything that was said before.
So in conclusion, I think what we want to get the message that we want to get across is, obviously, of course, technology and fintech have a really important role to play in unlocking that gap between the consumer experience and the company experience and our ability to access services. We are very conscious of the need to address issues around transparency and available data. And from all of you, what I've heard is the clock is ticking. We have lost time this last year. We're losing time all the time. But actually, there's a lot that we need to do in terms of ensuring that some of the socioeconomic gaps are filled. And actually, there's a really important role that all of our firms can play here in achieving this. And you, the audience, can also participate in this important work as well. Unfortunately, we could not have Joe Wicks here with us, but I was absolutely delighted to have Tiama, Adi and Matt with me today. My name's been Peter Kinane, and this has been a fantastic session. Thank you very much. Hope you've all enjoyed it at home.
Moderator Johnny Paul, founder and director of Fintech Week Tel Aviv, presents a panel on true financial inclusion is not just an aspiration, it's our collective future.
Good afternoon. It's a pleasure to be here. My name is Johnny Paul. I'm the founder and director of Fintech Week Tel Aviv, an annual Fintech Fest in Tel Aviv. It gives me great pleasure to be here and to have such esteemed panelists talking about a hugely important subject. So over the next 40 minutes, unfortunately we can't take Q&A from the audience, but over the next 40 minutes we're going to delve into the discussion around true financial inclusion. It's not just an aspiration, it is in our collective future. So before I introduce my esteemed panelists, I just want to look at a quick definition. Financial inclusion means a lot of things. So I'm just going to use the World Bank definition as a pivoting point. Financial inclusion means that individuals and businesses have access to useful and affordable financial products and services that meet their needs. Transactions, payments, savings, credit and insurance delivered in a responsible and sustainable way. I'd like to first introduce our panelists. If we can start with Guy on my immediate right. If you can please introduce yourself and your companies and what you do.
Sure.
Guy, thank you.
Hi everyone, my name is Guy Kashta. I'm the co-founder and CEO of Rewire. At Rewire, we provide financial services for migrants across Europe and Israel. We are licensed in both territories and we serve over 500,000 registered customers.
Lee?
Hello everyone, my name is Ziad Idris and I am the co-founder and CEO of Algebra. We are a UK-based fintech that is focusing on values-based and socially conscious consumers in the UK and beyond.
And my name is Mariana Gospodinova. I'm the General Manager for Europe at Crypto.com. We are a company that facilitates the adoption of cryptocurrencies across the world. We have a number of financial services licenses, as well as we have the first virtual financial asset services license issued by the MFSA. We don't have a single location. We have multiple offices across the world. I personally sit in Malta. But I do have colleagues all over the world with large offices in Hong Kong, in Singapore, in Sofia, Bulgaria, and many other locations.
So as you can see, we have a very diverse panelists here. And my first question is, obviously you heard the World Bank definition. What does financial inclusion mean for you? And we're going to go into post-pandemic, the recovery period. But if you can just give me an outline of what does it mean to you at the moment. Whoever wants to take that away, take it.
I can start. I think that the World Bank definition is great. I think one thing that it is missing is about the educational part of helping the populations who are either underbanked or underserved today use those services which you make accessible and build for them. Because if you just build it and make it accessible, it's not always enough. Because in many cases, this is the first time an underserved population would have access to such services, especially if you're looking at investment, savings. So payments is today broadly used. And then if you're making that accessible, it is fine. But when you go into more complicated services like credit, insurance, savings, in my opinion, the educational part and helping customers use it, incentivizing them to use it, to build a better future for themselves and their families, especially in the context of migrant workers, in my opinion, is a critical part of financial inclusion.
Thank you, Guy. I agree with Guy as well. And I think in particular, I'd focus on the part that in the World Bank definition, focusing on fits the customer's needs. And there are a lot of financial services out there. There are a lot of solutions. But I think it's important that we actually provide products and services that actually fit consumers' needs. And I think, this is a journey. This is not something that can obviously happen overnight, but it's a recognition of understanding that there are a diversity of different needs out there, and that the industry needs to react to the diversity of needs, whether it's migrant workers, whether it's people who maybe have different kind of needs from the geographies they live in, or their countries of origin and so on, but also maybe some values-based needs as well, and some social needs as well. So that's, I think, also something that it's not just about the definition itself, it's about the execution around that.
Yeah, couldn't agree more with my co-panelists here, and definitely there isn't a single definition of financial inclusion, but what we have to look into is what is the availability of services and what is the quality of services provided. And unfortunately, the data that is being collected by different participants at large, by the World Bank, and then by central banks that are participating in this initiative is not sufficient, and is not collected at a very often period of time, so that we have particularly information about the quality, let's say, of the services that are being offered to people who are not financially included at the moment. Of course, there is plenty more data when it comes to the availability of services, because the central banks in each country have pretty established reporting when it comes to what kind of services the subject persons in each country would provide, but they don't have enough information as to what kind of society, what layer, what fabric of the society are these services targeting. And this is something that we all need to work towards improving, definitely.
Yeah, absolutely. And we're a proud member of the Emerging Payments Association, and we're also involved very actively in something called Project Inclusion with the Emerging Payments Association. And one of the things that we've been discussing there and working on is the definitions actually of financial inclusion and financial exclusion for that fact. And one of the areas that was, let's say, overlooked, but we're happy that now this has been addressed, is faith-based requirements, because sometimes there are requirements that are not obvious ones out there, but faith. So in a sense that again, being able to develop products and services that actually meet people's needs. And migrants will have similar requirements.
Yeah, I think you had a great definition. Financial products and services that are marketed as being for all are not financial products and services that are good for all. Is that right?
Yeah, definitely. Yeah. So they say that when you build a product, if the product is for everyone, then eventually it's for no one. And I think it is especially true when you're not part of the general population. So if you go to a bank and you're part of the general population, you get all of the services you need. But if you have specific needs, the bank doesn't specifically build things for you. And in my opinion, part of inclusion, and as you said before, and as you mentioned as well, when we build specifically, in our case, for blue-collar migrant workers, then the services may fit other populations as well. But if you are a migrant worker coming to our service, then everything there is for you. So it is accessible to you, it is tailored for your needs, we educate you on how to use those services.
Yeah. No, clearly what the co-panelists have mentioned makes a lot of sense, and what I have seen happening as well when it comes to financial inclusion is very often people would have a basic payment account, let's say. Your company, I think, provides payment accounts and cards attached to these accounts, but very often people would not use those accounts, and 50%, the World Bank has done a survey in 2017 asking people who are unbanked right now, why are they unbanked? Why do they not open a financial services account? And 50% of the people that were asked mentioned that they don't have enough money to open an account. They don't even know what to do with it. And if we speak of people who are currently out of the workforce, if we speak about people who are a minority, women are very often underrepresented when it comes to inclusion in financial services. It's also the role of government, not just the companies, to facilitate education, to facilitate, if you wish, the central banks to facilitate price stability so that people can actually plan their longer futures, for companies to participate and cooperate with the central banks and offer different programs that are able to attract migrants and people who are underrepresented and people who live in far-flung parts of countries that typically would not be really underrepresented when it comes to financial services, but just some people don't have physical access to points where they can get accounts.
Yeah. That's really interesting, and I think what you're touching on there, Marion, is really interesting. And I think also what Guy said in terms of maybe you might come from a minority that the bank is not interested in. You come from a specific segment. What's interesting about the segment that we are focusing on is that actually we come from a very large group actually, and by the research that we've done, just extrapolating World Bank data, there's roughly 800 million unbanked Muslims across the planet, right? So that's not a small number. When you actually look at the most unbanked countries on the planet, you end up with Indonesia, you end up with Bangladesh, India, Pakistan, Turkey, Egypt, Nigeria. So the data kind of tells itself there. What's interesting is even in more developed markets like the UK, like the European Union, there are still significant populations of second generation, third generation Muslims that are still underserved. The reasons for that, will be diverse and so on. But what I'm saying is that it's not only market segments that are small, that are uninteresting to banks. Sometimes they're overlooked or maybe misunderstood, so they're difficult for banks to get their head around. And that's where I think fintech can really come in, and services, whether it's like Rewire or crypto.com and so on, can actually help address some of these needs.
And what are the other obstacles while we're on this, while we're in this area? For the underserved and to use regular services, we talked in our prep call about providing proof of residency, for example, and how can alternative data fill in this gap?
That's a very good question. I'd like to start first here.
Please, yeah.
So data that is being required from people to open financial services accounts is very often not available. And it's not, to some extent, it's not the fault of companies, right? Because we all have obligations as licensees. We have to request certain type of information, but there are ways to go around this. And first, it again starts with the government. And central banks or financial services regulators have to measure financial companies depending on the population that they service. Maybe in certain regions, a proof of address is something very ubiquitous and everybody has it, and we can electronically verify our address or have an EID if you wish, but there are certain populations, as you've mentioned, where proof of address is impossible to obtain. There are people who are not able to even obtain a birth certificate or an ID card. And in such instances, of course, the easiest thing to do is localize your service. But as we know, the biggest impediment of financial inclusion comes also with the difficulty of doing cross-border transactions, because we cannot be based in every single country where we want to operate. We want to do this cross-border. We want to sit in a particular country where our team is and offer every service that we have cross-border. But for this, we need the regulators to understand the level of services that we're providing and to take the so-called risk-based approach, which has been implemented for years now. However, it does not quite work and is still not less prescriptive. For example, from my point of view, where I stand, I'm regulated by the Malta Financial Services Authority, and although the fifth MLD is already implemented and we're supposed to have the risk-based approach, there's still a lot of prescription on how to verify people, for example. And I can see the real difficulty of migrants to produce all the necessary documentation, although the thresholds that unbanked people would go into are extremely low, and practically we don't have to worry that much about money laundering or the financing of terrorism that we're trying to prevent with this regulation.
I'd like to add that on the optimistic side, there are two main obstacles around regulation, the way I see it, for overlooked populations. One is face-to-face KYC, which until a few years ago was required almost for every financial services in many countries. And the second one is, as you said, proof of address. And I'm happy to say that in most countries, both of these have either already changed or in the process of changing, led a lot by the European activities, and many countries are following that. When we look at the global expansion for Rewire, we look at countries where either have already made this change or are in the process of making this change, because there's a huge difference in making services accessible when you can make them accessible digitally to either overlooked populations or populations that are far from center cities, or populations that can't really provide the same documents as others. So it is the onboarding part in a financial services company that is regulated with specific needs, as you said, is a critical part of making your service accessible. So on one hand, we choose the countries where we operate based on that, but on the other, we are also working to change some of the specific local regulations in the countries where we operate. I'll give you one example. In one of the countries where we operate today, there's a recent law that allows you to do eKYC. But it only allows you to do eKYC for the general population. So if you have a local ID, a local citizen ID, you can go through digital KYC. And if you don't, you can't. Now, to your previous comment, I think in this case, it's not because of a risk-based approach. It's because it is too small of a population to actually take the time to spend and define the specific regulation for them. So it starts from a risk-based approach, but then overlooking the smaller populations, and then working with the regulators we've managed in the past to create specific exemptions in order to also provide our customers, based on a risk-based approach, the same level of digital KYC or remove a requirement of proof of address.
Yeah, but definitely, but when we speak of digitization of the services, we also have to look at the distribution of internet access, for example, because in rural societies where internet may not be as ubiquitous as in large cities, it's also impossible for people to access digitized services.
Yeah, I think my co-panelists have brought up very interesting points on 2-3 levels, actually. One is, I think there are very exciting developments taking place in technology that will allow us to actually be able to capture more people and serve more people. One is digital KYC. Another one is decentralized finance. So the technology is emerging, but the issue is obviously not just the technology itself. I think it's also very important for us as the industry to work closely with the regulators. It's not about trying to kind of work around the regulations, if you see where I'm coming from. It's working with the regulators to ensure that the needs are met from a regulatory perspective. But then there's also, I think, regulators need to think smartly as well at the same time. And where am I coming from with that? Which is populations that are not served digitally and that are not included. So therefore, it's not just about financial inclusion, by the way, it's digital inclusion in this case as well. Then they're going to be forced to utilize cash instead and traditional hawala networks. So if these populations are not served through a Rewire, an Algebra, or a Crypto.com and so on, then that would mean they're going to have to go into the gray area, and therefore you actually have no data on what's going on. So actually, from an AML perspective, from a KYC perspective, the regulator has a bigger problem on their hands. So actually trying to working for the industry to work with the regulators and for the regulators to also understand that decentralized finance, digital KYC, digital banking, global payments, there are ways actually where we can work together to actually improve. It's a win-win-win for everyone actually, in that sense.
Yeah, that's a very good point. Actually, one country that has done a tremendous work towards this is India. When they introduced the e-ID, the e-government ID, they were also paying people into payment accounts, digitally accessed payment accounts, and this actually decreased corruption, for example, by nearly 50% because funds were not misappropriated when it comes to cash payments. And then it also gave access of women and underrepresented minorities to payment accounts, which they could potentially use afterwards. But I think, Johnny, you've mentioned what are the obstacles, and one of the obstacles is not just providing the payment accounts, but also providing relevant means for people to use those accounts, because there are plenty of people who would have an account and they would never make a single transaction over the course of, let's say, 12 months, which makes those accounts inactive. And the reason why they can't use the accounts is either because the account is too expensive. If there is an account maintenance fee, for example, for a lot of the minorities, it's really impossible for them to maintain an account that comes with fees. Or if there are no relevant products attached to these accounts, if there is no credit or if there is no insurance that they may need, because it's not just about providing them, that's the basics, right? A payment account that you can execute transactions from, but then what are the additional services? How do you gain access to credit for you to improve your lifestyle and to make better life choices, or even to think about attaining a higher education? You need to have access to credit, right? And this, at the moment, is also an initiative for the World Bank, where they are working with companies. Probably you may have similar initiative. We, for example, do, where you can provide credit to people who don't necessarily have credit history or any previous credit for what it's worth, and you should provide this credit at a price that people can afford, and not discriminating certain levels of the population just because of their lack of access to financial services.
That's down to alternative data as well. It's using data savvily as well. And financial and digital literacy is hugely important, and providing sustainable products and services as well. So the mindset needs to change really, and I think the pandemic obviously has done a lot for financial inclusion. It's really put fintech under the spotlight, and the accelerated digitalization of the economy has given rise to new opportunities in the fintech sector, and we are fintech is seen as a force for good and under the spotlight now. What does the sector need to do now to grab this opportunity? There's a huge opportunity now for fintech to drive forward and really improve financial inclusion across the globe. What needs to be done?
Thanks, Johnny. It's not just, I guess it's not just about the technology here,
Exactly,
and it's also about the approach that's taken. And what's interesting is, as we've been focusing on this discussion as well, is it seems as if financial inclusion or financial exclusion is only an issue for maybe people who come from a lower income background or maybe have some issues. Whether it's with IDs or whether it's proof of address or whether it's residencies and things like that. What's interesting is actually there's a phenomenon taking place just generally in banking, in the verticalization of banking as well, which we kind of touched on earlier privately. And I think what when you look at consumers today, there is very much a kind of a values-based approach and a consciousness of what you're consuming. So when it comes to, for example, Algebra's consumers, you know, for our customer, it's very important that, you know, their money is never custodied, lent, or invested in a way that has a negative impact on society. So that could be things from, you know, whether their money ever touches tobacco or whether it touches any other, you know, even environmentally polluting stocks. So that, therefore, sustainability and these things also become very important. So technology is a means to an end, but it's not the ends in itself, is kind of where I'm getting at. And sometimes broadening our understanding of why people might be excluded or underserved. And in many cases, you know, if we look at, as an example, you know, a customer base that I know very well is the British Muslim consumer base. You know, tend to be second or third generation. They tend to, you know, their GDP per capita is relatively the same, a bit more or a bit less, depending on kind of professions and backgrounds. But it doesn't mean that the current financial system is actually serving their requirements very well. So it's not just about technology, it's also about approach, is kind of where I'm coming at it.
I'd like to add that the way we have experienced the COVID-19 area is mainly around digitalization. And that is on two different areas. One is regulation. So regulators had to move really fast in order to create new regulation procedures. Banks have changed almost entirely how they handle during this time, especially around curfews where customers couldn't even reach the banks. So on one side, regulation became better on the digitalized part. Second, customers in many cases had no choice for the first time, because the migrant population in our case is roughly 80% cash-based, which means that even if you do serve them online, at the end of the day, they need to go and deposit cash or withdraw cash. And COVID-19 is the first time where they couldn't get the option to do that. And when you don't have an option, but your family needs money on the other side, you find the right way to do what you need to do digitally. So this has been an area where we had to support and handhold a lot of our customers. We have doubled our support in about 2 months in the first curfew over a year ago now, because for the first time we had to help almost every second customer in our case to move from offline to online, especially in Europe where there's been multiple curfews around multiple countries. So again, it's around digitalization that is coming from both the companies and how they can help customers and the regulators side.
Yeah. I couldn't agree more with the digitization part. Frankly speaking, if we look at how the financial crisis in 2008 affected people who were underbanked or not included in the financial system, although some of them lost their jobs and they generally lost their faith in the financial system, they practically still managed to get out of this situation rather quickly. And SMEs, most of the SMEs, for example, the small businesses, they managed to survive. Whereas if we look at COVID, so many people lost their jobs because brick and mortar jobs practically could not operate when the countries got locked down. And then so many small businesses did not survive. And we're looking at large-scale businesses that are going down right now. And obviously, small merchants could not really sustain the COVID economy. And although people generally lost not only their savings, they lost their jobs, a lot of them nevertheless turned to digitization and education, and primarily educating themselves, maybe because they had more time by working from home or not working at all, to start looking at new alternatives. And all the government payments that have been issued to people during these COVID times, a lot of them, for example, have been used to purchase cryptocurrencies because this was something new that was emerging. And although the crypto industry, I have to say, first looks at people who are early adopters, and by the time you reach the laggard stage, you have passed through all fabrics of society, whereas in this case, COVID accelerated massively the adoption of cryptocurrencies, and people were not only using crypto technologies in centralized exchanges or in decentralized exchanges for that matter to invest their money, but also they looked into ways how to participate in a grander scheme into the economy, because you touched upon the decentralized technology earlier, and in DeFi, all the applications are permissionless, which means you don't have an ID, that's not a problem. they don't verify you to use those services, because these are practically smart contracts. These are technologies that offer peer-to-peer transacting. So you can be borrowing or lending money or participating in so-called liquidity pools and making an interest out of your deposit into that liquidity pool, or just transact over DeFi without authenticating yourself. So no proof of residence, no ID. And while this is highly technological, so you need to be educated to use these services, it has still been available to a lot of people who, let's say, had internet, were able to watch YouTube videos how to participate in that economy, and did it. In our case, you've mentioned that you have doubled your support. On our side, our support is already tenfold to what it was before the pandemic, and the user base has grown exponentially. And it's, although the current market conditions are not great, it continues growing, which means that a lot of people has used this difficult time to maybe self-educate themselves, perhaps because of the trend of crypto, and because a lot of countries started adopting certain regulatory framework around this regime. But we have seen a real influx of users, and what I think should happen forward is we all should try to educate people more. We, for example, have this academy that exists on our website where you can watch videos and learn basic stuff from what is Bitcoin or blockchain to how to create a liquidity pool, for example. So everyone with the access to simple information can educate themselves how to recognize financial threats, for example, or how to invest.
Yeah, no, I think that's really interesting, and I think the work that you're doing around kind of the financial literacy and education piece is very good, because it's also about kind of broadening the actual levels of service and awareness, education around this piece. But I think one of the things that's really interesting is that's been highlighted in this discussion is how, let's look at the silver lining from the pandemic, is that digitization and financial and fintech, financial technology is being prioritized. Actually, we've seen that here in the UK with the Khalifa review as well, and where in developed economies, obviously we've had financial technology for some years now actually, and we've had challenger banking and digital banking and so on and so forth. But I think also in emerging countries, what we've started to see is where it may have been for a central bank or a regulator, digitization, digital payments may have been a number 4 or 5 priority on their list. It's now suddenly a number 1 or 2 priority. So I think we have a lot to look forward to in that sense as well, in terms of where things are going. And I think in terms of around the use cases for DeFi, blockchain technologies and so on, I think these are also very exciting for, whether it comes to remittances, whether it comes to lending, whether it comes to investing. There are so many exciting use cases in terms of what can be done. And I think, that's it. As you say, you've got customers who today are comfortable with that, but I think, there's going to be a journey as well where this becomes more mainstream over time, and in terms of what we're building as well, ensuring that we are ahead of the curve on technology and where things are going. But also, again, taking back that values approach, I think it's also very important that whether it's from a regulatory perspective, whether it's from a technology perspective, we understand that we're actually serving people and people have needs. And I think we're seeing this now. We recently conducted a lifestyle and values banking report alongside the EPA and MasterCard, and it's amazing the number of services we're seeing it, whether it's on a gender basis, providers such as Lucy in Singapore, or whether it's for the LGBT community with people like Daylight as well, or whether it's for the African American community. We're seeing players like Greenwood emerge. Algebra fits into that as well, where we're serving our minimum viable market being the Muslim community. So I think it's there are some really exciting things happening, and of course the pandemic has been terrible for so many reasons. We don't need to dwell on that, but I think it's hopefully the industry and the regulators, we can take the learnings from that and kind of really push ahead into this new chapter.
And of course, open banking has been integral to this, and some people say that embedded finance is open banking 2.0, and does that offer something new to the underserved at all? Embedded finance?
I can say that we have been, in a way, touching open banking since before it was the law across Europe, through companies like Klarna and so forth and others. Open banking makes your bank accessible to other companies in this case. And since you don't, as an underserved or underbanked population, you don't always handle your banks the same way as others. So getting other companies to help you manage your finances, or getting access to your account, to your identification, to initiate a payment on your behalf, to migrate from one bank to another, those are critical parts of both encouraging competition and creating services that are more accessible and affordable to our customer bases. So in our case, it is a critical leapfrog of technology to make banking accessible to our customers.
I think it's a great next step for finance generally and for financial technology, because it increases competition, and it means that customers will have more choice. So what we're seeing now is, whether it's rideshare companies, whether it's delivery companies, they're starting to embed obviously financial services. Open banking is obviously one side where banks are now having to, by regulation, open up data and open up access to other financial service providers, and I think that's something really great. It eases migration potentially, or it eases kind of it creates more competition in the market as well, and gives consumers more options. And you might be banking with a bricks and mortar bank, but you might find that you want a particular service from another provider. And I think open banking and whether it's embedded finance or even open finance as well, kind of as a next phase, because it's not just about payments, it's not just about banking, it's also about insurance, it's also about investments. It's an entire ecosystem of let's say financial services that I think that where embedded finance, open banking, open finance is going to be able to help in that area.
No, definitely. And when we speak of open banking, obviously, it still just relates to European banks and European companies, because this is driven from the European Commission legislation. However, you've mentioned something very important, that it's not just the banks that can offer services, but embedded finance opens up opportunities to a larger range of companies to offer their services in the financial services area. And one type of companies that have to be mentioned here is the telecoms that have been providing financial services in sub-Saharan regions in Africa, and also they have expanded to some extent to West Africa as well, because in these regions mobile money is actually more popular than opening bank accounts. And we, for example, have been trying to set up partnerships with such companies so that people can have access both to blockchain technology and, let's say, to cryptocurrencies, but also the ability to take fiat in and out through mobile money, because I think it was around 21% of the population of the sub-Saharan Africa is actually having access to mobile money accounts. And these mobile money accounts have lower levels of requirements when it comes to accessibility. And people generally have mobile phones in Africa. And it's extremely popular to actually transact and send money in and out using your mobile phone rather than using any kind of more modern financial services.
Yeah, I think it's really interesting what telco providers have done with mobile money accounts. I think in a lot of emerging countries and in sub-Saharan Africa in particular. I think it's to some extent it's now becoming already age technology. But what's interesting as well, it's that it's the telcos that have disrupted the banks in some of these regions. But I think there's even a next stage to this, and I think actually this is where decentralized finance will come in. And what we tend to see is, I think that a lot of mobile money providers are kind of focusing around micropayments, and they're not really going to be able to fill the full gamut of requirements, whether it's cross-border transfers, whether it's other banking services, although I'm sure the telcos would love to get into those areas too. But we do have to move on as well.
I mean, amazingly, we've only got 4 minutes left. I don't know where the time has gone. We could actually spend all day talking about this. We're happy to if you want us to. But I think if we use these 4 minutes, if we just go down the panel, each of you summarise and add any last thought, comment you want to add. If you want to start with Guy.
Happy to start. For us, it is about what's coming next, both with open banking, digitalization, and how do we continue to make services accessible and financial inclusion. And the way we see it today, we understand that when you serve migrants, money transfer may be the important part and why they migrate to support their families, but it's only a small piece of their financial journey. Today, we're working to create financial services from the point where they migrate until the point where they migrate back home. And then touching upon credit, insurances, long-term open banking is an important part of that. We mentioned before that migrants don't have credit history at all. Open banking helps bring this data in, providing them with free accounts, as Mariana mentioned before, which we do. Allows them to be banked with us, even if they can't afford banking with other places, which over time creates the data that we need in order to provide them with the services they need as the main financiers of their families, from insurances to credit to payments. This is where we are taking financial inclusion with migrants. It's been an exciting journey for the last 6 years, and we are continuing to take it forward now, expanding both globally on one hand, but also in terms of our product suite.
Fantastic.
No, I think the discussion has been very interesting, and I think for us it's about ensuring that we combine the best of all of the different approaches, whether it's technology, regulation, and ensuring that our customers' needs are met on every single level. And I think this is kind of the next, the next stage in financial services as well, kind of taking that values-based approach. And I think one of the exciting things that's happening is the recognition by regulators to fill this gap, the emergence of the technology as well to fill this gap. So it's about combining these together and ensuring that we as an industry work together, whether it's through open finance or whether it's through various different levels of collaboration, to be able to make sure that we meet the needs of all the different types of the financially excluded groups. And I think another thing to recognize that not everyone in that group actually is necessarily kind of coming from a lower income background. And that's why we say, there's really an opportunity to level the playing field or balance the equation on a number of different levels here.
Fantastic. Thank you very much. We have about a minute now.
Sure. Well, definitely a very insightful conversation. I couldn't be more thankful to be participating. For us, we have been working really hard to actually include everyone into the financial services economy through a new digitized way. And we believe that everyone can have access to financial services, but also can have full control of their data, of their identity and their money. And that can happen through decentralized technologies and through blockchain technologies overall. And we have been working also with regulators, with governments, and with partnering companies to educate people how to do that, how to access the financial system and still maintain control of their data and their money.
Thank you very much. We're almost out of time. I just want to thank very much our esteemed panelists, Guy, Zaid and Mariana. It's been thoroughly enjoyable. It's been a pleasure moderating this panel. Financial inclusion underpins fintech, and I think we're in safe hands if these are our thought leaders. Thank you very much for joining us at home. Hope you enjoyed it. Hope it's put your mind off the football, and we look forward to doing this in person. Thank you very much, guys.
Thank you, Johnny.
Thank you.
We'll see you soon. Thank you.
And now it's time for a well-deserved break. Don't forget to check your Brella schedule to see if you have any networking meetings scheduled, and use the intelligent matchmaking to find people to talk with. Because after all, an event like this is all about networking.
advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS.
Having a Kickstarter in my own team, I'm very pleased to announce the next panel, Kickstart Future Talent Careers in Fintech with Sean Morris, Head of Talent at the Fintech Power 50.
Hello, and welcome to Kickstart Future Talent Careers in Fintech. I'm Sean Morris. I'm Head of Talent for the Fintech Power 50, who is an approved Kickstart gateway for the government. I'm also co-founder of Fintech Talent Solutions, a talent consultancy providing recruitment, HR, and talent solutions globally to fintech startups and scale-ups. Fintech Talent Solutions is also a partner of the Kickstart scheme, along with Barclays Rise, Level 39, Innovate Finance, iFinance Academy, Fintech Wales, the Connexus Group, Headcount, and the Emerging Payments Association. So today I wanted to tell you a bit more about actually what the Kickstart scheme provides and helps young careers or young people into really exciting career opportunities, which we'll find out a little bit later from some of our clients. So today we have Rachel Cameron Potter, who is one of our Kickstarters from Ember. She's a Kickstart content marketer. We have Daniel Hogan, who's a co-founder from Ember. We have Callum Usher, Chief Operations Lead from StockDup. And we also have Nadia Ibrahim, Kickstart Marketing Assistant from Leading Point. So thank you, guys, and welcome. So the Kickstart scheme is a government initiative to help young 16 to 24 years old into work placement opportunities. These are people who are currently unemployed and really looking for some really exciting development opportunities to really kind of help boost their future career. And the Fintech Power 50 decided this is such a great scheme to really get involved in and really kind of get a whole group of companies together. And therefore we applied to be a Kickstart gateway provider, which literally enables a whole group of companies to access government grants. So what the Kickstart scheme provides is a 6-month work opportunity for young people which is a fully funded opportunity that the government provide to work 25-hour working week at national minimum wage, providing national insurance and auto pension contributions. And the great thing is that the participating companies also get a £1,500 grant, which helps with startup costs. So, and it's been really great, the kind of response and take up to date, because we have over 204 approved placements. We've 23, I think, more in the actual approval process. We have 120 participating companies who registered to take part in the scheme. So that really shows, the sort of general uptake and the willingness for companies to provide these opportunities to help young people. We have also had 63 Kickstart hires to date, and obviously those other ones are sort of all different stages of the process. So it's been quite a feast of a project to manage, but it's been really great with the take up and obviously all of our Kickstarters are now employed into these opportunities. So. Also, to date, so with the 204 placements that have been approved, we've enabled companies to access over £1.5 million worth of government funding. So that's really great. So as I mentioned, yes, I have obviously my clients here today. So I'm going to hand over to Dan first of all. So Dan, if you could just introduce yourself and tell us a bit more about Ember and your role.
For sure, yeah, definitely. So yeah, my name's Dan Hogan and I'm the co-founder of Ember. I guess, yeah, at Ember what we do is try and automate the tax and accounting process for small businesses in the UK alone. So I guess we were born out of the frustration back in the day of the current market standard of the likes of, say, Xero and Free Agent and QuickBooks, and business owners struggling through their accounting and tax and really not understanding what happens day to day in their business. And myself and my co-founder Aaron sort of didn't want it to be that anymore, and we started Ember to try and really build a software that speaks to business owners and actually talks in their language. So there's no such thing as a debit or a credit or accounts receivable or accounts payable, and we really just try and talk in the business owner's terms. I myself am a chartered accountant, so I come from that sort of finance background and understand how important it is for our sort of Kickstarters who we have on board. We have 3 on board at the moment. To have that initial training, I went through the whole chartered accounting degree at Deloitte, and I mean, it was a slog, but it's enabled me to be where I am today. So that sort of fundamental training that these types of programs can offer is, it's just sort of an unreal experience for these guys, and having Rachel on board is awesome.
Excellent. And how did you get into fintech? Your own career path?
Yeah, so I mean, going down the traditional accounting firm life, I knew that I was never going to make it to partner. I couldn't think of anything worse than trying to slog out at Deloitte for the next sort of 10 years of my life, and actually moved over to the UK about 5 years ago and brought over a software company in London, and we actually brought that business over from Australia. It didn't really sort of work out. It was a sort of finance software itself, and I then met Aaron at a WeWork, actually. So
okay.
we bumped into each other a few years back, and over a few beers over Christmas, we decided to go into it sort of full time. And I've always sort of worked in the sort of finance software space, and then I guess the term fintech now is a bit of a buzzword around, and something that I sort of love being a part of, because it is such a sort of huge tidal wave, and things are just changing so rapidly. And with the advent of open banking, we've been able to hook into all of our clients' sort of bank accounts and automate their taxes off the back of that. And I guess without open banking, we wouldn't be alive. So rather than having to sort of do those direct integrations, as a lot of the older school accounting software had to do back in the day. So it was over a fortuitous sort of beer that Aaron and I got in and
it's
started
funny how
Ember.
some business arrangements are dealt with that sometimes, aren't they? So, thank you, Dan. And Callum, yes, if you could just explain, obviously, your role and obviously what you do at Stocked Up, and what does Stocked Up do, please?
So, Stocked Up is effectively a brainchild of one of my close friends called Maya Twala. I met her when I used to live in South Africa. She went to essentially the sister high school of my high school. And last year, I noticed she was making strides after attending Cardiff University, trying to get this company started. And I got involved I flew back from South Africa at the beginning of this year, and noticed one of her Instagram posts and said, "Do you have a job for me?" She said, "Yeah, do you want one?" I was like, "Oh, I didn't know you were serious." And that's how I got involved with Stock Up. Beforehand, never kind of saw myself going into this area of work, but considering what we're trying to do, it's been very rewarding. We are trying to effectively reduce the economic divide. In South Africa, because the middle class and poorer communities are massively divided economically. So we are trying to create a system that will make investments more accessible for low-income earners, which is why we are starting a system of essentially £1 a month investments. So micro-investing through an SMS service. We're using an SMS service because poorer communities in South Africa don't really have access to internet, so we needed to kind of get around that hurdle. Obviously, we can then access that and utilize that in later stages of development. But yeah, it's been a great journey to get there. Again, didn't see myself getting there because I'm a qualified teacher. I've done so many other things. I worked at Apple for 3 months, and this is something completely different for me, and I'm loving it. It's great. It's got a lot of purpose to it, which I really enjoy.
Thank you, Callum. And Nadia, if you'd like to introduce yourself and your role and tell us a bit more about what Leading Point do, please.
I'm a marketing assistant over at Leading Point. I'm 3 months into my journey with them. Leading Point is a fintech based in London, actually at Barclays. We're just upstairs. They specialise they've got software products to help companies do their operating models, and bridging the old with the new is like something that they're trying to do. So yeah.
And how long have you been in your placement?
3 months into my 6-month placement so far, and yeah, it's going really well. It's same with Callum. Like, I never really thought this was going to be a sector that I'd go in, like the financial services, because I did cultural studies and media at university, and like people that go down that route generally think of like the ITVs and the Channel 4's, like the more marketing kind of companies. So yeah, you never really envisage yourself going, but now that I'm in it, like, I can never look back.
It's a whole new world.
Yeah, it's a whole new world.
Exactly.
So, yeah, it's cool. I'm loving it.
Thank you. And Rachel, last but not least, if you could introduce yourself and what you do in your role.
Yeah, so I'm Rachel, and I'm a content marketer here at Ember. And I pretty much do everything content related. So if it's written or sometimes voiceover produced, then I've normally had my hand in it. So that's anything from script writing, social media, to a lot of SEO work, which we're working with an external agency for. And yeah, pretty much all things content related. Currently branching out into doing a lot more video work as well, which is really exciting for us. And that's all just in the span of 3 months. So every day is just proving to be a completely different day for me.
So big learning curve for you then.
Definitely. Before I started at Ember, I did a lot of work in content. So I had an arts degree. I did English. Wasn't really sure what I wanted to do. Sort of jumped between internships, did a bit of freelance stuff, and figured I really liked doing the content side of things. And then that's how I came across Ember. And yeah, as soon as Dan told me what exactly Ember was doing, I was sold. And I think especially because I don't have an accounting background myself, when he said, we're trying to put accounting terminology into simple terms, I was like, oh, cool, I can translate that.
Excellent. And you're one of, is it 3 Kickstarters, Dan, at Ember you're hosting?
We've got 3 on board. So yeah, we've also got a junior web developer, Ben. He's unbelievable. He's so he pretty much owns the entire website, and is also building out another little thing that we call the SSGM, the super secret growth machine. And we also have Fred, who's a junior accountant. Yeah, so he did a finance and accounting degree at university, and has come straight and yeah, he's helping us on the sort of customer experience side, and because we actually do provide the actual sort of accounting services as well, so we replace both your accounting software and the accountant for the future.
Oh wow! And Callum, so you have stock up. Have one Kickstart placement.
We've just got the one at the moment. His name's Wallace. He's come in to the team as a junior accounts executive. He's been really good. He's certainly helped stabilize a few things quite quickly. I've done quite a lot of work with him as the operations officer, so I chat to him quite a lot and get his opinion on things. I've actually learned quite a lot from him, which is surprising, but it's been great, and I think the initiative behind it is so mutually beneficial for the company, for the employee, but also, it affects the economy as a whole. It's a really beneficial scheme. And yeah, he's doing really well. He's learning a lot from our CEO. He's shadowing her, so that's great.
Excellent. And Leading Point, they have more than one
Yeah,
Kickstarter.
we've got quite a few. I think we've got maybe 3 or 4 on the roll now. So yeah, it's cool. We've got graphic design, me doing the marketing. We have admin and I think sales. So yeah. Going really good. I think I was like one of the middle ones to start, so I wasn't one of the first. But yeah.
Excellent. And I mentioned earlier I have my own company, Fintech Talent Solutions, who's also taken on a Kickstarter. Mia, she's a recruitment and marketing assistant, and she's been with me for a month now, and she's a godsend. So she's already kind of influencing my social media followers, and she's redesigning my whole sort of presentation, and yeah, she's doing a great job, and helping a bit with the Kickstart as well. So no, it's really interesting to hear all the kind of different type of roles that the Kickstart scheme, is providing, and all the different career opportunities within FinTech. So and it's just great because obviously FinTech typically is an industry made up generally of kind of experienced people, starting up startup businesses. So to inject young talent and to kind of grow that young talent is a really great opportunity. So talking about growing and development, so Dan, how are you kind of ensuring you're developing your Kickstarters? What sort of
so we
things do you have in place?
So we've got a pretty good structure when it comes to sort of one-to-one meetings. We see that as like a really sort of important part of integrating into a business. I guess we just really want to keep our finger on the pulse. We want to make sure that the employee's happy, but also to get that sort of 360-degree feedback as well on what we're doing correct or what we're not doing right. So they're a sort of really important part. We also have £1,000 training budget if you come on board as well. So you can, the Kickstarters can spend that how they like, and they work really closely with their sort of managers to make sure that they're, I don't want to steal your thunder because I know you're going to speak about this, but to make sure they're developing their skills in their certain areas. And to take Rach, for example, coming on board as the sort of content marketer, we really also want her to expand her skills into sort of digital marketing and understanding the paid side, because we have a head of growth who is a bit of a paid guru, and he is teaching Rach a lot, I think, and there's only so much, I guess, you can learn on the job as well, though. So we do see that sort of training as a huge part of what we do as well. So that's how we've sort of structured that.
And how's the training been for you then, Rachel?
I've loved it. I've loved every second of it. So like Dan was saying, my line manager is an absolute guru when it comes to everything ads related. And I think he's getting quite sick of me just following him around going, what does this do? What does that do? But
what's a CAC?
Every single acronym. But when it comes down to also the £1,000 set aside, I'm currently doing a mini degree in psychology of persuasion. So I'm basically taking a deep dive into how to write really convincing copy, and seeing as I do all the copywriting for the website, the blogs, everything with Ember's stamp on it. It's really interesting to see how my copywriting techniques have changed over time, just because I've been doing that course. So I've definitely noticed some, not only am I really learning some interesting stuff, I'm also seeing that take impact on my work.
And
that's great to hear.
Being in accounting software as well, and accounting, we don't like to use the word firm, because we're definitely not an accounting firm, but providing that sort of accounting and tax help to our Kickstarters as well. So we're providing Fred with that ACCA tuition as well, and making sure that he can then get the qualifications that he needs to become a qualified accountant as well.
Oh, brilliant! That's great to hear. And Callum, at Stocked Up, what training and development do you provide?
Fairly similar to Ember, although the £1,000 that's a great idea. I'm going to take that. So Wallace is obviously shadowing our CEO quite a lot, because I think it's her intention we want to keep him on. He's been doing really well and helping us in many different ways. And through his interactions with her on a day-to-day basis, he's learning a lot. I know he's learning about capital markets and things like that. And I think that is the area she specifically wants him to take over from, when obviously the 6 months elapses and we then make the decision to take him on further. And obviously he's supporting us and we're supporting him. And at the moment he's helping do our basic T's and C's. And I personally have no idea how he does that. So he's doing pretty well there, and again, he's shadowing just so that he knows he's being guided. But he's actually figuring a lot of it out for himself, which is quite impressive. He's a very hard worker, so it's going well. And fortunately, our CEO is kind of like a genius memory bank for these kinds of things. So she just kind of lets it all go on him, and he just has to just sit there and be like, okay, I'm going to remember some of that.
Quick down.
But yeah, he's doing great, and I see how much he's coming along every day. So it's really great.
Oh, it's really great to hear. And Nadia, and what training have you been given so far in support and development?
Yeah, so I've mostly versed in content creating, so the more design side of it. But I really wanted to learn about the more market research and UX kind of learning. So I've been delving into that. One of the things I just did was the competitor research. So we just wanted to start up the Instagram. So what I'm not used to as well, I'm used to B2C marketing, so it's like business to customer, rather versus what we're doing at Leading Point, which is B2B. So it's more about marketing towards like the business, which was a real learning curve for me. LinkedIn, I never knew LinkedIn was such like a vital thing to know about. But
it's a Bible.
Yeah, it's a whole world, LinkedIn. But yeah, I'm learning about that along with the competitor research, which is really cool. Yeah.
Excellent. One of the important aspects of the Kickstart scheme is to provide employability support, so help with the future development and employability of our young Kickstarters. So Dan, what provisions do you provide around employability?
Well, we're almost trying not to provide them with that because we want to hire them. we don't want them to, no. We do, so we actually, because we are helping SMEs ourselves, a lot of actually what Rach does is create templates for our business owners, and some of those templates are actually sort of your CV business or your CV template to help out employees, and it's a part of the sort of SEO push that we're doing. And as part of that, I think Rach is a bit of an expert in creating these types of templates. So we've definitely been sort of helping along on that aspect. But I think just giving the sort of opportunity to come into a business at this stage and have control over something. I mean, Rach is our go-to for every single thing content related, and I think that sort of experience that you get on the job is just sort of invaluable. And I think a lot of what is happening today, a lot of the focus is obviously on furlough and I guess employees not necessarily keeping their jobs. I think the Kickstart scheme actually then thinks about the younger generation and how they're actually going to get their foot in the door. And I think that is just such an important thing given the circumstances and given the sort of pushback in employability, I think, coming straight out of university. It's such a great scheme.
I think one thing as well, just off the back of that, is one thing that Ember does really well, is it helps you think a lot about next steps. So when I first landed in the content realm, in the marketing realm even, I had absolutely no idea about SEO, about PPC. Didn't really have much of a clue about the whole broad general term, but one thing that my line manager has done is he sat me down and pointed out different routes that I could take. And another thing that Ember does as well, just to finish that up, I guess, is helps you think about long-term leadership. So it gives you a lot of leadership opportunities. I've done a few presentations in front of the whole team as well, little old me. And yeah, it's, they've really sort of given me the chance to think about what I want to do next and how I can really start to tailor my career path. So yeah, that's
excellent. And Callum, what are Stocked Up doing with regards to employability? Are you helping with CV preparation, interview skills training?
Yeah, so much the same as Ember. We don't want Wallace to think about going somewhere else. So I think we're doing it in a way that we're making him get stuck into every aspect of the company. So kind of he started with us, we got to know him a little bit, and then we were like, right, here's your first meeting, let's go. And I remember when I had to do that, and that was quite scary, because I didn't really know anyone I was presenting to. And then realised I knew all of them, but that was good. And he's doing well. Obviously, our CEO is kind of guiding him with what he should look to do in the future, even if that doesn't mean he stays with us. We're not going to hold him back from anything else because we want him to do his best work for us and then to either stay with us or take it somewhere else. But there's no point in kind of hindering him from that so that we can keep him. That doesn't benefit us very much. So supporting him as much as we can. I've been chatting to him about his kind of future plans, what he'd like to do after this. And I've said, well, I know quite a few people who do CVs and things like that, more like template-based stuff. And obviously Maya will help him in building that up in a way that looks presentable. But I like that, as Dan was saying, I like that the fintech thing, I always found it so hard to get my first job after university. And I think that is a struggle that our generation is having now, is that we are so employable, but no one can employ you. And I think that this scheme is helping kind of bring that down a little bit. And it's so beneficial to young people, especially like Wallace, and it's something that should continue to happen because it only benefits them and the economy.
Excellent. Nadia, what do you hope to get out of the scheme?
Well, I haven't had the infamous chat yet with the company, but no, I'm loving it. I'm learning so much that I wouldn't have learned. I know there's a bit of a stigma coming with like the Kickstart scheme, but I think people from all walks of life, coming from Russell Group unis or like anything, have found a place within the scheme that's really helping them that they couldn't have, no matter like what background or walks of life they come from. So I think it's really amazing giving people like new doors to open and new sectors to go into when they wouldn't normally have gone into. So yeah, I hope to stay in the fintech community. But yeah, no, it's cool. We have weekly meetings as well where we discuss things like the future. So yeah.
If you don't get that chat in, just come and have a chat with us.
And
add me on LinkedIn.
and just on that note, so the Fintech Power 50, we're actually providing a support post Kickstart development program. So you know, for some reasons, unfortunately, you know, candidates may not be able to stay on because of funding, etc. But we will be proactively, obviously, seeking opportunities, Dan, you know, for these really kind of engaged, motivated Kickstarters. You know, because we really want to keep them within fintech and kind of, you know, keep growing, you know, future sort of talent programs. So. So the Fintech Power 50 will be also providing some free skills training courses and a whole kind of e-learning module, or modules rather, about fintech, and they can gain a certification at the end. They'll also learn some core business skills such as Microsoft Teams, Google Meetings. I mean, how many of those do we have? Zooms, etc. So you know, it will be a kind of a full support package that the Fintech Power 50 provides. So I'm just noticing time. So just as a last question then, if there's any companies that are interested in participating in the Kickstart scheme, Dan, what advice would you give them?
It's a no-brainer, I guess. Yeah, we've found our three guys super valuable. I mean, Rach is an integral part of the team already after the first 3 months, and I couldn't recommend it high enough to anyone else thinking about it. I think it's just such a great opportunity for both you as the business and the person that you are sort of bringing on board.
And Callum?
Yeah, the same. I think it would be silly not to. It's something that you should take advantage of because there is no downside to it. As a business, you know, you get an extra set of hands. You know, many hands make light work, kind of thing. Someone gets employability, which is great for their ongoing future, and the benefits just are across the board. So it's kind of, again, it's a no-brainer. It's something you should really look at doing.
And from obviously a Kickstart perspective, then Rachel and Nadia, you know, what advice would you give a young person wanting to join fintech or a Kickstart scheme?
I think I'd say always stay curious. So definitely consider going into sectors that you haven't looked at beforehand, and just always ask questions as well. I mean, Dan knows I always ask all the time. And yeah, if you can, just learn as much as you can because it will always be worth it.
Be like a sponge, just absorb.
Yeah.
And Nadia, sorry.
Yeah, no, I would say the same thing. I think don't let your company descriptor cloud you. I think a lot of company descriptions can be a bit misleading or not leading enough. So just keep an open mind. Yeah.
Thank you.
Awesome.
So I mean, obviously you've heard some really great stories and experiences here from, you know, our panel of clients and obviously Kickstarters. So thank you for joining today and sharing your experiences and insights. So if anyone is interested in taking part in the Kickstart scheme, please go to the Power 50 website. There is a Kickstart page there, so you'll find all the details and you can set up a call and we'll take it from there. Thank you.
Only last week we had our Clubhouse session together with SIFT. Joining us today for a panel on how to win the war for fintech talent is the Fintech and Payments Club founder, James Sherwin-Smith.
Good afternoon, everybody. Thank you for joining us today in this extremely well-lit basement in the heart of Shoreditch. My name is James. I'm delighted to be your moderator today for this topic on how to win the war for fintech talent. I'm joined by a cracking panel, so without further ado, we're going to get straight into some brief introductions. So I'm going to ask you to maybe just give a sentence on who you are, a sentence on where you work, and then as an icebreaker, it would be great to hear the best decision that you've made from a talent perspective. So Neil, if you wouldn't mind kicking us off.
Yes, of course. Thank you, James. Yes, Neil Butcher. I'm originally founder and CEO of Headcount, which is a global leading talent business positioned around the paytech and fintech markets. 25 years experience around paytech and fintech. Around 3 years ago, we were acquired by the Connexus Group, and the Connexus Group concentrates in paytech and fintech, but also not just from a talent side of things, but also in e-learning training, but also M&A advisory and strategic consultancy. The other question was exactly the icebreaker.
The best talent decision you've ever made.
The best talent decision I've ever made was actually to build a workforce from non-industry specific individuals in terms of recruiters, to take people from diverse backgrounds with commercial skills and develop them. So.
Very interesting. Thank you, Neil. Catherine, over to you.
Great. Hi everybody, I'm Catherine Eastwood from the EY Foundation. So I lead on business development and employer engagement at the EY Foundation. And essentially we are quite a small charity focused on social mobility. So everything we do revolves around breaking down barriers to employment for young people living in poverty across the UK, and the employers that they deserve to be part of. With regards to me and a talent decision, I think so. I previously spent quite a lot of time in working in schools in London and being very inspired by young people who were incredibly underrepresented. So rather than one specific decision, I think for me it's a commitment to always challenge my own bias, particularly around hiring, but day to day in everything I'm doing.
Fantastic. Thank you very much for that. Alan?
Yes, hi, thank you for inviting me here today. My name's Alan Walsh. I'm a non-executive director for a business called Futureproof. And essentially we're a placement business for retired and injured sports professionals that are looking to move into business. So I sort of help on the sort of strategic direction side of the business, and using my sort of contacts to help open up the fintech space. And I guess answer to your question around best talent decision, if you like, probably one for us at a previous company, Bud, that I worked at, is we hired a designer very early on, and it just really allowed ourselves as a very early stage startup to look a lot more professional than maybe we actually were. And yeah, we got lots of sort of good feedback on the sort of presentations we made to banks, etc. So yeah, that was certainly a good lesson learned and taken into other businesses since.
Very good, thank you, Alan. And Huy, to finish.
Thanks a lot, James. Hi everyone, so I'm Huy, co-founder of CFT, Center for Finance, Technology and Entrepreneurship. And we're an education platform where we help professionals get the right skills for the world of finance today, which is very, very heavily tech-driven. In terms of my background, entrepreneur, banker, academic, so across all three. Best decision, I guess no best rule in general, I don't hire anymore based on CV or based on interviews. I find it very difficult to get a view on people based on their CV or interview, so we use other ways to hire people.
Very interesting. Well, thank you, and wonderful to have you all with us today. So I kind of almost cringed coming up with a title for this event because the war for talent is fast, I think, perhaps becoming a cliche. But I think it does convey a degree of intensity and clearly competitiveness. Neil, you've spent almost 20 years in the kind of sourcing talent for fintech customers and others. Have we always been on this kind of war footing for talent, or is it something that you've seen the kind of intensity is really lifted in the last few years?
Yes, the war has always been there, James. So it's I think what we found are there's obviously peaks and troughs around economic climate. So we've seen the crisis in 2008, for example, where you end up being client short in a certain in that period of time. But I think it's become increasingly more intense as the decades have gone on, and in fact now it's getting to the point, obviously, around the debate about being unsustainable. I mean, you know, and a lot of that reverts back to the levels of investment, I guess, that's coming into the marketplace. And it's, you know, we're very fortunate that we're in gaming and PaySafe and FinTech being extremely robust markets. I mean, this year alone, you know, post-COVID, there's something like 7 billion investment in the UK alone, 50,000 jobs, right? So it's kind of like there's just not enough people to sustain that level of growth. I think 6 monthly period to date is 300% growth on last year. So, but now, yes, of course, it's more intense than I have ever known it. And in terms of the talent piece of our business or our group, you know, it's the clients are globally expanding and coming to us with not 1 or 2 or 3 hires, but, you know, hundreds, right? Excel sheets full of hundreds of hires, and especially around, you know, development and technical development and data engineering, for example. I mean, it's just rocketing.
Yeah, very interesting. Very interesting to get that perspective. Boy, you've worked in, you know, FS brands and now latterly as a founder in a company that's looking at the FinTech challenge. How have you seen companies kind of deal with that intensity of what they've been facing, particularly in the last few years?
So I think for the first part of the question in terms of how different it is, I think it's always been very intense. You know, if I go back 20 years, you know, I was CEO of a tech startup at the time. It was still really, really hard to get talents. Or, you know, 5 years or 6 years ago, when I was at Citi, it was still very hard, you know, to get talents. So I think, you know, in general, for very good organizations, you know, matching, you know, with very good people, in general, it's hard, you know, finding, you know, very good. But I think what has changed is the nature of it. So the nature of it in the sense of you have a lot of people looking for a job actually today. And at the same time, you find it very challenging for either large financial institutions or fintech startups to find the right people. So I think it's not really a question of it's very hard because you don't have enough people. The reality is that you have a lot of people, but you have a real talent or skills mismatch, I think. Yeah. And the reason why it's getting much harder today compared to, let's say, 5 or 10 years ago, let's say 20 years ago, if I needed someone, an engineer, for example, it was very clear in terms of what kind of skills I would be looking for. I would have the proper competencies that I would be looking for. I would have the skills. It was easy. Same thing in financial services, 10 years ago, looking for a trader in emerging markets, then you knew exactly where it was. Today, it's really hard to know what you're looking for. Things are changing so quickly. A lot of roles are changing. So almost on a weekly basis, you're thinking of should I have a product designer, but what kind of product designer, what kind of role, having an experience in fintech startups, etc. So because this is changing very, very quickly, it's even harder to match basically what an organization is looking for and basically the skills and talents which is out there.
Very good, very good. I think what might be helpful here is to perhaps structure this across kind of 3 aspects of talent in my mind. There's the attracting talent in the first place, recruiting, hiring people, bringing people on to work for you. The second part for me then is about developing. It's about once you have those people with you, how do you then upskill them throughout their career journey? And then finally, if you've done all that work and you've got these fantastic employees, how do you keep them? And you don't end up losing them to someone else. So maybe if we start with the attract part, what do you think the best companies are focusing on in how to attract the best people? It's not really about the perks anymore, especially in a, hopefully post-pandemic environment where the nature of work and where people are working is definitely differently. Alan, how do you think companies have changed their approach in how they attract people?
Yeah, I think it's an interesting question because it's clearly evolved over the last 10, 15, 20 years, and it's clearly very different from traditional corporate to fintech startup life. I've done sort of 15 years corporate experience and then moved to startup 6, 7 years ago now. Mm-hmm. I probably wouldn't go back to corporate, and I hear a lot of people say they want to make that shift from corporate to startup. I think that change of where the attraction is it's, and I'm maybe speaking from my own opinion here, but it's more purpose-driven, where you have the ability to actually move the needle, so to speak. You have the ability to actually make a change and affect a business, whereas corporate, you're one of 20, 50, 100,000 people. You are just a number. And Hui, like you were saying, historically, you have a CV or a job description that goes out and you fit that mould, you go in and you do that. And certainly, I've been burnt in the past where you hire based on what you need for that particular job. But to your point earlier, the startup world is so advanced and speedy that if someone's working a 3 or 6 month notice period, by the time they've come in, that job could completely change. So they're almost redundant for the job you hired them for. So I think the attraction piece is you hire on attitude, as opposed to, exactly like you said, you don't hire on CVs or job interviews anymore. It's that attitudinal thing, because you buy into a purpose, a mission, and then you can evolve as the business changes with that.
Very interesting. Yeah, Catherine, do you see it the same way? You've got a slightly different kind of background on this, I think.
Yeah, I think I'll probably come at this with quite a different point of view. Firstly, James, I thought the title and the question we're looking at was quite problematic in many different ways. I don't think I would have really framed it as a war, and I think if I would have, what we need to look at is lots of the assumptions that underpin that war. And I think rather than looking at this whole picture as lots of the best companies fighting for the best talent, it's actually, let's look at this hypothetical battlefield and question, why is it so small, and why is it that we're still looking at the same quite tired, quite familiar networks to find people to be that source of talent. So on the attraction point of view, I think if we look at attraction through the lens of recruitment, then it's far, far too late. For me, the best practice I see around attraction starts significantly earlier, and that's businesses investing in talent and actually growing their own talent pipeline, particularly with regards to where there are those niche skills and those ever-changing skills and rapidly evolving. So I think when we see organisations looking at young people in primary school and secondary school, I mean, at the minute, I think if you went into any primary or secondary school and said, hands up who's really excited for their career in fintech, you might be met with absolute silence. So there's huge perception shifts to be done from such an early age. So what we do in the foundation essentially is listen to businesses to understand their particular priorities around, is that a real lack of diversity, is that an imminent skills gap, and why are they struggling to find this talent? And why are they struggling to reach so much incredible untapped talent? And then to build that into employability programs where we can reach young people at a very early age to get them thinking about that career and actually seeing themselves in those types of careers at a really early age. So I think attraction...
You're definitely thinking more strategically than most, I think.
I hope so. I'll take that.
You don't win wars by just the tactics alone. I think
and maybe it doesn't have to be a war if we're going to get into it, but we'll leave that for another day.
Yeah, no, that's fair. That's fair. Go ahead.
Yeah, I can add something because I think I fully agree with you on this. We work with a lot of universities, students in universities. And if you ask students in universities what they want to do, for most of them, a lot of them from the finance side, they want to go into investment banking or private equity or consulting. And they have no idea of what is fintech. Well, fintech is one perhaps of the fastest growing area in the space. A lot of opportunities, but there's a deficit of understanding, knowledge, skills in the space. So fully agree with you that it has to start much earlier. Because at the point where you say I'm looking for someone and that person doesn't have the skills and the understanding of what is required.
And I think just to add on to that, a real risk with such a rapidly growing sector is the need for rapid recruitment to the detriment of equitable recruitment. And actually it's that intentionality that needs to be built in from day one.
Yeah, I can see that if you just keep on focusing on the same areas, trying the same sources, it's not only going to lack that diversity, but also it may not just be sustainable. It's just like everyone's fighting over the same well, right? Sorry, still thinking militarily, but that I think is definitely the challenge. Very good. Well, thank you for that. Starting on the kind of the attract side, maybe let's move on to develop. So you've maybe found a diverse set of sources to bring people into your company. Then it's really a question of, right, what are their expectations once they arrive? What do the companies need to respond to in terms of developing people? Catherine, do you want to get us kind of started on this one, particularly whether you see any barriers initially that need to become overcome in this area?
Yeah, absolutely. I mean, I think I touched on it again previously, but I think lots of the young people that we work with simply do not see themselves in those industries and in organisations. I think that positive representation is the first, or the lack of that is such a huge barrier. I think what young people are really looking for is obviously those well-paid skills, well-paid experiences, but something that we hear a lot with the young people we work with is the continuous opportunity for development and training. So our programs are paid and they get those skills and training, but they're also accredited. And I think young people are incredibly savvy about making sure that they have that really wide-ranging CV and that they are going to be part of a company that will continue to give them those opportunities to grow. And Neil, I think you touched on it as well, the idea of purpose. I think Gen Z are much more in tune with an organisation's purpose, and they want to be part of an organisation that is very much aligned to the values that are written on its website. So I think we're seeing a lot more of that.
Yeah, it definitely feels for me it's almost come full circle. I think about my parents' generation, they're very much in kind of jobs for life, right? And then I think my generation, it's much more kind of chop and change. You know, there's a few years here, a few years there, and then in the last few years, we've been talking a lot about obviously 0 hours contracts, gig workers, etc. And I think there's been a real backlash to that now. Now people are thinking much more thoughtfully about their career and the companies that they want to work for and why they want to work for them. So definitely see that. From the education side, obviously that's what you focus on with your company. Are there particular segments that have particular needs? How do you approach that problem when you talk to your clients? Is it there's just kind of the same development needs throughout, or is there a way that you kind of think about it and segment it up?
So I think there are really two answers there, which is what we're doing today and what we'd love to do in the future. What we're doing today, we're mainly working with financial institutions. That's a very large part of our customers, fintech startups, tech companies, and consulting companies. And what we see is that some of them are extremely advanced. For example, I can take the example of the Singaporean banks. Singaporean banks like DBS, OCBC, UOB have programs where they upskill all their employees, 100% of their employees, to get the right skills for the world of digital finance today. So it's about understanding data, technology, etc. But I would say pretty much that's the exception. That's the exception. The reality is that most organizations, large or small, don't really develop talents on what really matters today, which is this knowledge gap. And I'll give you a figure. You take a normal bank, average bank, they would spend $3-5 billion on technology, for example. Do you know how much they spent on upskilling their people?
A fraction of that number, I imagine.
Yeah, 1% of this. So you spent 1% on your employees versus $3-5 billion on technology, and that's a real problem. And that's the issue around talent. Is that of course everybody agrees that talent is important, you need to develop, etc. But you don't really see it on a day-to-day basis, or it takes no more time. And so it's really hard. It's really hard in general. We see some organizations starting to accelerate on this, and usually that's either because they have a leadership that really wants to focus on this or a regulator behind them. You see some of them on the fintech startups as soon as they reach a certain size, because of course when you're very small you have more issues, more urgent issues than just training people. But the reality is that there's still a lot to do, and that's the reason why we have this talent problem, because we have a big gap basically between what people know and what they should be knowing.
Well, it's kind of fascinating to me. Somewhere like Singapore, that I've always thought of having very high education standards, and the idea that universally across all the employee base that they now need to go through a training program to kind of lift them up to what's required. It kind of really suggests that there's a fundamental mismatch between what employers are expecting in terms of level of knowledge and literacy in this space versus what the traditional education system delivers.
Is the mismatch because technology is moving so fast, so companies are almost, I've heard before, certainly from a sort of data point of view, it's the graduates that are coming out with PhDs are the most forward thinking because they are learning at the cutting edge, they're coming into the businesses. Is that the gap? Because maybe from 10, 15 years ago, if you're learning, basic accountancy, the framework is there, it doesn't really change that much, whereas technology is just evolving so rapidly.
I think the mismatch is that today finance is technology. So if you're in a bank, like I was, you can make a test for your friends in banking. Ask them, do you know what is SEO, for example? And 99% of my friends or ex-colleagues in banking do not know what SEO means. That comes from the world of technology, from the world of digital. So banking is still banking, it's different from technology. On the other hand, if you ask someone who's coming from the digital side and say, do you know what is capital requirements? Then they wouldn't know. It's still two very, very different worlds. But the reality today is that finance is technology. And that's why you're struggling to get all the skills together.
Very good. Okay, so we've talked a little bit about development then. Let's talk about retention. So, I always saw this as a fintech CEO, right? You take someone under your wing, you'd go out for this very kind of involved process to find the right people, bring them on, train them up, often graduates in their first job, and then a couple of years later they'd be gone. And you're like, oh, I just invested all this time and effort in this individual, really hoping they'd build a career with us, and actually they've moved on to maybe a larger company or other opportunities and things like that. So I always saw that as a failing of mine. Because we'd obviously not been able to kind of maybe show someone a career path or given them the opportunities that they were kind of craving for. Neil, in your experience, thinking about it from placing candidates with companies, and you probably see a lot of this, I guess, but what is it that for you is the trigger to say someone's not happy or something that's not being fulfilled, and what do you think companies can do to maybe spot that ahead of time?
Yeah, so I mean, it could be a multitude of things. It could be a financial reason. It could be a promotion, career development opportunity, and so forth. So there's a number of reasons. Actually, it's an interesting point. Just going back to on the development side of things and upskilling, it's something like 90% of adults will in these existing businesses in fintech that would need upskilling by 2030. Actually, so that's a really interesting statistic. But I mean, in terms of retention and keeping, should we say, young people engaged in our clients. I mean, we spend a lot of time engaging with our clients to understand what those skill gaps look like. And then actually we run our domain training expertise and training modules to bridge that knowledge gap and actually run that in parallel with a graduate academy. So actually what we're doing is running that parallel with the graduate programs inside our clients' organisations, but then actually upskilling them over a 2-year period as well, in terms of domain expertise, but also in the disciplines that they're actually being employed for, whether that be sales, whether that be data engineering or software development, for example. So that brings in the engagement and the retention actually at around 80%. So that works for us. So that's quite an interesting stat. But I mean, in terms of the triggers, yes, people move for a number of reasons. And if you take a step back out of that, what we've done is actually become very visible and actually track good talent and what good talent looks like at all levels. And actually understand what they want to do with their career and track that career, and then actually make our recommendations before the point of the trigger, for example, so we can actually help accelerate those careers early on.
And I'm going to put you on the spot. This is maybe unkind, because I think you're like me. You've done a few different things in your time, and changed a few roles. So thinking about what went wrong for you, or maybe what went right, depending on which way you look at it, backward looking or forward looking, right? What is it that's in your mind of kind of things that made you think, actually, time to move on?
Yeah, maybe I'm younger than I, or look younger than I feel or look then, but yeah, you're right, I think I had sort of 15 years in corporate experience across sort of 4 major sort of blue chip companies, and then the last few have been moving around somewhat, and I guess there's a number of reasons. I'm a bit of an eternal optimist, so I always look at it as the reason why I moved on, if you like, rather than why I was told to move on.
Sure, it wasn't that.
I guess it's a number of things. It's as you get older, obviously you have more personal responsibilities with mortgage, wife, kids, etc. So for me, certainly the big trigger of moving from cushy corporate job at Amex with a nice sort of benefits package, healthcare, you name it, to a complete startup with zero funding, zero product, and just an idea was in my mind, a now or never. Right. My wife was pregnant with our first kid, and I just thought, if I don't do this now, I feel like I'll be kicking myself. And best decision I've ever made, I would say, as far as career has gone forward, because, like I say, you have that purpose-driven drive, and you have that engagement with something that you truly believe in. So that opened up my eyes. But I remember years and years ago working at a major bank, and someone said to me when they were leaving that this company does a very good job of making you feel undervalued. And I think what happens is you can get wrapped up in a business for so long, and certainly as sort of the blue chip corporate, and I'm certainly not bashing it by any shape of the imagination, but you become part of the machine.
Institutionalised.
You're institutionalised, man and boy, exactly.
Absolutely.
So, and I've seen that happen to many people that have messaged me and tried to sort of move on to startup life and not being able to do it, or for fear of failure anyway. So I think, like I say, personal life, really it's always about the challenge. And like we've mentioned earlier, I think as I'm getting older, I'm becoming a bit more purpose-driven now. And I was probably the same as the youngsters you mentioned, where it's a bit more money-driven at the start and wanted to work in Canary Wharf and wear a shirt and tie type thing. Those days have long gone. So purpose-driven, And what's going on in your personal life, I think, is a real reason.
Yeah, no, I think that kind of sense of finding the right work-life balance, I think, I certainly felt it in the early part, right? I was able to be a bit more gung-ho and throw the hours and all the rest of it. As I got later on, I was like, I'm not sure I got this right.
Yeah.
I need to kind of rebalance these two things and find the right space. But obviously working with athletes and trying to place them, right? That must be a really interesting shift for them to move from a world of like, you know, elite sport into potentially corporate life.
Yeah, exactly. Yeah, and it's an interesting one because I've started off mentoring a number of these professional athletes, and it feels like it's reverse mentoring. I'm learning so much from these guys and girls that are at the pinnacle of their career, representing their country in the Olympics, Paralympics, you name it. But what really dawned on me very, very quickly was that the transferable skill set these athletes have is so well aligned to sort of startup life.
Interesting.
Where there's this sort of 4-year vision where maybe you're looking for an exit and you're planning to build it up to this, and that there's different hurdles along the way. You'll get knocked back, but you have to pick yourself up again. All the cliches are there, but they're so true. And what I found is with athletes as well is they're very, very good at what they do, but maybe they're in a bit of a bubble there. They've been protected in just there, and they have to be so blinkered. And just an arm around them to sort of guide them in how successful they are and how transferable that is. Just you can see the shoulders go back, the chest puff up, and just see them jump on. And it's fascinating to see. And like I say, it's inspired me, if I'm honest, as well. So yeah, thoroughly enjoying it.
Sorry, Huey wants to come in on this.
Yeah, no, you were talking about how you were training people, and after a few years they left.
Yeah.
I don't know if there's a good answer to this, because a few years ago I was a founding partner of Supercharger, which became the largest fintech accelerator in Asia, and we had hundreds of startups. And across all of those startups, on average, people would stay 2 years across all of them. And you wouldn't see any startup where you'd have people would say 5 years. Across all of them, for young people joining startups, they would stay 2 years. So I don't know if there's a good answer to this or not, or just that's the nature of people who are keen to try and do new things, basically.
I'll try and have a good answer to it. I'm not sure if it is one, but I think maybe again we could reframe the question slightly and think a bit less about how individual organisations can try their best to retain talent when actually we know that the current state of affairs is that gone are the days of that one long career, and people will move and they want to be challenged, and we have shorter attention spans and different goals. So maybe rather than thinking about it as how can different companies try and retain their own talent, maybe step back and look at it from a sector point of view and think about how can we collaborate more effectively and efficiently and help the talent within the sector thrive. Again, it's something that we do quite a lot of, and we've learned over the past couple of years at the foundation that it's so much more efficient for us to work with sectors at large. So we work with finance, technology, security, lots of different sectors, because each sector will have quite a specific niche set of requirements that they need to build their sector. And I'm very much of the idea that it is the responsibility of that sector and that collectively the businesses and the leaders within it to grow and to invest in their talent for the future. So I think the more sort of collaboratively we can look at this problem, then maybe back to that idea of the battlefield we were talking about earlier, could get significantly bigger, and that pool could be invested in by those across the board rather than each individual company.
I think that's a really good point. You just reminded me actually of an athlete I've been mentoring for a while, and he was saying that when he is comfortable with what he's doing after playing, and he's got a plan, he performs better on the field. So that anxiety shift is gone. That's nothing to do with what's happening with him continuing contract after contract for the club, but it's like you say, it's that wider view, which is more beneficial for the company whilst you may be there for your 2-year period type thing. So I think it's a great idea. It almost should be this coming together of the whole sector, where, and I'm sure you've all had it, where maybe in your experience, James, where you've mentored people for a couple of years and then they've moved on, you've probably worked with them again somewhere down the line, whether they're a client of yours or back in other businesses.
100%, and I think fintech, London, etc. Right? It's quite a small community, right? And you come around, you bump into people like, oh, you must know X and Y. Yeah, we do. So I think there is that kind of aspect to it, and I've always believed as a manager, right? The best result for me as a manager is for someone who works for me to move on into a bigger and better role for them. And that, I think, as long as you approach it with that attitude, I think then it's a much healthier relationship. But ultimately, it should be about helping people rise, not just controlling, what's yours. And I think not everyone has that mindset, but I think it's quite an important place to start from. So on that vein, I'm kind of interested to get your views, because you've got some interesting experiences here. Where do companies really fall down on people management? What's the one thing you see and you go, why do they do that? It doesn't make any sense to me. Because there's plenty, I think, of companies trying really hard on this problem, but sometimes they just don't see the wood for the trees and they fall into some traps. Anyone want to share on that?
I can give one that resonates with sort of experience I've had in the past, where I think people have tried to hire reflective of them as a personality. Who do I get on with? Who can I see myself? Especially startup, where you might be working 10, 12, 15-hour days type of thing for a period of time. So that's possibly good on an angle of you can get on with a person, but it's not good when you start to scale and have this diversity of talent. It can come back and haunt you, essentially. So that's certainly something I've witnessed in the past.
I absolutely couldn't agree more with that. I think we talk a lot about cultural fit, but we could also just call that discrimination in a sense. If you continue to hire upon, how comfortable you feel with that person and unpick why that is. I think it's just that classic phrase that you can't keep doing the same things and expect different results. And I think that's what we see quite a lot in maybe by the mentality of startups and having to maybe look for that safety blanket of the safe pairs of hands at the start, but actually it is that needing to be intentional and strategic at the beginning, and hire in a much more diverse and effective way from day one.
Yeah, and I think the other thing that you mentioned earlier, right, which is stop expecting to find the perfect candidate on paper or through an interview process, and actually stop looking for that required experience, but actually think about the future potential and hire for that instead. So curious to pick up on what you said earlier, how do you go about that? How do you think about searching for potential rather than searching for past experience?
So one of the solutions that we found is getting people to do something. So we're hiring a lot on case studies, typically. Right. So if we're looking for someone, a designer, for example, a copywriter, so we get people to do something. And we test them in pretty much real life situations, whether it's recording a video, creating an online course, writing something, and that's how we have a feel of first the skills of people. So which is important, but which is not everything, because skills is one thing, as you said. Attitude and mindset is really important also. Attitude and mindset is really hard. I haven't really found a way to, and especially being in a large organization, small organization, is really, really different. And of course, you can have people who can tell you what is required, but the reality is that you can't really see it before you do it. So for that, the only way that we found is that we try. We try for a few weeks. We see if it works. If it works, that's great. If it doesn't, then that's fine. The reality is that you can't really know. So attitude, mindset, match with the company. Yeah. I think it's hard to find a way to test for that.
Okay. And do you spot any companies that are being systematic with, to your point around diversity, right? Being very kind of thoughtful about avoiding that, it must look like or be like or cultural fit. Do you see that in your searches?
Yeah, absolutely. Yeah, I can think of a couple of clients this year already that look for a certain type of individual that behave in the same way, and you end up with a cultural issue basically, and a lack of diversity in your workforce, and you end up with clones all thinking and behaving the same way, and then 10 years down the line you have a real issue, right? And then you try and backtrack and rectify that, which is an even bigger problem.
I think it's such an interesting one because the moral case for diversity is just so obvious. We don't even need to talk about it. But the business case is also just so clear as day as well. So, but to your point as well, Neil, about the problems down the line, how can we expect to talk about disruptors and innovation and creativity and new answers to old problems if we're just hiring from those same pools, the same types of people with the same types of skills and the same CVs as we always have?
And I think also, if you look at certain disciplines, and certainly in fintech and payments, if I'm talking from experience, is that commercial sales tends to be quite transactional. So depending on the level of organisation that you're hiring for, it's if it's startup, they don't have time to invest in D&I programs and so forth and look for the future. It's all around, can I get this piece of talent in? Where's the black book? how much money can we earn within the first 3 to 6 months, right? So which is, you know, so that's you need to change that dynamic and get them thinking for the long term as well. So I think it's a balancing act between both, and that's what we're kind of trying to influence now with our programs.
Very good, very good. So, conscious, we've just got a few minutes left. So, coming up to some closing thoughts maybe from each of you. Given what we've spoken about, or perhaps what we've not spoken about, that you feel that we should have covered in the short time we've had together. What one idea would you like to leave the audience with? So, Neil, if you wouldn't mind kicking us off.
Well, just to wrap it up, I would say to invest in skills and education. And to ensure a dynamic workforce in that regard.
And throughout the career, not just from the start, but actually keeping people sharp throughout.
Yeah, absolutely.
Yeah. Very good, thank you.
Yeah, I suppose maybe just to pick up on something you said, Neil, I think everybody has time to think about diversity. It's just a priority thing. So I think what I would do is just really encourage a bit of self-inventory. Look at the company. Challenge yourself. Is it diverse? Why is it not? What can we do differently? And we talk a lot about culture, the culture of an organization, but culture comes from day-to-day processes. So what can you change at a micro and macro level? And I think for me, it's just about taking that long-term view, which might be difficult to do in such a rapidly evolving sector. But I think the investment at a very young age in talent that will future-proof your organization should be a priority. On the moral and business cases. So for me, it's more of a call to action, to look within, and if you don't have the answers yourselves, there's fantastic partners to work with, because it's no longer acceptable that we don't see companies that are really representative of the society that they evolve in. Really.
Yeah, you make a great point there actually, which we hadn't talked about, which is not just doing the grassroots, but doing the top down as well, right? You need to work the problem across the organisation, right? Because you just try and feed better and more diverse people in the bottom, but the structure is such that it kind of suppresses that, and you don't really win that way. So yeah, great point. Thank you. On to you, sir.
I'm biased, so I would say hire an athlete. But I think for me, like I say, it's really opened up my eyes, and it comes onto the diversity and inclusion piece as well, because they're coming at it from such a different angle. And then from every walk of life, really, it's a really diverse group across the different sports as well. Yeah. So obviously being biased, but certainly, that's what I'd be looking at now.
Shameless plug.
Yeah, so got it in there. Just put the last opportunity. Sorry.
I think for me, I guess, don't underestimate the skills gap. It's happening very, very quickly everywhere, and we are at risk, as a society, to have a few people who have all the skills and a lot of people who don't. It's happening very, very quickly. We've seen it over the last year. So if you're an organization, and if you're serious about talent, if you're really serious about talent, then look at how much you're spending on technology versus your talent. I think that's a very, very easy thing to do. But especially if you're a person, if you're an individual, don't be complacent. I think that would be my message. Don't be complacent. There are huge opportunities out there, but you can't just stay with acquired skills that you got from university 10 years before, because the world has changed.
Yeah, it's a great point. And I'm certainly going to take away your point about the imbalance between how much big companies are spending on technology, but not necessarily on the people that are there to actually govern its use or design it or make sure it runs correctly, etc. And that mismatch is really a huge mistake now I think about it. So fantastic. Thank you all for a really enjoyable discussion. It's been a pleasure talking with you all. And to the audience, thanks so much for being with us today. It's been a great discussion, and we hope you enjoy the rest of the conference with FinTech Week London. Speak to you soon.
Next up, Erlang Solutions and ManaSearch present What's Next for Blockchain in Financial Services, a panel moderated by Mimi Nguyen, R&D lead at ManaSearch. Mimi, the floor is yours.
Nice, good here. And you. Give my love to good lady as well. Okay, fine. Yeah. Sort of linking up. Oh. Hey! It's reversed, isn't it?
and thank you for joining us today at our very special live event, What's Next for Blockchain in Financial Services. I'm Mimi Nguyen from Mana Search, co-host of the Fintech Times Searching for Mana podcast and a PhD candidate at Imperial College London Faculty of Engineering. We're pleased to host this star-studded panel session as a part of the Fintech Week 2021, broadcasted live from Barclays Rise and supported by Erlang Solutions, experts in building scalable, highly resilient systems. In this event that I will be moderating, we will look into the innovation in the real-life use cases of the underlying blockchain technology outside cryptocurrencies, which will be covered in other session of this conference. So sorry for disappointing some people, but we will be not speaking about Dogecoins and Jack Dorsey tweets or any memes today. We have with us Chris Skinner, Dzień dobry, recognized thought leader and the author of The Financer. Markus Richter, member of the boards of directors at Clearbank, previously Ripple. Simon Taylor, co-founder and blockchain practice lead at 11FS. And last but not least, Hayden Jones, PwC director and senior blockchain market specialist. It's a pleasure to have you all with us today. Quick recap of the history. Blockchain 1.0 was related to virtual currencies, broadly speaking blockchain 2.0, with smart contracts, smart property, decentralized application, dApps, DAOs, DAGs. And in the book Blockchain Blueprint for a New Economy, Blockchain 3.0 is described as the application of blockchain in areas other than cryptocurrencies, such as government, science, arts, and culture. Blockchain 3.0 aims to popularize the technology and focuses on the regulation and the governance of its decentralization in society. So to kick off the dialogue of today's session, I have a first question for Simon. Could you tell us if today's version of blockchain is mature enough and ready to be applied off the shelf to our use cases, and especially in fintech?
I love the word off the shelf. Because off the shelf for who and to achieve what?
For the banking system and for the fintech.
For the banking system or the fintech? Because for the fintech company, if I wanted to acquire customers, then maybe adding Bitcoin or crypto trading is really good marketing. So Revolut, Square, Robinhood already offer those services today, and that's really powerful and live and in production. So we could argue that yes, it's ready and it's off the shelf. But if you wanted to achieve something different, we see that there's a neobank in the US called Current. They have about 2.5 million customers. They would be sort of really well liked by their users, but they're seen primarily as a neobank, not a crypto wallet, not a trading app like Robinhood, and they offer 4% savings yield. And the reason they're able to do that is because they're using DeFi behind the scenes. They're using the money markets that exist behind the scenes in crypto to be able to deliver that. So again, that's live, it's in production, it's available to 2.5 million customers of that service. So yes, there's that. And then there's a whole other world where the guys at IBM, the guys at EY, the guys at PwC, and many, many others have been involved in projects where you are managing global supply chain finance and much, much more. So I think the short answer is yes, there are things ready to go into production without question. But what I would ask is, who are you and what do you want to achieve? Because there are some things that you have to choose different technologies for. So for example, if I was trying to solve for building a scalable exchange, or if I was trying to rebuild Visa, would I necessarily use Bitcoin or Ethereum or even something of those lines? Maybe not. But would I use a Solana? Would I use a Polygon or a Matic or even Corda or something from IBM? Yes, I might. So actually, you really have to go down a level and say, is it ready? What is it? It is actually many things. So who are you and what do you want to achieve? Therefore, you might be able to choose the right solution for your use case.
Thank you. So I wanted to ask about the operational efficiency. So not the marketing kind of Revolut campaigns. So a survey from Accenture across the world's largest 8 banks is demonstrating that blockchain technology can cut costs and bring savings of more than 30% across the middle and back office, bringing the initial savings of $8 billion. I wanted to ask Markus on this, how and where can the savings be achieved?
I think it's important to look at the big picture for blockchain, and the genie is out of the bottle. Blockchain's in the market and is being applied to today's world. That's having a fairly big impact. And my view is there'll be a moderate to large impact applying blockchain technology that's out and available off shelf to improve some of the processing that financial companies have today. But the big value is looking ahead to the point in time where the technology becomes mature enough to rethink and redefine how money is owned, moved, and utilized. And that will be seismic. And in that future, which is not too far ahead, you'll be looking at what it means to be a bank, an insurance company, an accountancy firm, a consultancy, a government department. That will change, and that's really where the impact of blockchain will come into the forefront.
You mentioned money moving. I wanted to ask about the cross-border payments. How can we move it to become real-time, soft real-time? Maybe Hayden, how will this affect the banking sector?
Well, I think one of the most important parts to this is governance. Okay, we need a far more effective way of actually governing blockchain, and that flows from the regulator. Okay. Yeah. For me, the thing that's always sort of stood out is the ability to combine. I think Markus has touched on this. The ability to combine payments, ledgers, store of value, and the conditional nature of money. Yeah. Okay. Now, if we look at those four separate concepts, each of them have got distinct regulatory frameworks associated with them. So you've got the Payment Service Regulator, you've got the Solicitors Regulation Authority, you've got the central banks, you've got the Prudential Regulation Authority. They all have separate regulatory frameworks, right? Yeah. Now, if we take something as clever as blockchain, we're actually bringing those four things together, okay? And that's a very potent mix because you've got four very, very important concepts that have been around for hundreds, in some cases thousands of years, right? What you basically end up doing is creating some kind of super regulator, okay? Now, a regulator for any one of those is tough. A super regulator that understands that sort of four-dimensional nature of what you're dealing with there is tough. It's a big ask. But if we really want to sort of crack this, it's absolutely essential that we move forward. And if you look at the invention of radio telecommunications, the way they regulate radio telecommunications is through the International Telecommunications Union, right? Because they realised how potent the technology was, and it took that sort of global force, that global vision, to allow us to bring the different nations together to actually come up with a concept that allows us to control the risks associated with this technology.
That leads me to when you said regulations to the smart contracts. So, for example, we're speaking about the executable code that can automate various processes, and it also relates back to the savings that we talked before, the back office operational efficiency. And it actually reminds me of the book from Daniel Susskind. He's a professor of economy from Oxford University, World Without Work, where through the lens of analyzing AI and ML, of course, he's talking that we are all heading to a world where human work will become obsolete. And Chris, I remember you also mentioned one of the previous articles, a different study from Oxford University, estimating 47% of our jobs are at high risk of extinction. So, similarly to all this discussion about AI, one of the blockchain's core premises is to cut middlemen. And Chris, I wanted to ask you, how will this affect us, the white-collar workers?
I kind of think there's three dimensions to answer the question. One is that it's obvious that if software eats the world, we can automate everything, we can get rid of human jobs, everything will work smoothly. However, the second dimension is that's not reality. I mean, that's not how the world works, because you end up with a lot of people who have different interests and different partisan views that want to have a finger in the pie. And so the reason why blockchain has so far been completely useless is because no one can agree how to apply it. You know, there's lots of areas where it could be applied, and it would have amazing benefits like in clearing and settlement or digital identity. But no one can agree how that should be structured and how it will work. And because of that, particularly across borders, it's still very immature. Eventually, it will become mature, and it probably will fulfill some of the dreams that we have for what it can do. But I think the third thing really comes down to what are we creating as the next version of the world? And I don't think anybody has actually understood that right yet. And for me, it hit home, I was saying before we came on stage, as I was driving to see my mum, and that next to the motorway is warehouse after warehouse after warehouse. And yet if I go down the high street, there's closed shop after closed shop after closed shop. So we are substituting an old reality with a new reality, and blockchain and digital identity and all the things that distributed ledger technology can do is part of that. But none of us yet know what that means, how it will work, how it will succeed, what the right models are, who's going to be the key players. And if we did know that, then we'd be very rich people.
Yes, when you mentioned about like we don't know how to govern this, I also wanted to go back to Hayden, to you when you mentioned the regulations, and I actually have a quote from you from the interview with the Fintech Times, and you say the sooner we regulate the better. So can you elaborate the urgency?
Well, I mean, the ironic thing about that quote, and I did check it up, was that it was written. It was 3 years ago actually. So it's July 2018, and you know that was an interview. Fintech Times. The sooner we regulate, the better. I think it's probably fair to say the different governments of the world have had quite a few different things on their agenda over the last 3 years, unfortunately, because obviously there's the other B word that the United Kingdom's had to navigate, which is obviously Brexit, which has consumed a lot of interest. And
I think you meant Boris.
Well, I couldn't comment. But then you've had the P word. We've had a pandemic over the last 18 months as well. And you know, looking at, I would argue the UK is actually very much ahead of the curve. You know, we've got the stablecoin consultation that came out earlier this year, which I think is a useful step forward. I think the Europeans have gone after MiCA, which is a kind of a big, chunky piece of legislation which is sort of working its way through. So I think for us to have carved out stablecoins and gone after that, I think is pretty progressive. But it takes so long. You know, it's a 12 to 18 month process of consultation, and then it's another 12 to 18 month process to actually lay the legislation before Parliament, and then it's another sort of 12 to 18 months for the regulators to actually get up the curve. And then you've got this further challenge. Good blockchain crypto people are tough to get hold of. Good regulators are tough to get hold of. Trying to get good regulators who understand crypto and blockchain, it's a big ask. So it could be, it could be 5 years before we really start to see sort of light at the end of the tunnel in terms of what we can do.
So let's all do a CBDC.
Yeah. Well, that's where this heads to, because I think if there is a trigger that will, and I think there's further discussions we can have around trust specifically, but a CBDC is the kind of big signal that can be sent by the central banks to the C-suite. Well, what is this central bank digital currency thing? Well, that's quite interesting. You know, and we talk about off-the-shelf capability. Well, you know, a central bank digital currency is a referenceable rail that we can point lots of very interesting things to.
May I be contrarian?
Of course.
So I don't think the C-suite matters. I think the consumer matters. I think bottom-up adoption matters. Yeah. And the fact is, you can't criminalize half of society. And people want better, faster, cheaper financial economy. And if stablecoins offer that, they will adopt them. So the question then becomes, do you want to become, as a central bank, a technology company competing with technology companies? Do you want to be Apple and Facebook like when you're trying to develop that? Or should you, and it was actually the Bank of England research paper that said this, should you focus more on a framework approach in which entrepreneurs, the economy itself, can look to develop things that look like e-money, things that look like things we might even recognize in the economy today, so that our entrepreneurs and builders and the next generation can, within good guardrails, build better, faster, cheaper payments that are fairer and more transparent. Because if you've not actually used a stable coin, they seem very, very scary. But when you go ahead and use, okay, Tether is one thing, but USDC and some of the other stable coins out there that do have a regulatory wrapper around them, I mean, this thing costs almost nothing to send, and it gets there instantly and anywhere in the world.
Well, you've not mentioned the D word, though, have you?
DM from Facebook. Yeah. And I think, look, that's a very real fear for people, but actually that's also a distraction. Because the point here really is about solving society and consumers' problems. And we lose track of that sometimes. We focus on the C-suite and we focus on the trust word. But the word trust really, really is very, very different in the digital age. What does an 18 to a 25-year-old trust versus what does a 55 to 65-year-old trust are two fundamentally different things. And when we're building for the future, we have to consider that trust, the meaning of the word trust has changed for different generations.
So this is the Richard from Reading problem, the Brenda from Brighton problem. You know, what's the relevance of it in the context of what they do on a day-to-day basis, and what's the story that goes with that?
I think that's so crucial. And the reality is, for me anyway, that adoption always comes from the edges. So person on the street that has a day job that is more manual may not be the first adopter of this technology, and it may not seem obvious to them. But then what's the relevance of cloud to Brenda and Brighton? Well, actually, you end up using it all around you. You don't care how it works, it just does. I don't care that Netflix happens to use the cloud. It's just, I get my movies and they're instant. And 20 years ago, video on the internet seemed like a crazy idea. What does it matter to Brenda and Brighton? 20 years forward, it's everywhere, and it just happens to be the technology behind the scenes. We will head in a similar way.
Yeah, I think the idea of ubiquity is really critical. So most people, as you say, don't really care about the gadgets inside the box. They care about something being usable. So Netflix bundles up a whole bunch of really cool, creative ideas, but what counts is what you can watch and if it's fun, and if it's better than getting a DVD from the local shop. So I think blockchain, in my view, will evolve in a similar way. There won't be a blockchain thing that people care about in the future. There'll be really cool things that are created that people will render or whoever will relate to, that will contain elements of blockchain. It's just getting that that one first killer play out. That's how the internals of blockchain will become much more mainstream.
So the use cases. I remember, for example, the smartphones was difficult to convince my mom to use a smartphone, but when I said, you can call your sister for free in Vietnam, then she said,
off it goes, yeah.
And if you recall, to your point, Mimi, when the smartphone came out, there was a lot of executives in the boardroom saying, oh, well, that's just for games. The BlackBerry is the serious thing. So, and that's happening with crypto now. And I know this is the not crypto conversation, but actually, if you look at the technology underneath, if you talk about the various blockchain flavors that are out there, there are some that get lumped in that I think are actually usable technologies that are perfectly powerful, that would allow your customers to move money internationally, that would allow your customers, your operating costs to come down. But rather than starting at what do I do today and how do I do it cheaper, it's what does the customer of tomorrow really want? And to that point, the amount of people, have you ever seen the movie Ready Player One? I don't know if you've seen it, audience. So if you've not seen it, it's the VR world that we all live in the future. The metaverse is often the term that's used. There are now people that make millions of dollars a year just making characters land for video games. This is a new job that now exists. Now, that is all happening in sort of walled gardens at the moment. That could increasingly start to happen in an open, decentralized way, and that's where things start to get interesting. And if it sounds crazy to you today, maybe give it 10 years.
I think what's interesting, so I look at I spend a lot of my time selling blockchain crypto projects. Right. What's so interesting, and one of the things we have as a firm, I think the industry is getting there, is we work hard to almost stop selling blockchain as a concept and selling the clever things that we can do with blockchain. So it's a bit like me turning up and selling electromagnetic waves to you, and you're going, "What the hell are you talking about?" You know, and it's like, well, actually, we can use electromagnetic waves for radio. It's actually quite clever, you see. So we, as much as possible, we're trying to move the debate on from selling blockchain, selling 5 interesting things that you can do with blockchain. So we can do identity and provenance, credentials, contracts, value, all these clever things. What is then interesting is the thing that pulls the sell through is the fact you say it's going to save you X, or you've got that burning platform problem over there. And then typically the debate sort of moves on. There's less interest about what the technology is. It's more about the fact, actually, that solves my very immediate problem very quickly.
It's a really good point. So I read a book recently about Samuel Pepys, and he's 16th, 17th century diarist. And the section at the beginning is about his early life, how he puts up with horrendous conditions, there's soot everywhere, the horrendous death rates, and it's kind of life around him. It's what life is like, and people get on with it. And there's a moral there that often you don't realise that things are difficult, awkward, painful, frictionful, until you be shown another way of doing things.
Schlep blindness.
Yeah, and in a much more mundane world, I think the financial world today has that problem. We put up this stuff which is really painful because it's kind of how things are. So to your point, once you show, crikey, an item of value can be yours, can be completely accessible, and can be used in minutiae to pay for something anywhere on the planet, 24/7, wow. And that's possible, but people are kind of conditioned to put up with not having that because life is difficult, registered services.
That 24/7 thing blows people's mind when they really understand. Wait, so I'm spending all of this time and energy reconciling my GL with everybody else's GL, and I'm getting errors and breaks, and I'm struggling with the consistency. I'm sending money to another office of, so pick a big name bank here. They operate in 70 different countries. They're trying to move money from country 1 to country number 2. They use the same network they would as if they were sending it to another bank. They use SWIFT, which made sense in the 70s and 80s and so on, but it doesn't make any sense today. Why is it not as simple as sending an email? Why is that not happening? Why is it not 24/7? Because we've become schlep blind. We've become blind to the pain in our own system, and I think that's a really important point.
So here's a question, and I know that Mimi's got many more questions, but I'm worried about Bertha and Brian because Dave from Dartmoor's on his way over. But the big question for me is this one, and maybe you guys have the answer because I don't have the answer, which is we've talked and seen so many headlines about ICOs, NFTs, the whole idea of a distributed ledger technology can provide provenance. 100 years from now?
Will it still be?
How will you read the provenance of something from 100 years ago when that technology is completely defunct?
Right. I mean, the assumption has to be that it continues to exist, surely.
How and in what form?
Good question. Don't know the answer to that. But the paper from art and those forms of provenance continue to exist. You know, it's a difficult question to answer.
I think you're okay. Yeah, I think you're good because without getting too off topic, what counts as information? And once you have information, then often it stays and is built on, whether it's books into media or digitization. You know, some of the algorithms running the tech around this room.
So we just keep enriching it. We keep adding.
I think so. I think when a model is accepted and becomes mainstream,
so what's the model?
If it works. Are you talking in terms of cross-border or?
Right now.
That's a good point.
What's
I
the
think
model?
The financial world today?
Yeah.
That's a model I think we'll move away from, but the components of that will find a role in
so you
a
don't
new
think
structure.
We'll have the financial world of today? We'll have a new digital
I think,
system?
I think we'll take what works today and we'll redefine it. And I really think that the issues today are 90% about how money, you know, to Hayden's point, has been managed and used around the world for a very long time, and 10% the value created or discovered by managing value in that way. That will be taken forward. What I mean by that is today the world works in islands of money, okay, tied up in ledgers that there's no trust. The central banks controlling participants in market, policing because they can't see clearly what's happening with the transaction flow. That is all replaceable by internet models of money for cross-border, a rethink of how you define what it means to have value, and opening up the ledgers of the system so that you haven't got the opaqueness that you have today. Put together, what works you'll take with you, what doesn't work,
what just made me think?
I wanted to ask about something related when you said about the centralized systems and the framework, and the question actually to Simon about the private blockchains.
Yeah.
Is the banking system limited to private blockchains? If not, how can banks use public blockchains?
Yeah, there's one word answer to that is no. And you can see this in Santander, Goldman, and the European Central Bank experiment in publishing a real life bond on the public permissionless Ethereum blockchain. So I do think that there are more risks in the public world, but it's if you remember in the early days of the internet, there was a UK bank who I have on very good authority responded to the internet by saying, well, this isn't secure enough, this is not fast enough, we should build our own internet, which is a laughable concept as we sit and hear about it today. But actually, companies have corporate intranets. Corporate intranets are a perfectly fine thing. And actually, private networks are a perfectly fine thing, and you need good technologies to do those. Actually, there are times in which actors really, really value that. So that is not to poo-poo the private blockchain space at all. I think they're an essential part of the ecosystem. But to me, it's not an or. It's not one of these things exists in the future. I think both of them do. And how they coexist is probably the most interesting question. So to Marcus's point, the way I think about what crypto does and what blockchains do is they eventually get you to a point in which I no longer need to duplicate everything so many times because the software is handling that for me. It is creating a point of consensus and consistency about a set of facts that we agree to. So if you look at how a bank is organized, how most financial services companies are organized, at the very bottom usually is the accounting. This is the books and records. This is the thing that gets reported to the regulator. This thing cannot go wrong. It is mission critical software. It is anathema to think, wow, I would rely on something public and open source to manage that for me. But 10 years ago, it was crazy to think that banks would ever use cloud and not operate their own data centers. Actually, when you think about the reduction in operating costs and the ability that a specialist brings to something, specialists like Amazon and GCP are very good at running data centers. They can probably run them cheaper than you can. But really the argument for cloud is not about cost reduction. It's about my ability to innovate and keep up with the pace of digital. I suspect we'll see the same with blockchains. Yes, on the face of it, it will initially be sold as a cost reduction piece, but the reality is, look how much faster you can go, look how much more innovative you can be for your customers once you start to move into that platform. Because if you are trying to drag along these aging technologies, you end up spending a lot more money just to stand still, and every day your competitors get faster and cheaper and faster and cheaper, and the shadow banking sector grows and grows and grows whilst your margins are compressed, versus this other world that's emerging.
I'm going to say something slightly controversial, okay? Forgive me. But unfortunately, and again, so somebody who's worked in sales, and I've worked in IT sales, one of the big issues that we face here is that salespeople sell things, okay? And unfortunately, they're incentivized to sell things, and they're incentivized on a quarterly basis, and they sell large bits of IT infrastructure, whether it's the general ledger, or it's a payments platform, or it's some kind of other piece of technology, and they love doing that, and they get rewarded for it. And unfortunately, the shareholders love getting rewarded for that as well, you see.
Right.
And unfortunately, because you think about how a company works, you start with legal entities, okay? And they then face off to Brenda and Richard in Reading, you see. And each legal entity has got to have a general ledger, it's got to have a payments infrastructure associated with it, it's got to have some banking infrastructure. And unfortunately, and Chris's point, what's the model? Okay. I mean, the interesting thing is we can take that bottle there. We can look all the way back through its provenance, chain of provenance, to see where the sand came from, where the water came from. The problem is that you've got all of those duplicated systems that sit all the way back through the history of that bottle. And all of those duplicated systems arise because people like selling things. Right? It's only when we sort of, it's almost as if, let's think about the person and the things on a sort of a provenance type basis, right. And you build a highly efficient informational footprint around assets. So you end up storing data once and once only, and when you look back, you can see where it's come from. And when you recycle it, you can see where it goes to.
I also think there's a really interesting thing that's happening right now, and the reason why public permissionless doesn't work for banking and finance is because you need to have some form of governance oversight that can look across the system. And I find it really interesting, and again, Simon, Marcus, maybe you can comment here, but proof of stake versus proof of work. So proof of work is Bitcoin, proof of stake is what now Ethereum's kind of rebooting to become. Yep. And proof of stake is not permissionless or public. It fits far more into the smart contracts financial world than proof of work, which is just completely decentralized, distributed and open. And that's where going back to what I was saying about 100 years from now, what's going to be the model? I think proof of stake is the model.
Yeah, well, if you look at how DNS works in the internet, domain name servers, there are several very large domain name servers, which ICANN and W3C have formed a set of standards around, which became acceptable to most of the world. And you kind of don't know that exists. It's just there and it works. Yeah. And it will get very boring at some point that stuff kind of exists. And let's hope that happens. Let's hope it does get boring. And the whole thing around permissionless, I think, was probably an unhelpful term because it was scary. Yeah. But it's also, if you turn that on its head, it's what creates innovation. If it is permissionless to pick up a set of tools, the ultimate permissionless technology is Lego. Like, I can just start building whatever I want as a child because nobody's there to tell me what to do otherwise. But actually, baked into Lego are a set of rules about how the world works. Yep. And the same is true with a lot of these networks. So I think we'll find our way to those. And the governance model that we applied to the existing financial system, I don't think we can copy paste to the new one. And I don't think we can take all of our assumptions forward into it. For example, one of our favorite things to do is to assume that the only way to prevent financial crime is by taking some paper documents off a legal person. However, is that the most effective way to prevent financial crime? I actually don't think it is. Having a perfect, complete record of every transaction in the network and then having nodes in that network that can identify who those people are might be much more effective. And indeed, this is why you see so many people shutting down ransomware rings and darknet markets. There was a very senior law enforcement official who once said to me, we actually quite like Bitcoin because it's a really simple way to catch the criminals. That does not happen in the existing financial system. So we almost have to flip the conversation from permissionless scary to actually what is this new world and what are the new governance structures, which nerds like us will get excited about, but most people will probably find boring.
So is it proof of stake or proof of work?
I mean, this is not investment advice, but my gut is with proof of stake, but also that actually let many flowers bloom. It's not just those two. There's also Solana and Polygon and Layer 2 and everything.
You've been quiet, Marcus. Proof of stake or proof of work?
I've just been thinking it through. I think proof of stake, and let me just say a few things about this. Just reflecting on governance. Governance might be trying to solve the wrong thing, and it's about being able to make the move to the world that a new technology opens up for you. Yes. And in the blockchain world, the need for governance is redefined or reduced. For example, in the biological world, there is no rule book for a human being. And yet we all come out fully formed, we tick, we can program through, we kind of work. There's no committee that sits and checks and ticks everything about human beings. So in a similar mindset, if the data and the information is self-controlling, If a transaction contains the rule book through which it will exist until it terminates, then you're able to govern all that in a very different way. And to the point earlier, that's where you have the big departure from just kind of improving things to really creating something wonderful. My view, I think stake is the way it's going to go. I think what is important, though, is that proof is used.
Yes.
Thank you. I wanted to, in the meantime, thank our co-organizers and sponsors, Airline Solutions, which is a global tech consultancy working at the cutting edge of blockchain technology, deliver impactful solutions, private platform distributed applications, smart contracts, and more. And with this optimistic kind of thinking about the future vision, I wanted to ask you who will do this thing. So as a person who is involved in two universities, Central St. Martin's and Imperial College London, I haven't seen a major in blockchain. There are courses, online short courses, I think in Oxford on blockchain. There are courses in Java, Python, SQL, SAS. There is no solidity. So how is the educational system and the governmental support supporting our future talent for this revolution? Like, who is going to build this? Maybe we'll start with Chris.
Well, I mean, where we're developing is kids are growing up born on the internet. Today's generation are being born on the blockchain. And one of the key things about that is that we kind of look at technology of people of my age as being challenging, for example, because we don't understand or know how to code. I'm an exception to the rule. If you have kids who've grown up and they just love to code and they love to develop. So we're going to find, and this is going to what your opening point, Mimi, about AI and jobs. You know, I think we're going to end up in 50 years, we're going to have a flourishing economy of people who are thriving in developing code and technology and networking and connecting in new ways and new forms, so that we haven't even got an idea today what those forms will be. And it's a little bit like, contextually, something that I talk about quite a lot, which is 100 years ago, the idea of catching an airplane from England to Australia and getting there in less than a day would have been ridiculous. And yet that's what we can do today. 100 years from now, the idea of getting an airplane from England to Mars sounds ridiculous. But that's what we'll be doing in 100 years. And that's exactly what education, government, code, kids will be doing. So, and blockchain is an integral part of all of this, along with quantum computing, AI, and the other pieces. But I don't think we have any idea what will be developed in the next 50 years.
Yeah, I agree. It used to take me 3 days to fly to Vietnam to see my grandmother, and now we can also do it in 1 day. Thank you all for such an insightful discussion, and especially for bringing on a larger view to what we're going through right now and what needs to be done, what will happen in the future. Thank you all to all our panelists for being here with us today. Thank you to the online audience. Have a lovely afternoon and enjoy the rest of the Fintech Week London.
Thank you.
And now it's time for a well-deserved break. Don't forget to check your Brella schedule to see if you have any networking meetings scheduled, and use the intelligent matchmaking to find people to talk with. Because after all, an event like this is all about networking.
letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. Letters are how the world advances more every day. How money moves across the globe in a snap. How global banks transform in a digital world. And how trades are processed at hyperspeeds. So how did we get to a world where the future is now a part of your everyday? 3 letters. That's how. FIS. matters are how the world advances more every day. How money moves across the globe in a snap,